What's up, guys? Good morning. Good morning. Good morning. I was a little late. My foot was cramping up last night. I think I was up about 5, 6 times, all the way up until 4, 5, 6 o'clock this morning. I had to get some water in me. I was a bit dehydrated, so just got to drink some water and whatnot. Hope you guys are doing well. Good morning. Good morning. Good morning. Okay. Hot. I was getting ready to say hot cakes. My hotkeys. All right, hotkeys are not working for starting the stream, and flipping over to the stream, but the stream ending are working. I don't understand what's going on. Let's get right into it. We don't have much time. Okay. Jobless claims. All right, jobless claims. They were horrible. Continuing jobless claims that got a little bit better. Why do I say that? 187,000. Once again, not only do we dip below that 200,000, but we go to 180, not 197, not 195. The Fed is not going to lower rates if this labor market continues to be this tight. That's a fact. This is less. All right, but we are getting signs, guys. We are getting signs that, for instance, Google, all right, talking about having to do more layoffs, about 12,000 jobs. That's what they're cutting. Can you imagine that? Your local company, they got maybe 300, maybe 400 companies. They're getting ready to just lay off 12,000. It's insane. It's insane. Think about that payroll. Think about 200,000 payroll at four, and the majority of them are making 400, 500 grand a year. Think about it. All right, let's start it off with a like, subscribe, post your questions, communicate, participate, all that fun stuff in chat. Come on, guys. You guys got to talk to me. Chat. What's up? Good morning. How you doing? You want to know how I'm doing? You're going to have to ask it in the chat. Let's go right into the stuff. Let's go right into the good stuff. The meat and potatoes of why we're here. All right. TSM reported earnings. Are they going to have... Are you serious? Stock's making the moves. The stock's making the biggest moves pre-market, and Taiwan Semiconductors is not there, unless it's me. All right, we're going to talk about Discover Financial. All right, Discover Financial dropped more than 7% after mixed fourth quarter results. Discover topped revenue expectations but posted declining earnings from a year ago as it took a large provision loan. See, they say this provision for potential loan losses, but I can't help but to say loan loss provision every time I hear it. So, you know what else could start to hurt them, guys, is the laws that they started to put in about come on. My basic advice is stick to your knitting, do your business, and if you're trying to get pulled into these woke wars and you comment on this thing and choose you don't want to comment on sorry, guys, I had to send an email real quick. All right, let's do this. Upgrades: Apple, Microsoft, Pinterest, AMD. Downgrades: Schwab, Spirit, Shopify, Adobe. All right. Okay. Where is TSM's earnings at? Let's see here. Let me go get it. I have everything else over here. Leaning out. Nothing. Come on. I just want to see their earnings real quick. You know what? We can just go right to... I don't know what I'm doing because I could just go right to this here. All right, let's go into it. TSM, guys, in the S&P. Let's go to the SPY first. All right, well, we'll hit a 30-minute. Why not? All right. All right, there's our rejection. That's exactly where I wanted to see this market pull back at. It doesn't mean that that's where it's going to reject, but got to look for yesterday's high. Yesterday's pre-market resistance. I'll show you right here. Let me go down to a 15-minute chart. Keep it simple. All right, this is the area I'm looking for right here to see if we can hold 472. Really, I'm sorry, 473. All right, 473. So yesterday, I would have liked to have seen that level right there as well hold at 474.48. That would have been a nice level to hold at as well because this is your base. Look at that. Right there. If that level could have held, that would have been nice. But I don't think it will because rate hike odds have to extend out. All right, I'm not sure how many people are talking about this, but you do not want to see jobless claims continue. And listen, it's okay for them to soften at this time of year, like we talked about last week and the week prior. Being that it's Christmas time, okay, being that it's the first of the year, because it's going to. Let's see here. Nobody. I don't think anybody's even here, but for first of the year, it's okay for the labor market to continue to soften a bit because of Christmas, New Year's, all that fun stuff. You guys are seeing a little bit of what it takes, and it takes a lot. It takes a lot of work, and you got, dude. Here I am talking without the mic on. I'm so sorry. So I was saying that the labor market, 180 some thousand initial jobless claims, higher for longer. The Fed is not going to cut rates if that number's going down. They need it to go up. So you're seeing rate hike odds start to bounce, right? This is why this level here did not hold, which would have been really nice. I'm sorry, right here. That would have been a really nice level to find a base, okay, and try to extend the previous highs. Not sure if we get that today, because now what we're doing is we're turning these pivot lows from Tuesday. We're going to start turning that into resistance. We'll see, though. Can we gain some ground? I don't think we can. All right, the two parts to this is, okay, we got it. It's that time of year where we need to, it's okay for it to be hot because of New Year's and Christmas. All right, I already said that. But how hot? Right? What does this gotta start softening? But the question is, can the market bounce off of that? Can the market bounce off of Taiwan Semiconductor earnings? You got your first look into semis. All right, let's see how they did. I know I said that this was going to go down. Look at that move. Look at that move. Wow. Let's see here. Did they not report yet, guys? Okay, they did. I was gonna say, so it was in the middle of the night. And then falling net profit, but edges past forecast. So Taiwan expects Q1 revenue 18 billion versus 18.26 estimate. Gross margin. Now this is for Q1. All right. Come on. I'm just going to have to go somewhere else. So Q4 1.44 beats an estimate of 137. So that's earnings. $1.44 versus $1.37. That's pretty good. Sales 19.62 billion versus an estimate of 19.45 billion. So also doing pretty damn well. Well, did they raise guidance? That's another big question, and they did. All right, they did. They approved also a cash dividend of $3.50 a share. That's why this thing is moving. I'm looking at the earnings, and I'm like, it's good, but, you know, I don't think that it's, like, overwhelmingly, like, 20-point higher or 20% higher move, or, you know, 20% higher, good. All right, so that's that. We don't need to dwell on it. So they're raising the dividend. This is why you're seeing institutional flow, guys. Sorry, that's why you're seeing institutional flow with TSM is because of that dividend. I guarantee you it is. All your dividend buyers, you got new buyers there from them. You're going to have institutes going back after it to keep track of it, because when you get a nice shift like that, money managers need to put it in their portfolio or add to it at the time. It's not that they need to add to it at the time, but they do. Just like when you see like a company that gets brought into the S&P 500. Why do they do that? Because they're competing with the 500. They want to own it. All right. So they buy the stock, right? They buy the stock. So I want to see that one more time. Earnings decline, revenue flat, issues, Q1 revenue outlook. So I think that's it, guys. Like I said, this wasn't too crazy, right? $1.44 versus $1.37. Great. That's not crazy, right? Now, if it was like 240, 215, that would be like an extreme beat. 19.6 versus 19.4. Again, it's not like they just wildly beat these earnings, but it was the board approving a Q3 fiscal year 2023 cash dividend of $3.50 a share versus $3 Q2 flies $2.75. I mean, unless I'm going crazy, directors approved. Yeah, cash dividend. My watch is hitting me in my eye. Set for March 18th, ex-dividend date, March 20th. Okay, so I see what they're doing here. All right. Good, great, grand, wonderful. Let's get into it. Trades. Tesla. Tesla's the first one we're going to look at. All right. I think everybody's looking at Tesla today, it feels like. Feels like everybody's looking at Tesla. I need to hurry up. I got a lot of other stuff that I still haven't done yet, guys. Just give me 1 second that I need to do. All right, it won't take long. I do apologize. Again, I was a bit dehydrated. My toe was cramping up. My foot was cramping up. I wonder how many people are going to be buying this transitional year for PayPal of 2024. Right? He was on CNBC yesterday. All right, 15-minute chart. All right, what should we do? We should look at the bigger picture and browse in. But I want to show you this. We have a really nice double bottom here. Okay? Nice relative strength to the upside. All right, now we're holding this level 217.60. All right, which was, I guess, Friday's. Friday's low. That's for. You gotta be kidding me. You gotta be kidding me. Okay, I was gonna say. I'm looking for a bounce to see if we can get up to 225. I want to see if we can get up to 225. All right. So I'm going to just watch pre-market, see what we do. All right. Because if we end up getting above, now look, you have this level right here too, which is like, all right, this 219. It's nothing. It's not a major level, but it's definitely a level that you want to pay attention to. I'm going to be watching to see if we can get above this pivot high here from pre-market, guys. That's what I'm going to watch for. And if we do, all right, if we do, Tesla doesn't have much room. It does, but it doesn't. Okay? It does, but it doesn't. So I want to see if you can get above 219.25, 219.27. All right? But that's bumping right up into 220. So that's pretty much your resistance. So if I take you back real quick, I'm going to show you guys a couple things. All right? I'm going to show you guys a couple things here. So let's pull up a 15-minute chart. All right? And what do you guys see? What do you guys see here? All right? And we are trading at 218.48 roughly. So we're trading we'll just say like right about here. So I'm watching 225. I want to see if Tesla can get up to 225. That's what I'm looking for. But we also have a bit of resistance here at 220. 219.95. So be aware when you start getting into 220, you really want to see volume to let you know, all right, I think we can get through this chop level. This is from the earnings. All right, this is from the earnings. And I'm not sure, just like Apple, if Tesla's going to get through that. Because it may wait until earnings. It has earnings in a week. Roughly, about a week. I think it's like on the 29th. Something like that, 21st. So this gap down is from earnings. And I'm noticing Apple. I'm noticing Tesla. They're going right back to last quarter's earnings to say, hey, so this is telling us the market wants to know how they're going to, it's basing the performance off of their earnings. Okay? That's what I'm getting at a lot of these names. Because you're seeing them, the ones that are slouches, they are going right back and they're just sticking right around that area from when they reported last quarter. Okay? So it's important to know when that is. So I'm watching 220. If I get long, let's just do that. If I get long, let me do this. All right, 225 is the bigger daily level. Okay, 225 is the bigger level. All right. I still wouldn't mind seeing if we can get this thing down to 180, 179. But 225 here. All right, and it was previous resistance. This level's a big one too, up at that 50-day. Up at 240. 250, I'm sorry. Yeah, 240. Never mind, 240. So, I know I'm going off track. All right, you had this previous resistance up here. All right, previous pivot high. Hold on. Okay, 210. There's a reason why 225 is on my watch. All right, there's a reason why. Yeah, that was that previous resistance level from when we recovered from earnings, and that's this gap, right? It pulls back into this level here. See, that's at 213ish. And you pulled into it, and then you came up, made it resistance. You know, I don't know if I've seen it off of an hourly chart or what. All right, but it feels like it's like, see what it is. It's like 225, 220 to 230. It's like that whole area. I have to go back, guys. I don't know why I have 225. I don't know why I have 225 labeled as the area, because really it would be 230, if anything. Even then, it's not. That's not even the area either. It's 240, 239, right? So, right, here's your support. Support, it breaks, turns it into resistance, drops, resistance, resistance, breaks it, pulls back to it, right? That's the level right there. And then you get below it on earnings, and then you get back up to that level, resistance, resistance, you break above, and then it fails. All right. There's a reason, though. I know there's a reason. I just don't know what time frame that makes it relevant. All right? Oh, that's why, because of pre-market and after hours. That's why. Even then. All right, so the 200-day moving average. That's what I'm going to be going for, the 230 level, if we can get a long. Yeah, and I have that written down, 225, 230. So I'm looking for a long on Tesla if we get it, which we need a pullback first. I think we need to get a pullback and try to get to yesterday's close, 216. That's not yesterday's close, but 216 would be the level that I'd like to look for to see if we could get a long. All right. Let's look at this. If you guys have any questions, let me know in chat. I can give you guys, if you guys just want to say hi, anything. All right, so this 5-minute chart here. So we're gapping up. You have this flat top resistance here, okay? Watch 215. If we pull back into that area, see if we can hold yesterday's highs. That was a really nice putting in a support and a resistance level at 215.
First, let me tell you, I want to say good morning to David and to Carl. Thank you for having us here today. You know, today...
If we get it, okay? If we get it. That's if we get it. Let's see here. Oh, they have the Disney guy on here, I think. And I was watching Disney. So, yes, 215. All these lines here, I'm going to be watching them like a hawk. All right? I'm going to be watching these areas like a hawk. I'm going to be honest. I think we need to pull it back. I think Tesla needs to pull back just a little bit in order to take this. But it may not, right? It may just... You know, it may just give you a nice boost and put in a lower high up here. And I think that's what it could do, because you can see it making this bull flag here on the hourly chart. I spent way too much time here. Nice double bottom. Nice double bottom here. All right, and see if 222 is the area. We'll see what happens. All right, we'll see what happens. Apple. Let's go to Apple. So again, 215. 215 on Tesla is where I'm looking for a long. Yesterday's close. Let's just keep it simple. I know I'm very hard because I need to get better at speaking and doing stuff. All right, 215 is going to be the level that I want to watch for. 217, if that breaks, I'm looking for 216, 215. There's three levels, okay? I don't think 217 is going to hold, but it did hold this morning. Yeah, it's just a small pivot, and now it's trying to make a lower high. So I think she needs to pull back, and I'm looking for 215, guys. 215 long Tesla. All right, 216 as well. That also could hold. All right, this is your resistance, support, resistance. Doesn't make it support. 215 is the bigger level, though. Let's go to Apple. We've been watching Apple. We have 10 minutes. All right. So, Apple's coming up in the resistance. If we get a pullback to 185.50, I may think about a long here. And it already did it. Look at it. It already pulled back. It already pulled back to 186, 185.50. All right, it already did it. If you can't see that, right here, it's already done it. Every time Kramer talks, if you've already had, like he said, come on, Jim. All right. Let's see here. So you're coming into a bit of trouble here at 186. Let's go to the daily chart. I'm so frustrated that I had trouble this morning getting up between you know, being dehydrated and cramp. My feet were cramping up yesterday. My cat didn't really mess with me. She tried to, but I didn't go to bed till late. All right. And guys, as well, look, keep an eye out for Disney. There's a lot of news surrounding Disney, and I would just keep an eye out for it. 187.54. Dude, that was... Did I just see a big jump there? I know I did. I know I seen 187. It might have been 166.7. All right, 166. 166.80. 186. 186.80. So we're coming up into resistance here. All right, this level here is what I would watch for. Maybe we get a bump into the 50-day. All right, so it's right around 189. All right, 189.50 is your 50-day moving average. Just watch for that. But you're coming into this whole area that's resistance. And Apple, like I said with Tesla, is also sitting there at the prior earnings. So it feels like the market's waiting, wanting some of these companies to be in that area to see if they're able to make new highs, you know, because they're sitting right there at the earnings. All right, resistance, a bit of a head and shoulders here, kind of, but we're holding it. Apple, and last night's video, I did not get through the major parts that I wanted to get through, but risk to reward, that was the biggest thing yesterday. It's like, what's the risk to reward? Like, if you're thinking about taking a long on Tesla, is it worth it? You know, your 50 days right at 189. If you're okay with $2 to $3 long, and your stop loss matches up with it, fine, do you. I wouldn't take it. I'd much rather let it bounce. I'd much rather see if it can bounce up into that area and then possibly reject it. We already know that we have sellers up here. So 187 short. I want to see if Google can see what's going on with this proxy fight still going with Disney. So you may get some moving there. So I'm looking at 187, 186.68. All right, and that 50-day moving average, guys, for Apple to take a short. All right, going to take profits right along the way, right? We get that break down to 185.50, 185.45, get into that gap, take a piece off. A bigger chunk will come off at 84. If we get this move, okay, and it looks like the S&Ps also want to start acting as resistance, so make sure we have the markets at your back. All right. It's important. All right, so that's that 184, and then we'll look to see if we can get to the 100-day moving average at 183. 183, and I don't know if you get to 180. So that'd be a nice trade. That's a $3 trade that I like, and I'm going to look to get short up on the bounces. Let's look at Google. Okay, let's look at Google real quick. All right, let's look at Google. Let me pull up this hourly chart just to be safe. Yeah, it's a big resistance level. I think the 188.21 ish. This level here, 188. That would be awesome if we could get a short there, but I'm not sure if it'll give it to us. I want to go look at Google. Remember what I said yesterday right? With AMD, Nvidia. Look at them, guys. Just because they're going and making highs and they look overextended, it don't matter. The buyers are stepping up. What this is, you're putting in a cup and handle here, and it's going. The buyers are stepping up. This is telling you that this stock is wanting, the institutions want to own this, and they're building positions. Get with it. You got to get with it. You get that pullback, go long. It stops you out. It stops you out, but maybe you need time. All right, you need to work with this. You need to reach out if you need help. Like, subscribe. Nvidia, it's 823. Nvidia also, bang, going. Also, TSM is probably what also helps this. All right, semis are still strong. 111. So we got through 110, guys. We got through 110. 111.55. All right. So I would look here for this gap, guys. This is what I'm going to look for TSM. Let's see here. There's a gap fill here. I'm going to make it a dotted line so I know that's the area that is in the gap right there at 112.38. Edit properties. All right. And I'm going to look at Disney as well. So semiconductors are brutally strong right now. Brutally strong. All right. Brutally strong. Let's go to a 5-minute chart real quick. And this thing is just ripping and roaring, guys. So what I would look for on TSM is I would look for the pullback. I don't know if you'll get it, but if you could get a pullback to 109, that might be the best. Okay, 109. No, I don't want to do the rectangle. Oh my gosh. It sounds like there's things going today. Tesla putting in or the SPY putting in a double top. I think the SPY needs to pull back. I know we already talked about that, but I would like to see it. It already tested it at 472.50. So just take notice. Now we're filling the gap. So we got the gap fill. That's what we were looking for yesterday. Use pre-market. What you see pre-market, like this level right here, see if you get a 111 long. Okay, that's also another option. So just because it's extended does not mean it can't go higher. If you want to wait for the pullback, wait for the pullback. That would be the smartest and most ideal situation. All right, wait for it to pull back. All right, get some support under its belt and look for the long. Like you could look for that 110 long. See if it pulls back into this area, possibly take a long. And it should maybe even try to retest highs. And it rejects up there, but you're long. And you're able to take profit as it gets to the prior pre-market high off of 110, 109.50 area. I would be looking for 109. All right, that area, 109, 110. And, you got $1, you got $2 there. Or it's going to go right off the bell, get into the gap up here at 112.50, and it's going to hold that gap. And the top of that gap is up here. Now, how much can this thing move, honestly? It's already up 7.5%. So you might get 10% out of this, maybe 12. I don't know. I'm not a psychic. Let's look at Google real quick, man. I gotta hurry up, guys. I don't know how. I gotta get better at these streams. If you guys could, I sometimes, I need help. What are some things that I could do better, to make the stream, more enjoyable. All right, Google 143. So if I want to see if the SPY can pull itself back here.
So I waited till the market settled.
What is that? 472.50.
There was no loss.
472.50.
My stop.
TSM, Taiwan Semiconductor, new highs now,
I waited till it settled,
$112.
and I
He needs to hurry up because the market's about to open. That's what Kramer's getting at. All right, watch Tuesday's pivot lows. See if we can start to hold this base here. Not sure if we will. You may get a pop off the bell and then get some resistance at 475. If that's the case, I'm going to look short. That would actually also line up with my Google thesis. And look, Google's already pulling back big time. All right, so I'm looking at Google here for a possible. So I want to see if Google holds 143. All right, Google 143 long. If it gives it to me, okay, if it gives it to me, and then we got 1 minute, guys. We got 1 minute. All right, we got 1 minute. Look for this Google. All right, I need to get all this stuff ready. And then we have JP Morgan and all that fun stuff. So it could be 142.50 as well. I gotta finish this statement, bro. The market's opening. They don't give a fudge about you. We're gonna watch the opening bell. We don't need to watch you. All right, guys. Good luck today. Bell is opening, and Peltz is up there on the damn stage taking up everybody's time because he thinks everybody gives a shit about him. They don't care. People don't. They're not worried about you, dude. Good luck today, everyone. If you guys have any ideas, anything you guys see, throw it out in the chat. Good luck today. All right, so there goes Google right off the bell. Right off the bell, and it rejected that pre-market quick. Look, he's talking, and they got the bell. You can't even hear him. Everybody's cheering. That's hilarious. What a dick. What an asshole. All right, guys, so 144.50. 144.50, 145. I need to watch Tesla. I'm going to watch Tesla here. All right, so Google's struggling there, guys, at 144. My charts should stay where they are. I don't know why they keep moving. Okay, so Tesla fell. And look, it's trying to hold 216. And we said 216, 215. But more importantly, that 215 of yesterday seems like a really good level, guys. All right. Seems like a really good level. And there it is. They're going to pull this thing back. Support 215. Let's see here. We're coming into yesterday's close. All right. Said the nicest things about me. Come on. They got to take a commercial break, bro. He's out of his mind. That's why they want to get rid of him. There it is, guys. All right. Let's see. We're starting to work ourselves right into this area. All right. Starting to get right in there. That's where you want to see the support. That's where you want to see support. That's where you want to see the support level, guys. I'm not sure if there's a fundamental. Barclays lowers price target on Tesla 250 to 250 from 260. That's still not bad. It's still weak. It's still weak. It's still fucking weak. Come on, man. Jesus Christ. It's weak. She seems weak.
the promises Bob made when he came on the board in the last year, the end of 22, have not been kept. If they were kept, I wouldn't have resumed my
Dude, I have so much stuff going on.
right because of the promises he made. Okay,
I want to see if we can pull back to yesterday's close, guys, and get that gap fill up at 220.
not because I was worried about it.
Come on.
That keeps a guy like me going. But
It's going now. Shit. All right.
I do, of course, welcome Bob Iger to call in. Mr. Rizzullo, I'd like to hear from him. Mr. Perlmutter, of course. But I do point out
The volume is a lot lower than yesterday, guys. That's weird.
to you, but
That is weird.
we had a vote here. I think given the total share of return, you
That's
still have a
weird.
shot. Let's leave it at that and see what the opposition says. I want to thank you, Nelson.
All right, so that just made that area resistance.
Disney World obviously had a good time. And for coming on Spoke on the Street.
Right there. Bada bing, bada boom.
Jim, David, Carl, appreciate it. Have a great day, guys.
All right, you
Thank
too.
you,
Thank you.
Nelson. Thank you. It does kind of remind you of what Barkley said yesterday, Jim.
All right, and look there.
There's significant management attention being
That volume was poop.
proxy battle instead of operations at a time when the company faces critical strategic decisions.
Yeah, I mean, yesterday the stock got
There it is. That's where you want to start seeing some buyers step in there.
that they're not going to be able to pull it off. And it did sound like something that Nelson is not too fond of. I mean, the underperformance here is stark. Let's not mix it here. I mean, Mr. Iyer can come on and say that Nelson Phelps is of no value. I come back and say that it is unclear. When your records is bad,
Excuse me. Looks like it may get stuck between this VWAP and 90 MA here. All right, it may get stuck there.
do you think any of those board members would still be here? I mean, I would fire the assistant linebacker
Shit.
before I let this continue.
Part of it does go back. Let's not forget there was a different CEO for a number of years, and you know
You
you may
just
want
joined
to
the Massimo board.
and you want to
Chip it.
and you want to you may want to criticize the board for the lack of success in succession.
But what is amazing is that's a very heavyweight board. It's not a board of honorarian people.
It's got a lot of very
A lot of
serious
heavyweights, so it is a little. I mean, it's quizzical. How about that? We say.
Damn, she's going, guys. Look at Tesla.
But then I can understand
She's going.
very angry unless they didn't own stock. Now, full disclosure, my charitable trust has taken a big bath in this, so I'm not.
That's what you want to see to the downside. All right, that's what you want to see. Now she's sunk below that level. Let's see here.
$35. Some real money that I wanted to give to charity. And I think
See, it did not hold. This was the level, guys, at 215 that I wanted to see if we got some buyers to step in there.
One thing we didn't get to
And look at that. It's going to turn it right into resistance.
or politically
It's going to turn it right into resistance.
succession even maybe are less relevant.
I think I'd like to hear on that side, but Mr. Perlmutter, who I know is part of the big group, but he is
I want to see if we can catch a bounce. I don't know if we're going to be able to, though.
a tough-nosed business person. It does seem like that maybe that's what's been lacked. It does seem that you kind of they lost control of costs. They also had a CFO, Christine McCarthy, who may not have been at the top of her game near the end of her career.
Speaking of boards, Jim, Sheryl Sandberg leaving the Meta board for the first after 12 years.
And look, here it goes, guys. She's going to drop.
Yeah, it's interesting because there's
Feels like she's going to drop.
she stayed.
The volume isn't too crazy, believe it or not.
Course, I think the new products are going to be amazing, even though they were treated with very little respect.
Now, you have some mild support here at 214.
Jensen Huang
Mild support.
is strong as any CEO I've seen, and I think that if you want an AI play, you want Meta. And may I just point out, David, I have to do this, but I'm going to go to Carl. I'm sorry. Sheryl Sandberg's brother-in-law. Bernthal. Mikey. Maybe the greatest character in it. And you know, in 2 different episodes of The Bear was just lit it up.
He was great. The Bear did very well. We want to talk a little about luxury this morning because
Are you a Birkenstock man?
no,
Man, I wish I do not want to mess today up either. It's all good.
it's harder and harder to figure out what exactly is going on in China as well. Maybe the highest
All right, so what I'm looking for is 216 if we can get it.
Chinese consumers.
I'm not sure if I'm going to get it.
North
It's gonna fall out of bed here.
generally better across the board. Revenues for well, we can take a look there. And that stock is up over 10%. You see it, although not over the last year. Jewelry sales 12% beat estimates. Watch sales even up, even though watch.
Okay, no, watch sales is key because you see, David, your remaining way to be able to show
Sorry, I'm not looking at the chat. If you guys have anything, you guys are, let's see, 184. All right, so there's Apple, guys, pulling off of that level there. That's a low volume. That's a low volume pullback. Low volume pullback there. I'm going to take my time real quick. It looks like today's volume is very low. Probably semis, that's why. Probably want to be in the semi space. That's probably where all the fun's to be had.
not come after you, unlike a lot of different signs of wealth. It's not considered to be, I would not say it's extravagant, even though the price clearly is extravagant.
We just had Burberry last week with not such a great output.
No.
You mentioned Merck, Jim, and it's down some 6% or so on concerns about inflation. They say the consumer is challenged but resilient.
Yeah, I mean, I was
All right, so you guys can see here, TSM is struggling.
it was actually down a little bit more than pre-market. It looks like the Barbie premium has come out of it.
Just got to be patient. Let it pull itself back a little bit.
No, that's the Barbie.
Let it pull back.
Because there's a tie-in.
Oh my gosh.
With the Merc, I watched it. I did finally watch it on a break.
It didn't stop.
Yeah, I did actually. Yeah.
Yeah, but that was considered to be a.
Why is this doing this?
No, it's very bad.
Got it.
Yeah, it was.
Okay, I believe you. I believe you.
Skeptical as always. Really difficult.
Holding you to account is what we like.
I'm just wondering. I don't know.
Look, I had Mattel on. I know that Mattel did not benefit nearly as much as I would have thought from that movie, which, by the way, I thought was hysterically funny. You watched it twice. And just so you know, in all fairness,
Yes.
if you were to go to my closet, David, you would see the Birkenstock effect after the movie.
Really?
Yeah.
So you bought them, but you don't ever wear them.
I don't wear them, David.
No.
Lisa wears them.
Oh, she does.
Yeah.
Okay.
Jim, information technology is going to lead us today up better than 1.5%. We talked about Apple. Didn't mention Google, though. Layoffs now in the past, or since January 10th, over 1,000 employees. And YouTube yesterday.
And this is
I wish I could have got that, but I didn't.
trouble, but I think the Mag 7 is now separating itself. I do think that
I don't think this trade's over with, though. I feel like if they give us the first chance they give us a bounce, we should be able to get it.
really hectored them to do that.
Let's see here. What's
And it's going to bring out a level of profitability. David, the stock sells at 20.
David?
Is that
Fucking Kramer.
No, of course it's not expensive, particularly given the top line growth that's at least possible.
Fucking Kramer.
Wonder about their monopoly.
All right, so Apple is bumping up into resistance up here.
Under some pressure as a result of changes in generative AI and what Microsoft is going to be able to accomplish there. That's not an insignificant risk. That said, people have always been waiting for them to really get fit. That's kind of what they use now. Is the term in Silicon Valley. We're getting fit.
moonshot other bets?
Instead of saying we're firing a lot of people and putting them out of work, we're getting fit.
Well, you can't be like Zuckerberg did not. He moved down the Glassdoor rankings when he just said efficiency because they're not ruthless. Zuckerberg has an element of ruthlessness that Alphabet does not have.
They were first, and Meta, obviously, we all know how much the stock benefited from their focus on cost after spending crazily, some would say, on the metaverse.
Well, but I have to go to someone who's a little more culturally attuned to you after my bomb of Birkenstock.
Come on, why does this continue to do this? I just want it to stay right there.
Please don't kill me first. This is to John Sturgis, an actual conversation. So I'm being
Keep your eyes on the VIX, guys, because it's been starting to go to the upside. And I don't think very many people are checking that out. All right, so here goes the market. Market looks like it's getting ready to pull back into yesterday's close. Let me just make sure that I am correct.
Speaking of the Magnificent Seven, there is one name this year that has shown
She's holding. She is holding.
You talking about the end?
All right, and that level would be like 473, so it's like $1 away. There goes Apple. Apple has some okay volume. Like, it's not like relative volume. It's not crazy, but
EHUN, one where a big spike in volume. Papa Hotel Uniform November.
like the volume is really low. That's crazy. The volume is so low today. I don't understand.
DWAC, Digital World Acquisition, shares right now about 11.5%.
You mentioned Tesla, Jim. Piece in the Times about drivers, owners who are dealing with cold weather and understanding what that does to a battery overnight.
And that dovetails with Steve Scherr from Hertz, by the way, an upgrade.
All right, Google has the resistance up at Google is at 145.
Jonas says that was the right move, goes to overweight Hertz.
I thought that was a great call because the cash flows improved since Steve Scherr's come on at Hertz, and it's not a
All right, 145 on Google.
a vulnerable 7-member, and I think
Market is not climbing higher.
who else is and isn't. Microsoft, by the way, just 2 pieces of love today and a lot of $400 price targets. That's going to end up being a survivor. 3 members been good. Yes, the Mac
Fucking Tesla's just dropping and dropping and dropping. So I was looking to see if I could get a 216 short, if it would just give me a bounce back to VWAP, but that's not looking like the case. It's not looking like the case. So
Price cuts for the Model Y. But Rivian and Lucid, guys, Lucid's down 35%. Rivian is down 32% this year.
is it going to hold here? 214. Is it going to hold?
doesn't help, as Carl pointed out. Then as well in cold weather is ice. See, ice does better in ice.
Look how small those candles are.
There's Lucid. Wow, talked about a lot of
Fisker? We have
well, Rivian is the perhaps more significant.
I like Rivian.
Still has a $15 billion market cap, does Rivian, but
backed by Amazon, David.
Yeah, and Baird makes the top pick today, Rivian.
I think Rivian has real horse tits.
maybe they're going to bottom ticket here because that thing has just gotten crushed.
We should put Fisker in on that CNBC real time, see what it does to the performance.
Why are you mentioning
Oh, nice. Look at that. Look at that 15-minute trade line coming in there, guys. Will she get up above it?
That's why. Oh, geez, they got to do a 100-foot reverse split to get that thing cooking.
Wow, the volume is abysmal.
Industrials, Jim Fastenal is leading the S&P on a better than expected quarter.
Okay, can we get a bounce and get this thing back up to 418? That's what I want to look for. I know that's crazy. I'm going against the grain here. The trend's to the downside, but I want to see if we hold here. I want to see if we can hold.
Again, I come back to the idea that if you wanted to get a plane from Airbus, get in line.
That doesn't mean look at it go, but look at the volume. The volume isn't going anywhere.
Only on money, short on time.
Look, as soon as I say it, it freaking rips. That's hilarious.
Holders like Expedia, watch Marriott, they've all been big players.
Yeah, Vail Resorts does give an
All right, let's see.
visits down 16.
So right now we're hunting.
So that EBITDA is going to come in with
We're hunting right now.
make up for that as the season develops. Also, Citi goes to sell, save.
And it's just gonna fall right back down.
Likely to be other suitors unless they do some major debt restructuring.
That read a little like Plug Power, and these are companies
That's crazy how sad these options are.
UAW really concerns immunization
It's sad.
second table has been delayed here.
nothing great? I mean, I see
We're
this
starting to get
whole
out a little bit
bankruptcy
here
process
on
is
Intel
a good one in the
because
sense
you know
that you
this
can
could be the one that
reorganize
doesn't
and
work
come
out.
back.
So
And
we
we know
definitely want to
plenty
make
of
sure that
airlines that
well,
have, not to mention
we're not going to go red.
any number of other companies.
But it is coming back in. So
Charter
we've got a great
Communications
bid.
once went
That
bankrupt.
break of 25. I thought we could get
You know,
Do you think
48
Amazon's being
there, but for some reason
opportunistic
we
with
stopped
that
almost on the
particular
dime at 47.
sports
And then looking back over
Diamond
here, you
talking
can
about
see
the
that
bankruptcy they may be as they get
there it is right
deeper
there. We ran
into
into the 200 here, which I
into
didn't
sports
notice. But again, like
Amazon, by the way,
I don't know
against
that
the,
much. Like that's you know it wasn't really
cooperate.
meaningful
Andy Jassy,
for
huge
us.
sports
There's that
fans,
high up
probably
there,
put it on
56. I
and
don't know.
realized
That's so funny that it's
avoiding a liquidation there. I mean, remember the Yara Sens, by the way, that was part of the Disney deal with Fox. They're thankful they got rid of them immediately in terms of investing them. They've
Look at that clear rejection. Right at VWAP. That was our chance. That was our chance. I got this big ass cup, so I can't really see what I got going on.
But overall, Jim, I would note, this has been a very strong group this year. And it is notable for its weakness this morning. Big Pharma.
Well, I think healthcare itself is having kind of a re-ranking just because of the health insurers, which is just, they should, but there's a sense that healthcare was supposed to be a nice place to hide.
All right, 210. I'm going to look at a 210 put, guys, on Tesla.
UNH and Walgreens are the two biggest downward impacts on the Dow today. One reason why Dow is having trouble escaping that down.
Hang on. She is holding that VWAP. All right, she's holding VWAP. I'm looking at a 210 put. I want to see what happens here. I'm not sure if the selling is going to step up or what. Let's see what happens here. We have time because if this thing moves, we have room. All right, we don't have to, like, let's let it show us what she wants to do. And if she can get above this rejection, because that VWAP is your resistance level, and then the target would be this gap fill right here, up at that 220 level. And there she goes, right up through VWAP. And what did we say? All right, look at this level here from yesterday, guys. That resistance level from yesterday, 214, bang. All right, and then it's trying to go long. You just have no volume. This is what's worrying me. It's got to make some ground to get some volume in there. All right, for me to trust this. Now it's still making the 1 minute VWAP resistance. Let's go to 220. Let's see here. What do we got? 220. All right, 220. The volume needs to peak up just a little bit. Wow, I don't like. Okay, 27. All right. That's a low volume bounce, guys. So I'm still trying to figure out what she's going to do. Because this 216 was the other level that I was looking for the short. All right. 216 was the other level for the short. So I'm stuck between what I'm going to do here. Let's look at the 15 minute one more time. I mean, it looks like it pulled right into that support zone, that prior resistance level, reclaimed it. You know, all we can do is put it on, right? And if we're wrong, your risk to reward should be good enough. We're at 215. My stop loss is at 214. So 15. See, now it's up at 16, 15, 14. To make 220, it doesn't really make sense. Doesn't really make sense. Now we're going to be paying up for it, unfortunately. Let's see if we can get that pullback. That was a really nice move right into that support zone. Let's see if we can pull it back and start bringing this thing up to high a day. if you guys are just joining us, we're trying to see what it is that we're going to do here. Is this 215 VWAP going to hold? All right, look at the volume on the buy side. If you get an increase in volume here, all right, if you get an increase in volume there, see, we have nothing really in our way to, like, look, already. Look at the volume on the 3-minute. Look at this. Look, the volume already is taking out that candle off of that low. A little bit of this candle is buying. So, there's a VWAP hold. Again, all you can do is stick to your stop losses and say, this is my stop. Is the risk to reward worth it? There it goes, pulled back into VWAP. Looks like we're going to be paying up for this. I need to get... Oh, I was too busy talking to you guys. I missed a pullback there. Damn, we could have gotten in these at a buck. They're already at 125. They're already up 27%, 28%. Shit. Just like that. Come on, give me the pullback. Give me that pullback. I don't want to get trapped into a long here. I'm a little nervous with Tesla because I'm not sure if she even knows what she wants to do. That is a nice, you know, pullback and hold of this close. Shit. I need to just put it on. If I get a pullback, I'm going to put it on. So this pivot low is holding. And I'm just letting you guys know I will be taking profit. I will be taking profit. I will be taking profit on those extensions if I get in here. Alright, where's our selling at? Alright, watch this area, 217. So what I'm battling right now is the risk worth the reward. Be careful. If anybody's thinking about the long, guys, you just be careful. Look at that. Look at the resistance up here. Like, so you're going to go long at 216, and then you're going to run into resistance at 218. All right? 219. That's all overhead resistance. All right? So, just got to, is it worth it? Because if we start getting up here, I'm going to be like, all right, I want the short now. Yeah, I want to get back and go short. Unless we start getting some real serious volume here. I know it's got some nice continuation. I should have stuck to my plan this morning, and that was this previous resistance at 214 right here. It locked right into it. And it held. It held. Alright, so we are reclaiming this pivot area because I was looking to see if we could get short if on this extension down on an increase in volume. I was wanting to see if we could get the bounce back to it, right? Get into VWAP 90 MA, right? And then get short again for the extension, but it never gave it to us. All right? It just kind of just fell out of bed. I said, guys, sorry, I didn't know the mic was off. Guys, see what I mean? Look at this resistance level here, and this is on the daily, this gold line there. So you see that previous support, prior resistance, previous support, pre-market that we wanted to get short yesterday. All right, look at the rejection. Let's see if you get that increase in volume off of that area. People got sucked into the long. Let's see if the increase in volume happens. If it doesn't happen, I'm going to look for a low volume pullback to get long and see if we can take this to 220, 225. All right, so far that's a low volume pullback. So far, I'm kind of just trying to be patient here and let it tell me what she wants to do. I think I'm going to go for the short here at 216. Okay, we just broke above it. If any of you guys took those longs, I would be taking them off. Or like, you know, not taking the whole position off, but think about taking it off because that's a 20, almost 30% move there. All right, there we go. There's the rejection. Let's see if we can get an increase in volume here or get a hold of 215. That's what I'm looking for. If it's a low volume pullback, hold 215, I'm getting long. I'm eyeing up to 210 puts, guys. I want to make sure my entry's right. It's just going to go. So I'm going to look to get into 210 puts. All right, that's what I'm looking at. It's just going to go. All right, look at that hold. There you go, right there, right into 215. Let's see what happens here. It's trying to make people just get in it, but I want to wait. Give me the bounce to VWAP. This is what I'm looking for. I want to look for this bounce right into here, and then I'm going to take her short. That's what I'm doing. I'm going to take profits at low a day. It's going to take it from us. It's going to take it. It's going to take it. It's going to take it. You watch out because that was... Oh, no. I ended up getting in it. It's okay. All right. This could be a support right here. Shit. I did not mean to do that. I did not mean to do that. That was a mistake right there.
So that's where the market, I think, is trying to
I'm still going to trust. It's just, I think we can get a bounce here and then get the rejection. See what I'm saying? I could see this area right there becoming a support area. All right, I could see it. I seen it from a mile away. All right, and I started to think, I didn't mean to get into it, but I'm going to hold it for a minute, see if we can crack low a day, and look to see, you know, if we can take it back down into, see, she's struggling here. She wants to break, but then she doesn't. All right, so she's either going to put in a double bottom or we're going to go revisit 212 area. Right, low a day from yesterday. I'm going to go use the restroom. I'll be right back. All right, my stop will be 216. Maybe even above VWAP if we start claiming up there. Just keep your eye on the volume. Okay, I'm looking at the 15-minute too. All right, and there we go. Can we crack that 15-minute trade line? Or are we going to hold it? It looks like... So this is what I'm looking at here. Look at that 15-minute trade line came right into play there. And it's holding it. I kind of want to exit this. It's just going to pop, and here goes the volume. Go ahead, come on. Pull back. Let's see here. Let's see what she's wanting to do here. I'm trying to look for a nice exit. I may just have to get rid of it because I feel like that 15-minute is trying to hold the 90 MA. I get right down to break even. If we start popping up over this, I'm just going to manage it because I want to look to see if I can get out break even roughly. It's not. It's climbing higher. Let's see here. Nothing's really moving today. So I'm going to try and get out of this the way that I can. All right, I'm going to try and get out of this the best way that I can. It may not let me. I may just have to take it in the chin. It's all good though. Let's look here. Let's see here. So it's a low volume. We hit that. You know, maybe we get a 213. Maybe we get a test of 213 here. I wouldn't mind seeing a 213 test. But I feel like the upside is the play. Right? That's where the room is. It's just you don't have volume. There's just really no volume, and that's what we're fighting. So, for anybody that took this, I do apologize. I didn't even mean to take it. I kind of just got into it by accident. At least the entry. Volume just left. It's just gone. Let's see here. I know that you can't really go off of the SPY with Tesla, because it'll just do the opposite, but just not getting anything, man. It's just not moving. So let's see if we can start getting this thing down and try to get out of like 213 or so. Come on, let's step in here. Bang. Take this thing down. That would be an entry there for me. Right there at 96 cents. Right? 96 cents. This would have been an entry right there. Because you're going to know pretty quickly what's going on. They should be trying to unload this thing. All right? See what I mean? See what I mean? That's the entry. That type of entry right there. And you already went, you know, it just... Not getting it. It's not really giving you anything. All right? It's not really giving you anything. Yeah, it's... It gave me the opportunity to get out. Give me another opportunity. Give me another opportunity. And there's... I don't know what she wants to do. She may just trade sideways. And she's going to break out. It's about even. So let's see what we do here at VWAP. So low volume bounce. What I'm trying to do is I'm trying to see if I can get out roughly about where I got in. Like right there, I should have just taken that loss. If we get another... Damn it. It gave it to me, man. It gave me a nice stop loss right there. And I wanted to give it a little bit of room to see if it would go. And it didn't. That's where I should have stopped out right there. Yeah, that was a nice increase in volume to the upside. Fuck me. I should have just taken that loss right there. It gave me a nice loss. Where's the 15-minute? I had my order sitting too long. It said I had to go back and redo it. So I didn't get that 96 exit. Let's go. Come on. Drop it down.
Coming up at 10:30, natural gas storage.
Because I wanted to get a better understanding of controlling my own money. It works for me.
Unlock exclusive member benefits.
Drop it down. Come on, baby. Drop this thing down. Let's go. What time is it? It's 10:15. Let's go. I'm fighting for this one, guys. I'm fighting for it. I need the volume, man. I need to get. See, if I know as soon as I get out of this, it's gonna pull back further. I gotta take that right there, guys. I gotta take a little bit off right there. Nice. Okay, very small loss. Very small loss. This thing's gonna consolidate sideways. Small loss. No big deal. I had to fight for that very small loss. Let me use the restroom. I'll be right back, guys. Be right back. Man, I feel like I should have stayed in it, but it's just not doing anything. And look, here she goes. She's gonna fall. Watch. She's gonna pop, and then she's gonna fall.
Hey, let's check out this bar. Oh, wow, that's great.
Here it goes. Like, this would be a nice entry, I feel like. I'm thinking about it again. I'm thinking about it again. That's a nice, because now you're making that support from yesterday resistance. And it looks like, watch, let's see if it does it. Let's see if it just gives you a nice drop. And this is where, as I'm watching it, it doesn't give you anything like when you think it should. Like, watch it go right back up now. Unless it does drop. Come on, there she goes. See what I mean? Like, right there it was. Like, that sucks. That's okay, because that would have still been a loss. Because I entered wrong. Alright, there's her break even. There's profits, you know. So, it's no big deal. So, this is when, like, time in the markets, you really start to see when you should be entering. Like, right there was like, that would be a nice enter. So, it's all good. Small loss. I'm going to use the bathroom. I'll be right back. The day is not over with. I'm not done. I'm not done. Alright, guys, let's move on. I'm not worrying about Tesla just yet. It's going to take a while for this thing to even do anything. It's not paying you. At least it wasn't paying me. You guys see what I mean there? See how it's bouncing right back up? 15-minute trade lines holding, guys. You got to look for the upside. It's just not giving you the volume. The buyers aren't stepping in here. They're somewhere else. So, let's go find them. Alright, Apple had an upgrade. Alright, Apple's getting up into that area. Apple could be a very nice long. 50-day moving average, 189.50 is where I would look to take Apple. It's already up 3%, but unless I did move it, correct? I did. So here you are. Apple is coming into that prior support. But the 50-day moving average. So, I mean, it hasn't tested it. Let's go look at semiconductors, because I know TSM had a nice day. Here's AMD. Nothing's really moving, guys. If this is your first time here, would you be so kind as to give us a like, right? Subscribe if you haven't done so, but give us a like, comment something. It would really help the channel. It really would. And it would be appreciated. Two, if you guys have any questions. All right, so here's the SPY trying to hold. I was trying to see if the SPY would get down to 473 and then just, you know, kind of bring in some more buyers possibly. But, you know, we filled the gap, and we don't really have data tomorrow. I don't think we have anything crazy. The volume is to the sell side. It's just one of those days, guys. It's one of those days. All right, it's one of those days. Let's look at the IWM, actually. We need to find the action. So what has volume? What has volume? What has volume? I don't really want to look at that. MRVL, Marvel, is up 6%. Be a nice short on Unity at 32. Did anybody take the gap down and look at that JP Morgan? All right, 65s. We were in next week, I think next week 65s, right? Yeah, 112 from 70 cents. Really, it was 60 cents. I struggled to get in those quickly. A time, you know, is important. Let's see where they went to this morning when the market opened, because I'm curious. So they went to 120. They went to 120. Oh, they're at 115 right now. So it looks like it's also pulling back. That was a nice trade, guys. See, 60 cents. This is literally right where we entered. Right here. But that was me right there. I swear. That was me right there. I was that guy. I was this group right there. We tried, though. We had the opportunity to get in right there. And that's when we were trying. That's as I'm getting in this, it went, you know. Looks like it's holding support, getting ready to try and bounce higher. But that's not too shabby. That's just under 100% on that trade. Another one. We're calling out banger after banger after banger. I wasn't sure if we would get the gap. I'm looking to re-enter this trade, just so anybody that's watching is aware. This level here is a minor level of support. All right. It turned around and it made yesterday's close resistance. It double topped it right around yesterday's close. All right, look at this double top from yesterday. It's probably going to look for it to break this level. See if it can. See if it can break. And get into that gap. Again, the market's not really moving. Look, JP Morgan's trading sideways. Look at UNH. I mean, look at the SPY. Guys, the SPY is still right where we opened. Pretty much. Right? It's right where we opened, guys. So it's just boring. What's up, Chris? Yeah, I tried a Tesla short. Look, we're still right where we opened. The market has literally not moved. The market has not moved at all from the open. We have not moved. Tesla short. We had 3 bangers yesterday, man. I wish you were able to be on the show. I'm not sure if you were here or not, Chris, but it's a beautiful day yesterday. Let's find them, though. We got to find the volume. So Ford's, look at Ford. Ford's got some movement. RBLX. Let me look and see if I can find us ADBE. All right, not really moving. EMBH. Enphase. Look, so Enphase is coming up into its 50-day moving average. We might be able to take a rejection off of that. All right, so look, it's bouncing up into its 50-day. I think the short would be at so that would be what, Tuesday's close, and you got the 50-day moving average here. Yeah, this prior resistance. So what I would say with Enphase is if you get a bounce, if this bounce continues and takes you up to 107, 108, all right, say 107 to 108, right, gets into the like mid 107s, if it can get there, enter it. Your stop loss would be above this close here and above this resistance level. You'd have to give it some room, right? You got to give it probably to like 110, I would imagine. But again, you know, it's all up to your discretion on what you think. You know, when the stock tells you that it's not doing what you think it's going to do. All right, for me, that would be the entry off of, and it did that this morning. Right, it did it this morning, trying to make that pivot high yesterday resistance. Not sure if the markets are going to move. It's maybe they move later on when people don't expect it at like 11 o'clock. Let's look at the market again. I said it this week that I wasn't planning on trading the markets, like the overall indexes, because I didn't think they were going to, you know, give you a move that was, not that it's not tradable, but I just didn't think that that's what, I didn't think that there was any opportunity there. I mean, there's always opportunity, but like, are you really going to risk, or like, you know, it's got to be, you know, your risk to reward. And I didn't say that in yesterday's video, but the risk to reward has to be worth it. That's why I was leaning to the long side on Tesla. Look, it finally broke. So it's finally back down to, it did it. It finally went down to 213. That sucks. That sucks. And it didn't even pay you. So I don't feel bad. Oh no, that we were there with that. Okay, that was just a few minutes ago. I know Google was pretty strong this morning. It feels like it's just one of those days. It's one of those days. Let's see here if Google can make this resistance at 144. Might be some opportunity there, but I wouldn't short Google. I mean, the volume actually isn't too bad to the sell side. It's a little, it's just like Tesla, and I think that's why we're moving like this, because the volume on the buy side and sell side are about equal, and I noticed that with Tesla. That's why I was like 50-50 on that trade on a long and a short. I'm like, the real trade is to the upside. I think that's where we got to be, guys. I think it's one of those days for Apple. I think Apple's the place to be.
New today, analysts of Bank of America have upgraded the iPhone maker App Services Giant to a buy rating. It was a neutral before. They raised the target price up to $225. It was $208.
Yeah, so watch Google here. See if Google rejects this level. Look, it's gonna do it. But here's the thing: you could get support like right here at 143.80. And then it just bounces again, and you don't get paid because the market's going sideways. So don't throw shit at the wall. Like, recognize, that's what I'm doing right now, is recognizing that, hey, you know, I put something on, and it's not time. Market's not moving right yet. And it's also stuck between VWAP and the 9 EMA on the 15-minute chart. All right? Shit, I don't know if my mic was on, guys. I don't know if it was on. I don't know if you guys heard that or not. If the you know, what I said was, you know, you can tell by the volume that it's about equal, right? You're getting just as much buying as you are selling, and the markets are stuck. All right, the volume's low. Um, so you know, just don't force it. That's the sense that I got when I was in Tesla's trade, in the trade on Tesla. So let's go find where, like, what's moving, right? The only thing that I can think of is Apple, as of right now. TSM had earnings. Okay, that could be that might open up some opportunity, but it was sideways when I looked at it. Yeah, like Netflix is up 0.5%. Like Netflix hasn't even moved either. So what is that? 109. I would look for 109 on TSM. Maybe it gives you a bounce higher. I don't know. Off of this double bottom here at this level. Maybe it tries to give you another run to VWAP, but it's not moving. Look how slow it's moving. So see if it gives you another like shot to like 110. So I'm going to put this line here. And if it goes up here and it rejects, then I know that I might have a shot at something. Alright. It's going to be right here. This level right here. I want to see what TSM does here. Right there. Oh shit. We could look at energy. Alright. We could look at energy. Maybe small caps, right? Maybe small caps. DWAC was moving yesterday. Uh-oh, we got news. HUT. HUT. Let's see here. Alright, so HUT, Pizza Hut, I guess? Is that what? No, HUT 8 Corp. Trader circulating what? You didn't give us the circulation. Trader circulating. What are they circulating? Come on. Jasper moved yesterday. GSPR actually moved yesterday. And look at it. It's still going today. Alright, this was the move that it did yesterday. Or no, Juniper. It was Juniper that I seen. JNPR. Yes, Juniper. No, it wasn't. It was Jasper. JSPR. Alright. So Jasper is... Oh, that's Jasper Therapeutics. No. What is the car one that we were trading? Remember it was rallying and it had like a nice short interest? Not CarMax, but what is it? Carvana. CVNA, or is that? Yeah. I was thinking Kava. Not moving. AI. Not moving. It is moving actually, a little bit. Huh. Let's look at TLT. Let's look at yields. Okay, let's go to the chart. So I'm going to look at the scanner and see if we have anything moving. Let me see, guys. Let me bring up the scanners. Yeah, it's not looking good, guys. It's not looking good just yet. We need something. Maybe it's something I'm missing. Here's a short opportunity. There's just not really AKTS. All right, we have to look at the daily chart. I don't like trading these low name ones, but all right, it's above the 100-day moving average. And it's pulling back. See, it just rejected that resistance level though. Fudge. So if it pulls back to where it opens, and see, I don't even like that either. Is it? Did it just go? Did it extend? It extended. Yeah, it did. It is. It's extending. So here's what I would look for. You've cleared the 100-day moving average. That's important. If you can hold, see, this might be a shot, guys. So we have room from 80 cents where we are now, in my opinion, up to 99, a dollar, call it a dollar, $1.20, and then I would look to get a gap fill and take this thing up to $1.70. That's a 100% trade up at that 200-day moving average. You right? You know, I don't know, $100, $1,000, 10 grand, whatever. You know, just keep your risk down, right? If you know the math, if you want to lose $100, then you know how many shares you got to buy. You know, to in accordance to where you want to stop out, right? Where you think they start. Look, it's going to highs, guys. I'm gonna get long this. Let's see here. Let me do this. Here's what I don't like, actually. I don't like that we didn't get an increase in volume through the high. I don't like that. So I take that back. Let me look at it. Extension. You held. It extended higher. I feel like it's going to fall here. I feel like traders are giving up because there's absolutely no volume here. It could go all day. I don't know. But I think AKTS, see, look, here it goes. It's pulling back like I thought. Oh, I just seen these guys. Wondering why they're cheering and shit because there ain't nothing moving. AKTS. 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 Yeah, it's pulling back like I thought. Oh, look at Tessie. She's doing the thing. God damn it. That's 100%, or 50%. 45%, I'm sorry. God damn it. That's brutal, guys. I should have hung on. It's whatever. It's whatever. She was a tough one, man. Tesla was playing tough, like for real. Because the reason I stopped out was because and look at that candle. Right? I wonder how many people got faked out on that candle. I had a feeling the downside was the play. I thought that it was just going to trade sideways and not pay you. I had that feeling that it wasn't going to pay us. Unless Tesla just had some news. But I'll be damned if that 15-minute trade line finally broke and it's giving you that move. What's the overall markets doing? That's hilarious. Look at the markets going higher. Of course Tesla's going higher because the SPY's going. SPY's finally moving.
It's producing, high school level coding, and so we're essentially going to accumulate
All right, here's TSM, guys. Market's going higher. TSM pulling back.
About all these different sort of hurdles that we've heard about in the past that have been overcome.
TSM pulling back.
You don't seem to be a believer. You're talking decades. Others are talking, a handful of years until this thing advances to the point where it's no longer coding at a high school level, but at a fairly high level.
Well, let's wait and see. People are investing in it today.
The Qs are.
As though it already does that. And so if you look,
Man, that's crazy.
Bear cave,
Fuck, I should have held that trade.
problems at $6 billion plus recent tech IPO.
So I have a lesson that I'm going to talk to you guys about, but what I'm thinking, sitting here thinking, is that Tesla trade. See, what I was thinking was that I was going to be sitting in this trade and it was just going to trade sideways. And to an extent, that could be okay, but if I'm buying a weekly, unless I have time in it, and I tell you guys, not like you guys, I don't tell you, but I try to let you guys know, like, when you guys get time, all it does is help you. Like, it helps you so much. It can help you so much. Like, I want to start getting that move if I buy weeklies. I'll buy next week's. I'll buy 2 weeks. But, I just, I can't tell somebody else. I'm not telling someone else to do something. Like, I don't know what people don't know. And I can't tell you what to do. But if you guys see me buy weeklies, that doesn't mean you guys should buy weeklies either. Because you may not know that I may be putting in, like, a quarter or half of my position size, and I'm looking for that move, and I'm going to be taking some off, and, like, and it's in accordance with the plan, so just be careful. Let's see here.
absolutely. There are two things that need to go on right away. The first is to recognize that these
People are trying to trade Tesla.
they're happy to pay cloud service providers for cloud services, but they're unwilling to pay the people whose
IWM.
actually creating the value of the product.
All right, IWM. Maybe we could put on a next week IWM long, possibly. Take profits at 191, 192. Let's see here. Let's take a look at this.
I want to see really aggressive development of AI. I want to see big investments in stuff. But I want to see it done in a way that doesn't either undermine our public health or our elections or our financial markets. And we'll just have to see if we get that opportunity.
Yeah, I guess let's end on that. I am curious what your thoughts are about this upcoming election season and the role that generative AI may play.
That's some nice support. So if we can pull back, which we kind of already did, pull back to that VWAP and try to go green here.
I've asked the Internet Archive
That would be nice.
is to create a product from the Wayback Machine for the day before ChatGPT was brought to market. Because I think
If anyone has questions, just reach out.
AI is essentially, because it goes out there and looks at statistically the most frequently occurring next word for any word you have previously, as disinformation gets into the system, because of the way
As disinformation gets into the system.
going to wind up
Fucking
laundering it,
retards.
and increasingly
Oh, that's what I was going to say this morning. Who here is getting tired of hearing Nikki Haley? Like, you see these other politicians, like on CNBC this morning. He's like, oh, but Nikki Haley is up 20%. But motherfucker, if motherfuckers wanted to vote for Nikki Haley, she would have won the Iowa caucus. Stop trying to defer people from their votes to someone else. It's so funny that the politics do it. It's hilarious to see it. And it's fucked up because there's old people that don't know what the hell's going on and they are easily persuaded by the TV. So it's a bit ignorant to say that, oh, Nikki Haley, because she's a politician, she's gonna, she's with us. She's not with you guys, right? It's funny. It's really funny to see. As soon as I turned on CNBC or like got to my desk, it was, what's his name? Oh, but Nikki Haley, oh, she's leading the pack. And blah, blah, motherfucker, she ain't leading shit. All right? It's either DeSantis, Trump, Suave, you know who I'm talking about. All right? For that side. I'm like, come on. Nikki Haley. Nikki Haley is going to be working for one of them.
Shares of trades.
Possibly.
ABC falling here about $1.19.
I just think it's funny. That's all. I probably will not be voting. I don't know. But, it's just really funny. So this wasn't about politics, but this was about, like, some of the shit that they say on TV. All right, IWM is trying to make Tuesday's lows resistance. Sell side volume is there too, guys. Let's look at the VIX. And I brought this up yesterday, was that market's trying to climb higher, but the VIX is also climbing with it. And I told you guys yesterday, if we get that 14 test, I'll probably buy some. I can't remember if it... No, I don't think it does. Because I know, like, if you buy TQQQ and SQQQ, because I haven't traded inverse ETFs in a while, that they, like, rebalance or something in the morning. It's not like they rebalance it. It's like, there's something that when it opens up the next day or whatever that, I don't know. Maybe I'm wrong. I don't know. But it goes back to zero, basically, that every day. I think, I guess. I just haven't traded inverse ETFs or cared to look in a long time about how they operate. Let's see here. Let's see what we can do. What can we do here? Dude, the Qs are roaring. Let's see if we can't just put a... Man, I don't want to do this. We're going right into resistance. Like, anybody that's thinking about putting on a long here, be careful. Unless you think you're going to break it, you're at resistance level. Alright, on an hourly chart, you're right there.
Welcome back. We were just talking about it. AI warnings continue to grow around the use of deepfakes, AI-altered media depicting fake representation of others, usually celebrities, and some are sounding the alarm that 2024 could be the first, quote, deepfake election. Quite scary. Let's get to Julia Boorstin, who I believe...
Do you guys hear this? Listen to this. Please tell me if this is the most ridiculous shit you ever heard. They're saying that y'all don't have common sense. You guys do not have common sense. There's growing concerns that AI is going to replicate an image that someone won that didn't win. Ultimately, what they're saying. I don't have my AirPods. I don't know where they are.
AI-altered media depicting fake representation of
How
others,
crazy is
usually
this?
celebrities, and some are sounding the alarm that 2024 could be the first, quote, deep fake election. Quite scary. Let's get to Julia Boorstin, who
The
I
deep
believe is
fake
not a deep
election.
fake. It's the real
A deep
Julia
fake
Boorstin here
election.
on the other side.
What
that can
the
help
fuck?
explain
Look at them
this to us.
smiling. Like they know this is ridiculous.
That's
that
right.
they're even
Leslie,
talking
I am
about
the
this.
real Julia Boorstin, but there are growing fears that this could be the first deepfake election with the potential for AI manipulated audio or video to spread on social
The only
media,
motherfucker you're
impacting
fooling
whether
is
voters
the 80-year-old
want to support
that doesn't even know bread from mayo. Okay? That's it. If you have common sense, you can spot all of it.
Is portraying an apocalyptic Biden-Harris second term. The RNC ad was labeled as using
This
AI.
this shit is
experts are
really
waiting for
on
AI.
national television right now. You cannot make it up. You can't make it up. What a time to be alive. Am I the only one that's just like in my mind? I'm like, they're really this shit is really happening right now. They really think people are stupid. They really think y'all are stupid, and me including. Deep fake election. Holy shit. Holy shit. I guess it's Politic Day because that's all that they've been talking about on CNBC this whole morning. That's it. All politics. That's it. They've had politics on, talking politics, and they're still talking about politics. Let's go look and see if there's anything moving. We're coming into 11 o'clock. Let's see here. Refresh. Okay. Let's see here. All right. Hertz. Automotive rental company stock climbed 6%. Let's look at Hertz. All right. This is in the transportation sector. HTZ, I think it is. I think that's the ticker. It is. I'm good. Damn, that thing is flat. Hertz is flat. Okay. Discover, Apple. We already looked at Apple. We're still going to look at Apple. Spirit Airlines, Alaska Group, Grab, Kinder Morgan, Fastenal, Microchip. Microchip, that's SMCI, I think, right? SMCI. What is it? The ticker for this Microchip Technology. I don't know. I don't even care. Humana, Plug Power, Alcoa. I mean, like, seriously, they're like, wow, it's scary. We may not be able to keep up with the manipulation. Like, if you can't have common sense to tell whether or not something is probably not real, you probably need to reevaluate your life. Just the fact that they say this, psychologically, is them saying, we think y'all are stupid as shit, and, like, they have no respect for any of us. They really don't. They don't give a shit. Right? So what they're trying to do here is push this narrative that there's going to be things that are happening and we're just so stupid we don't have common sense. And that means they're going to have to start doing shit with AI and they're trying to take it from you. Ultimately. They don't want things to be happening because it's the way it is. It's the way it is. That sucks, man. Fuck. 160. I should have held, man. I should have held it, but I didn't think we would get this. I mean, just because the market hasn't really been doing anything at lunchtime. Look at that. When did we take this? What time did I take? Let me go back over this. Well, we were on the right side, guys. I wasn't sure if we were going to get any movement there. So I entered that at... That's right. I accidentally entered Tesla on that pullback, and I paid up for it. 10:02. I entered it at 10:02. So we're at on here. 10:02. Yeah, I entered it on that extent, on the break of that level here. That was support or resistance. Tried to make it support, and then we broke. I got in right there on that break, and then I took it off right there. Yeah. Just didn't think we were going to get anything because we seen the volume just dry the hell up. Took it off right here. 10:14. I guess maybe I'll have to give it... See, like, even that right there would have shaken people out. That bounce to VWAP, anybody that's short, they would have been down. So... Nice. Nice. That's what I'm going to... I'll be right there. I'm going to be right there with you, bro. I'll be right there with you. And this is a tough trade. Like on Tesla here, like, you know, this is a, you know, you're up 60 some percent, probably had 70, but it's not really paying you for this extension. I mean, you would have technically taken this from 216, 215 and down to damn near 211, but it's 212.50 and you're up 60%, which isn't bad. It's just, it's showing you that from then until now, it's just, there's a lot of chop in between, and it's not paying you like a normal stock with momentum would. So just, that's what I'm trying to relate, is that make sure you have some momentum. Like Amazon long would have been pretty nice there, even though it's pulling back. I think Amazon's got room to 154. It could be, you could have a triple top up here, but I think the real resistance level it's already got through, and that's at 153. That's just my opinion. I feel like 153 is the, I feel like 153 is the, you know what? China sales boost for China. So you could have a inverse cup and handle here if you do get to 154, and then look for the pullback. But I doubt it. This could be, dude. There's no fucking volume. Let's see here. It's idiosyncratic, or whatever he said. What does that mean? Does that mean they think you guys are stupid? Those must-have brands are doing really well. The sort of not-so-great brands, companies that haven't executed well, like Burberry, where they just raise prices on products that don't really have an audience yet. That's where. So this looks like AMD and Nvidia, right? You have this little cup and handle, bang. Here you go, man. You might get it. Man, I just think that the resistance is up at 154. Very nice if you caught that. Great job, Chris. Can I ask why you were looking for a short here? Very nice. Nice job, bro. Just watch out. See if this is support here. Look at the way it reacts. That's a low volume pullback. I think I'm going to take the long. I'm going to take the long at Amazon and see if we can get to 154. I'm sorry, Chris. Well, you know, it is below VWAP. Great job, dude. You just said it. Looking for a short. Right up there. Nice job, dude. Nice job. Nice job. That's beautiful. Well executed. I can see a bit of a support level right here. Is Google going now? Or they're just being excited for no reason when they really shouldn't be excited? Yeah, 153 ish. Yeah, 153. Yes. 153.07. That doesn't look like a bad long, and take that to 155, 156.
Or moments that matter, but you can invest in them. At T. Rowe Price, our strategic investing approach can help you build the future you imagine. T. Rowe Price, invest with confidence.
I missed it, guys. Or I missed it, Chris. Nice. Nice job, bro. Did you look at the bigger picture at all? just to make sure, like, I see that, you know, it did reject their pre-market, which is good. That is good. But, like, how do I do this? You know, you could be right. It's really nice. You know, intraday, like, just because it did something like, you know, 5 days ago, 6 months ago, doesn't mean that it's going to do it again today. What's happening today is you're right. Today, that's resistance at 153.50, 153.50, 153.50. I can't argue with that at all. The only thing I could argue with, my guy, is you have an increase in volume to the buy side today. Fuck, I want to take this long so bad. 154. I want to get a break, and I would like to try and get this up to like 155, like up here, 155, 156, if I could. Just don't know if it's going to give it to me. All right, so look, Chris. So what you've done here, look at this. So you see, what is this, Tuesday's close? So look to see if you pull back into Tuesday's close, and at 153 is where you had that nice gap down right here, right? See if this becomes support now. I'm going to wait and see if this becomes support, if those buyers are no longer there, because anybody that sold at 153 now sees Amazon past 153, and they're like, it may be going higher. So you may start to get buyers. Those sellers may turn into buyers at 153. Anybody that was short at 153 and still has a short position on is going to want to try to get out break even and control that loss. And then try to get some buyers on top of it. Look at the volume, right? If we go to a 2 minute, like, look at that volume. It's clearly to the buy side, I think. If I'm not colorblind, right? You see how all these sellers came in here that day? It's still very low volume. Don't get me wrong, but let's see if that happens. This is a level right here that it sold off from. So I'm gonna watch it with you. It's 153. 153. Thank you for bringing this. Thanks for bringing this up. Shit. Damn it. Hold on. If Amazon goes, I'm gonna be pissed. Because now I gotta fix my phone and shit. What happened is I had a picture-in-picture on here, and I guess it ended, and it came off. So now I gotta try to, like, cheat code it, and come on, you fuck.
Brecht does better when you have greater confidence that you have a very benign economic outcome, where growth is going to be good, and the Fed is likely going to be easing relatively soon. So that kind of perfect world, we're having a little bit of a gut check on that view, even though it certainly has not been disproven yet.
Mike, I wonder if it's just been a collection of things weighing on the broader market. Financials underwhelming on earnings, some issues with healthcare on costs, Boeing and so forth weighing on aerospace, all at a time where it seems like...
Nice job, bro. Yes, take profits, because there is news with Amazon. There's a bit of news, and it's like you're coming at a level where it's going to decide. So once it makes its decision, then you can say, all right, it's obviously holding 153. I want to look to take it up to like 154 or so. Dude, my phone's really pissing me the fuck off. I think they know I'm cheat coding. Fucking God.
Price earnings basis now than they were at the peak 2 years ago, because the earnings are growing so much, and they account for a huge percentage of...
Why is this doing this shit to me, man?
And they act as defense when the market's a little bit uncertain. So
I need to have something going.
everything do we get a more general pullback, 3 to 5%, that resets everything, and then we can move from there?
Yep. The question of when and whether we'll be able to buy on the dip here. Mike, thank you. Staying on the market, our next guest.
If I missed this long, I'm gonna be pissed. So look at that pullback, right? Pullback off of 153.50 was low volume.
Joining us now, UBS Alignment Partners Managing Director Ali McCartney. Thank you for being here, Ali. Good morning. So it's above the street median, but
There we go. I got her. She ain't getting by me, bruh. All right, let me get back in this. All right, so they're at 47 cents now. 47. Look, bro, look at those Teslas. They're at 250 from $1. What's Tesla doing? Tesla's falling out of bed. Oh, Tesla's done, guys. Oh my God, that was a big hitter. It's 150 fucking %. Excuse my language. You gotta be kidding me. I almost had it. I had to stop out of that trade, though. Look, it's really selling off, guys. The volume really came in. What the fuck? You gotta be kidding me. Right here could have been an entry at 214. The retest. I gotta do a better job. I'm sorry, guys. I gotta do a better job. Fuck. I gotta do better. I gotta do better. This could have been an entry right here at 214. I feel like I would have been a bit nervous though, and would have been shy from the trade because of how it reacted. Because of how it reacted when I was in it the first time. So I may have had a bias there. Fuck. $150%. Motherfucker. Damn. And look, it's making it resistance now. That sucks, man. That sucks. I mean, listen, I had to do what I had to do. This is how I make my small, this is how you're able to stay profitable, right? I felt like we had no volume. Okay, I felt like, a break even, roughly a small loss break even was good enough. I did instinctively, I was mixed, right? I was mixed. I'm like, I feel like we're going to go to the downside, but I also will not be surprised if we, the trade would be to the upside. But, mother trucker, that sucks. What did I not see? There's got to be something I didn't see. There's got to be something. See if you get some buyers in here. You should. Let's go back to Amazon. Let's move on.
Some rotating rebalancing to do too, which I think is so much why there's sort of like a buyer's strike right now. It's hard to get excited about anything because earnings season has been slow.
All right, let's see here. Is Amazon going to hold and bring in some volume and break out? Nice job though, Chris. Great job on that. Listen to what this lady's saying. This is good. I'll let you guys know when I get in.
There's some rotating rebalancing to do too, which I think is so much why there's sort of like a buyer's strike right now.
Listen to
it's hard
this.
to get excited about anything because earnings season has been sloppy. We think, as I talked about again, it is going to be sloppy and disparate. And so people are sort of in the show me and playing in the bond market before they're really going to get behind equities. And so to Mike Santoli's point, like we had a great day yesterday. We had been using options to get a better entry point in the market. And yesterday we got hit at 4,700. So that's the kind of things that we're doing to thoughtfully, intentionally, and discreetly increase risk a bit.
Meanwhile, we got Iowa caucuses under our belts.
Yeah.
New Hampshire's
Why
next
are they
week.
still
clients
on
saying,
freaking
I'm gonna
politics?
front-load my activity, whether that's buying or selling in the first half?
It's a really good question. So there is a lot of conversation about what this election means. And,
It doesn't mean shit.
What we say is that
Don't
history
mean
tells
nothing.
us that election years, markets tend to start pricing in or sort of being concerned in about
I wanted
the
to look
second
for a
quarter.
dollar move
I
here
think,
to
we always say
154
this
if we
time
can
is
get it.
different, but I think a lot
I
of
need to start
people
seeing some
economically
volume
and
come in
emotionally
now.
do feel this time is different. So perhaps we've already started to see that in some of the bearishness, or perhaps we start to see that earlier. The conversation is definitely there. But again, it's a little bit of sort of like a bifurcated experience, right? Because if we
So-
end up having a Republican win, we know that historically that's terrific for markets. Deregulation, less of a tax
So what
burden.
I'm looking at here, Chris, and anybody else that's with us, I'm looking at this 15-minute chart, holding high a day, holding Tuesday's close, right? Look at that. It pinned right down into, right here, high a day, right? High a day. You can't really see it here, but on the 15-minute chart, look at that 15-minute chart there. That's pretty nice. It's holding it. It's trying to hold that,
M&A is a huge one.
let's see.
Yeah, the M&A
Opening
is a
price
huge one, and sort of
rally
we work with so
to
many
153.
entrepreneurs that have venture capitalists all around them with
Yeah, right here.
terribly
Sorry.
disparate perspectives on where valuations are and what the next
So it's
step should
holding
be.
this
So
area right here.
conversation and activity is
We'll
as
see what
extreme
happens.
as
See
I've
if it
seen
pulls
in a
back in
while.
one more time,
Obviously has to do with some of the pent-up
and
demand
we attempt to get along. At least I'm going to attempt it.
Meantime, from Wall Street to Washington, a potential government shutdown now just 2 days away, and a key Senate vote coming up in the next hour. Our Emily Wilkins is in D.C. and has been following these.
Oh, is that what we have? That's right. So we have a key Senate vote. I knew that we had it, but
Yeah, Carl, it'll be really interesting. Although I'll say, at least for today, with the Senate is expected to pass that package to temporarily keep the government open.
they said they were going to do it Saturday.
March 1st, the other part of it until March 8th. And we're not expecting that to be too contentious. We're actually expecting after today for Congress really to be on a track to avoid a shutdown.
If they get it done, the market will go higher,
Really
or should go
bipartisan.
higher.
We saw 68 Democrats and Republicans come together earlier this week to really start moving on that process. And then they had to come together again to get a time agreement so they could really move through this, make sure that they were getting it done before Friday. Now, the House could vote as well today. And remember, there's this really unique dynamic there because leaders are planning to use this expedited process that requires 2/3 support. This is similar to last time that we kept the government open through stopgap funding. And this effectively really takes away the ability for, say, hardline conservatives or other sort of small factions to really be able to stop the process because it's bipartisan, because they're taking this route. We do expect it to pass the House. Of course, now we're kicking the can down the road till March, and that means that Congress is moving closer to April. And at the end of April, if Congress has not passed this updated funding, an automatic 1% cut in federal funding is going to occur. That's going to really hit the defense industries. That's going to mean billions less for the Defense Department. Speaker Mike Johnson said yesterday that they need this extra time to allow Congress to individually pass all 12 of those spending bills that make up the overall government funding. He says they don't want to push them all through together. That's right. Listen to what he said yesterday.
This is the way the law is supposed to work, where individual appropriations bills and not one big massive omnibus spending bill are duly negotiated and amended and priorities fought for, and that's what we're doing. We just need a little more time on the calendar to do it.
Guys, the race is now on for the House and the Senate to reconcile both of their 12 spending bills and be able to pass them through. I know that March seems a long way away, but as we've seen,
That's
from Congress
probably
so many
why the
other
markets
times,
haven't
things
moved
tend
yet.
to move very, very quickly, and it won't be long, I think, before we're right back here again.
Oh yeah.
I think that's why the market hasn't really moved, other than Tesla's, because I think they may be waiting to see if this if this spending bill gets passed or does not get passed, right? Because if it doesn't, they still have the credit agencies right at their back. Every time this happens, they're like, yo, like, we're going to downgrade you guys if you guys keep dicking around. And we already know you don't have the money for this. You're not bringing in enough taxes to pay for this stuff. Like, you know, I don't know where the COVID money went, because there was money that was outdated for later source. Like, are they using that? I mean, maybe, I'm sure, but I don't know what, I don't know. So I think maybe the market could be waiting to get word from that. And that may give you a nice bounce for a little bit, because it eases the market. You know, because there's not a government shutdown. And look, man, here we go. We said Apple 50-day moving average. It's going there. Just taking its good old time to get there, but fuck. I was questioning whether or not it was too late to get me some, but it was. I should have taken it when I said it, but I didn't. Look at AMD kind of pulling back here. I don't really want to get cute and try to take a short. There was something I was looking at yesterday. Look at that 520 resistance again. Look at the volume on MSTR today. Finally, we're finding a sector that actually has some volume. Oh my gosh, JP Morgan's falling too. Tesla's bouncing. I want to see where these are at. I'm just curious. I should have looked at it this morning and re-entered it. What? 122. So that's pretty much just under 100% for anybody that was in at 60 cents. In that 60 area, you're pretty much getting there. It's a nice trade in a day and a half. Well, really, actually, 24 hours. 24 hours later, because we got in it at like 11:30 yesterday, and it's almost 11:30 now. All right, let me go back to Amazon and keep things simple. I'm going to go get something to drink, guys. I'll be right back. Watch for JP Morgan. If you start turning this pivot low at 167 or 166 in a resistance.
Last year, record dry powder, the biggest contributor to that week fundraising total. I would also add, Carl, that a lot of private equity, or a lot of the limited partners that invest in private equity funds, were kind of overexposed to this asset class in the run-up in 2021, 2020, when valuations had gone up so much. So they were kind of trying to reallocate, figure out the best way to kind of best places to put their money, given that over-allocation, and they're still clearly working through that. And another contributor to the dry powder, of course, has just been the very tepid market for exiting, the very tepid market for IPOs. A lot of the IPO activity is driven by sponsor-backed exits, as well as just overall exits. And you talk to private equity executives, and they say there's still today in 2024 a disconnect between buyers and sellers in this world. Although, you know, we heard on the earnings calls over the last week or so, a lot of the bank executives expect that activity to pick up, in particular private equity sales, private equity backed IPOs, and so that's something to look out for. Although, of course, that when we hear green shoots, you know,
yes,
we were told about the green shoots last year, and they didn't really happen. So we'll see if this year's better.
Between the retail money on the sideline and the private equity dry powder, maybe you can put those two together and make some kind of put on the market. There's
a lot of money just on the sideline.
Exactly.
A lot of just money out there. Whether they put it to work in certain areas remains to be seen.
Yeah. Meantime, take a look at the regional banks today. First Horizon higher after delivering an earnings beat in Q4. Guidance for the year coming in above consensus. And joining us in a CNBC exclusive this morning is First Horizon CEO Brian Jordan. Brian, great to have you back. Thanks for being with us.
My pleasure. Thanks for having me.
Street's taking a good look at deposit costs, CET1 ratio, loan growth, pretty much above peers, at least what we've gotten so far, and wondering how you're managing to put all that together.
All right, let's see what she does. This volume isn't picking up.
Tremendous amount of momentum.
It's kind of lunchtime.
I
don't know what to do.
Our bankers, our team have done a fantastic job.
I didn't take it.
We did I think, broadly speaking, a very good job of trying
Just
to
picking up Abby.
We had very good deposit growth in
Come on. I know you're hungry. I'm going to go give you some more food. I'm going to get something to drink. I'll be right back.
compensating our clients fairly and at the same time funding our
Yeah, that's good.
Our capital levels have been strong.
Like I said, you got to think about.
I think we're well positioned with a strong.
Yeah, you too, Chris. You have it going, man. Like I said, man, you got to look. Like make sure you're seeing it. Like that's a good analysis here, right? You got this resistance level up here, but you know, at the end of the day, what's really going on is you're taking back. You reclaimed Tuesday's low, or I'm sorry, Tuesday's close. Right, you got, where's the volume at, right? You got that, you broke through that, you filled the gap, right? You pulled back to it, now you're holding it, see if you get that extension, and where is the real volume? Yeah, or not the volume, I'm sorry, the real resistance. The real resistance is up here, right? It's up here at 154, and then it's up here at 155, and really 156 if you're lucky. So pretty much every dollar. That's your real resistance up there, 155, 50, 156. This is a bit of support and resistance level here too at 154. So maybe you try to get to that, and that's where the sellers step in at. You know, you just have to wait and see. So, let me get something to drink. I'll be right back. But that's so Tesla might be bouncing, guys. That was 150% that I missed. That was a tough trade, guys. I'm telling you, it was tough to hang in that. It was giving me mixed signals. So, yes, it's getting the bounce off of this level here at 210.50. See it. Look, it's starting to run out of steam right now. What is it doing? It's turning yesterday's lows into resistance.
What about, as we kind of teased this segment as being 10 months post the March regional bank crisis, I see your net charge-offs came in around 36 million. That was lighter than estimates. Non-performing loans, 462 million. As you kind of assess the marketplace right now and some of the takeaways almost a year after the Silicon Valley Bank, Signature Bank, First Republic, what happened with those last March, how would you assess kind of the quality of the sector in 2024?
Yeah, I think, there's a sense that there was a regional banking crisis in the spring, and I would argue that it was more a crisis of a few banks, and it's more business model related than it was anything in my view. Credit quality has continued to be pretty good across the industry. We've seen overall stability in credit quality.
That's a nice low volume bounce to yesterday's close. Man, I had to fight for that trade too. That pisses me off.
And we feel very, very good about the outlook for credit in
Look how low the volume is. Low volume bounce back. This would be the area if you're looking. If you guys are looking to try to attempt a trade, just right here at this area. That's pretty much your stop loss, but you're regaining. You got to see where your 9 EMA is on different time frames, with and without pre-market. Like, you need to know where it's at. Because I can tell you right now, if you take pre-market off, this 15-minute 9 EMA probably up here somewhere. So Yeah, that's a nice trade. See if it continues to reject it. So that's 180, right? They went from, we got our entry on this was, you could have got in at 90 cents to $1. My entry was $1, and they went to 250. That's over 150%. It was tough, man. That was a tough trade. I probably just didn't think the markets were moving, because you got to think, right? I'm looking at the SPY. I'm looking at, like, I'm just trying to, I'm looking at the overall markets, and I'm like, we got a little bit of strength in Apple. Tesla's just not giving it to us. We pulled back to this support level that was prior resistance here yesterday, and it just, I had to take that break even small loss, because wasn't sure that it was going to give it to me. I would much rather that than this thing pop higher and try to go to 220, 225, and you just get, how Tesla is. It'll just break out quick. I'll be right back. I need to get something to drink, guys. I'm not done with today. I know it's 11 o'clock coming into lunchtime here. Let's keep an eye on this. Keep an eye on this right here. See what she does. Markets are still flat, roughly. Well, we're up, 0.5% from yesterday's close, but intraday, it's not really doing anything. So, see you, Chris. I appreciate you stopping by, bro. If you could hit the like button or commenting's fine too. Don't even worry about it. It's all good.
Or call 800-627-1866. That's 800-627-1866. Call now.
During my entire life.
Oh, that's cool. That's awesome. That's cool.
Around here. How can I stay out of the sun? So
That's awesome, man. Yeah, I think we got about 4 or 5. We got about 4 or 5 inches.
NBC.
We are about 2 hours into trading. Let's go post to post with Bob Pisani for a look at what's moving today, Bob.
Leslie, we're up 22 on the S&P, about flat for the year on the S&P 500, but tech's leading the way. You heard about Taiwan Semi earnings above expectations, new high for that, and all the semis are moving. AMD is at a new high. The equipment makers like KLA, Tencor, Lam Research are all doing well, and these software names have continued the rally that they started in November and December. I mean, Bill McDermott has got to be ecstatic. This is a new high for ServiceNow, historic high. up 5% year to date, another 2% today. Salesforce continues. It's been a big leader in the Dow Jones Industrial Average. It's up 4% year to date. That's doing well. Infosys is doing well on top of that. So it's really tech that's leading the charge. The regional banks are drooping today. U.S. Bancorp had earnings out recently, but they're all down. I'll show you why here. Pivot around here. Just be careful here. Discover is a digital bank, essentially. And I love Discover because this is the old Diners Club people. Diners Club was the first credit card in the United States, 1950. Amex came in 59, and Discover bought the Diners Club in 2008. And essentially, it's a digital bank. So you want to look at things like loan growth, flattish generally. I think the reason that it's down, it's impacting some of the other banks, is we're getting a slightly larger build for reserves than people had anticipated. So you want to look at loan growth, reserves, you want to look at interest income and non-interest income. So far, it's been fairly boring for most of the banks, but when you get reserve builds a little bit stronger than anticipated, that's going to be an issue. Finally, just want to note, we're going to be a big IPO tomorrow on the NASDAQ. This is one of the first big ones of the year here. Kaspi, believe it or not, this is a Kazakhstan-based super app. It's kind of like Tencent. You can do online banking and e-commerce. Fairly significant deal. It's going to be close to a $1 billion deal, $18 billion market cap. That'll be trading on the NASDAQ, scheduled for tomorrow. Guys, back to you.
All right, Bob, we'll check in a little while. Bob Pisani. Let's get a news update this morning with Silvana Henao. Hi, Silvana.
Hey, Carl, good morning. Hunter Biden's attorney is on Capitol Hill this morning. Sources tell NBC News he is there to sift for a transcribed interview with House Oversight, Judiciary, and Ways and Means Committee staff. Kevin Morris received the request for the closed-door interview in November as part of the Republican-led impeachment inquiry into President Biden, advising the president's son in 2020. Japan signed an agreement with the U.S. today to buy up to 400 Tomahawk cruise missiles. It comes as part of a push from Japan's prime minister to double annual defense spending over concerns of rising security threats from neighbors China and North Korea. Japan is on track to be the world's third largest military spender, only behind the U.S. and China. And Meta is adding a feature to Instagram that aims to get teens to turn off their phones and go to sleep. The social media giant will start sending users under 18 something called nighttime nudges. They'll pop up on the app if they've been online for more than 10 minutes late at night, Carl. I think we could all use that.
I know one household that definitely will use that. That is amazing.
Yeah.
Thanks, Silvana.
You got it.
It's interesting to watch Instagram sort of know their audience.
That's right. Although I feel like, why limit it at 18? That is definitely something I could use.
Meantime, arguably the call of the day. After 3 downgrades to start the year, Apple gets an upgrade to buy over at B of A. Stock gets a 2% bump, and the analyst behind that call going to join us after the break.
All right.
Shares of Disney up amid a brewing proxy fight
There's
with
the
Nelson
pop.
Peltz
Here
and
would
Trian.
be
Peltz
the
joined Squawk on
next
the Street
area.
earlier to talk about his vision for Disney and where he thinks improvements can be made.
Right there.
We filed our preliminary proxy statement, and we opening our website, which is Restore the Magic. And we did all that, Jim, because we love Disney. You know, we love Disney, and it saddens me that the board didn't welcome me, because our goal is just to work with them, to help them, and to help them make the company better. They need more capital invested. They need more capital invested now because the competition is getting keener. This board, from Bob to every independent director, has underperformed the S&P on every measure. 1 year, 3 years, 5 years, 10 years. How much more do we have to go? How long do we have to continue to suffer with this?
Let me ask you this, Peltz. How about we just say, is Disney a viable company? How about it's not the management? How about that? Who's to say that just Disney isn't working right now? All right, it's a theme park. Like, where is the growth? You guys. Sorry, that was cold. The streaming platform thing worked for a little bit. That's done with. All right, unless you're going to start making phones, useful things that people use, like, what are you going to do? I mean, I know they do movies and stuff like that, but I think Disney has to do more with the business model itself than anything else. I mean, am I wrong? Am I wrong in that? And this just isn't a Rob or Bob, whatever the hell his name is, Bob Iger.
Percent upside. They see AI features
it's my
helping
opinion.
drive some future iPhone sales as consumers need to upgrade their hardware to keep up. The analyst behind that call joins us this morning, BofA's Wamsi Mohan. Wamsi, welcome back. Good to have you.
We're going to listen to him. Listen to him real quick. This is institutional money. Pick his brain. We're going to go through the indexes. It looks like Disney's going higher. I think Boeing's going higher, so that means the Dow's going higher. And the Dow was down yesterday.
Versus the S&P.
I think
Just
the
talk
less.
about why now.
Yeah, thanks, Carl. Look, we are
It was the
very
Q's
centrally
Dow,
driven
and SPY
by
led
our
to the
belief
downside.
That estimate revisions are what ultimately drive stock performance. We downgraded the stock in September of 2022 when we were standing at much more elevated estimates at $6.50 in Apple EPS, and we thought that they would do $6. Sure enough, they ended up doing something closer to $6 in earnings. As we stand here today, I think the situation and outlook is quite different. We're standing on the cusp of major upgrade cycles for the iPhone, which should drive positive estimate revision cycle. Secondarily, we think that services has got extremely easy comps, and there's a whole plethora of new services, not just for Gen AI, but also on top of the Vision Pro over time. That
Look
will
at the
build
Qs just
to drive
going.
Services
They're
momentum
just going.
to be much stronger. So our view is that we're standing here looking at positive estimate revisions over the next 2 years, and that makes the stock extremely compelling, especially after a significant period
Is
of
that
underperformance
new
all the way
highs?
from July of last year.
Yeah, you go through some of those numbers. You talk about margins being stable, vertical integration. You also say that legal risks are manageable. I kind of raised some eyebrows.
we
Why do you
pulled
think
right
that
in
is?
here.
Because they can afford to pay any fine? There's
pulled
no
right
risk
into
to
that
changes
level.
to the model?
No, Carl, I think that the viewpoint is really that we have to take it sort of case by case, right? So in the Google DOJ litigation, for instance, where they get very high margin contribution from Google, $18-20 billion annually, right? This is a significant amount that they get. Now, in an instance where the ruling, let's say, goes against Google, we think that Apple has relationships with other search partners where the economics are actually superior to what they have with Google. And in some ways, we think of the Google agreement partially as a fixed component and partially as a variable component that's based on their TAC rate or take rate. So when you think about it through that perspective, it actually might be negative from a Google perspective. The ruling were to be that for them, but from an Apple perspective, it could end up actually putting them in a better position in the long run and being positive. So you kind of have to dissect each individual case. There's a lot of noise about Europe DMA, which is another risk, right? And when you think about what Europe DMA could do and couldn't do, yes, you might have an alternate app store and there's the risk of side loading, but Apple has many levers. I mean, if you're going off the main app store and trying to buy something, you might compromise on the privacy, on the security, on the integrity of your data. Like, there's so many things to worry about that I think consumer choice is ultimately going to bring them back to Apple. So it just is a case-by-case basis, and if you look at all the legal risks that stand in what we can look at today, I just think they're all ultimately somewhat manageable. Not to dismiss any of them outright, but I think when we look at the puts and takes, we feel pretty good about it.
What about China weakness? Do you think that they've been able to make more inroads in other areas, other geographic pockets to make up for some weakness in China?
Yeah, Leslie, look, I mean, China is obviously being a big market. It's 44, 45 million units. The U.S. market's obviously larger than that. There is weakness in China. I think we've come here before and said, look, I mean, Huawei is something that's taking share, maybe 4 or 5 million units a year. I think that's continuing. But the risk is manageable. And why is that? If you look at the subtotal of, like, you know, all the iPhones that are sold, between China and India, let's call it, between China and the U.S., there's about 100 million units sold.
The queues are just on a runway.
More units that are sold globally.
They're just killing it, guys. The queues are killing it.
Highlighted a lot of countries that people don't
So
really
what does that mean? We want to look to get long tech.
But they are.
All right, so we got to look at tech names.
A plethora of countries that are selling.
They're gassing
1 to
right
10
now.
million units, each of which could grow, 10, 15, 20, 30%. And cumulatively, that does make up for weakness in China. And frankly, the U.S. market's not that bad either. So when we put that all together, yes, we acknowledge that there is weakness in China.
Look, getting ready to make a new high, guys.
That's transitory.
Getting ready to make a new high.
Structural overhang over the long term. It could move numbers a little bit in the March quarter, but that
Come
said,
here, love.
there
Come
are
on. Come
other
up here,
places where they could
please.
do much better and offset that weakness. And remember, from a reported number perspective, you also have foreign exchange that's moving in your favor as well right now. So there are plenty of offsets and puts and takes.
Hey, finally, Wamsi, I imagine you've got a chance to try the Vision Pro. I had my first chance yesterday. Pre-orders begin tomorrow. I know it's going to be a small run to start, and it's expensive, but how do you think about folding that into your model, at least?
Yeah, no, it's a great point. I'm going to be right in line over there trying to get one tomorrow morning. Look, I think that when we look at sort of the Vision Pro, we have to look at it as a Gen 1 device, right? Like, the same thing happened with the watch. The same thing happened with AirPods. The Gen 1 device is something that tests the market. It's for the enthusiasts. It's for people who kind of are Apple loyalists and purists who want to try the next greatest thing. At $3,500, I still think it's going to be sold out, like, instantaneously, but at $3,500, right, what are you actually getting? You're getting a device that sort of opens up to this new concept of spatial computing.
Ooh, rejection. All right, I think we have Fed members coming out to speak.
That is where we see the long tail opportunity. I mean, you've got 8 million sets of VR sets that are being sold annually at a $400 price point. Apple could get to a $1,500 to $2,000 price point comparable to Macs. We think that they could be selling between 10 to 20 million units of this. So it's a matter of time. It's a matter of price points coming down. It's a Gen 1 product. We got to keep that in mind.
Sorry, I didn't have the live chat up. So if you guys have any questions or anything, holla at me.
Actually exceed what the iPad business is purely in hardware revenues.
You know, if you guys want to talk about anything, if you guys want to go over charts,
Wamsi,
anything,
as we said,
you know.
Your call has historically been a bit of a fulcrum for the stock. We'll definitely watch it closely. Thanks for the time.
All right, so Qs are just on a tear. Let's go look at the heat map. All right, let's go look at the heat map and see if we can see which names are really outperforming today. A lot of semiconductors. The equipment sector, it's semis and communication services, but more so the internet content and information. I gotta take my little girl back to the vet. Boeing is up 3%. Let's look at the Dow. Oh, my chest is hurting me. So the Dow is trying to bounce Abby, come on. She's knocking stuff off my desk, and she knocked off my pens and shit. She's doing it on purpose. So really, I would look at names like ARM, right? TSM, those semis because of Taiwan Semiconductors, and look, it bounced off that level. And it's trying to make that support. Wow. That was a missed trade opportunity there. And we looked at it on that pivot low. And there goes Google. There goes Google. Fuck. Amazon's not really getting out of its own way either. So we're being led by tech today. Keep that in your back pocket. Like, understand that. So if you're trying to find trades, right, understand what's going on. You're getting outperformance right now with tech. And if we were to back it up, right, that's a double bottom dip being bought on Apple. All right, it's got room. Obviously, it's at the 50-day, but if it can, you know, kind of hang on and get above it and hold it, then your next stop is 190. You'll be right back to 190 before you know it, possibly. I don't think Microsoft's doing really much of anything. All right, and we'll look at AMD. Same thing. It's pulling back down into this resistance level, which could be a buyable opportunity at 160. All right, I may think about a buy at 160, guys. I might. It might not give it to you. It may just give you the 162. So 162. So there's that. AMD. Let's look at Nvidia. And like I said, it's more so Nvidia is doing really well, but it's more of your whatchamacallit, the equipment and materials for your semis, right? Intel, Qualcomm, ARM, NXPI, MU, AMD on. All up. TSM is your leader today. All right, had earnings. Did okay on earnings. In my opinion, though, I think the reason why TSM is up like it is because of their raised dividend. Oh, I still have not looked at Boeing. So energy is still red. Energy's been getting slaughtered, which has been actually an idea. I don't know how to do this. Hopefully you guys can hear me. Oxy. All right, Oxy. Why did it not do it? Oxy. What's going on? Dude. OXY. Alright, so Oxy Petroleum is getting ready. I feel like it's getting ready to fall out of bed. So here's a nice trade idea you guys can keep your eye on. Because she is either going to get taken public by Berkshire Hathaway, or not get taken public, I'm sorry. It's either going to go private at a certain price, all right, which is higher, or two, it's getting ready to fall out of bed. Because what you have here is a really long ascending wedge. All right. It's really just flat, right? It's a flat bottom making lower highs. So Burke Burke and Warren are holding this thing up. So my thought is either this is the start of the flag right here, okay? All right, so that's that, which I don't think is the case, and I'm going to show you why. All right, and what is this? 75.50, 75. Yeah, we'll just go with that. Yep. So we take this and we look for either it's going to have to break out and do it here. It doesn't matter, whichever. We can just say right there. And that's 130. All right. It's not going there. It may not go there. But let me show you the next one, okay? This could possibly be the fact. And what I'm thinking is that this could turn into a buyout where it goes private, guys. All right, they're going to own so much, and they take it private, and we're already long. We're already long this name, so I'm thinking either it's going to go higher, or this level is going to break, and we're going to own it at a nice price, and we're going to get long, or I'm going to get long to try and get in for the buyout. And look at that, right? Isn't that funny? Takes you where? Right to all-time highs. That's a move to move. Or we're going to break this level, and it's going to be back down to 40 bucks. With the way fuel is right now, the price of gas, the price of oil and stuff, I don't think that's going to be the case. Because I still think there's a profit there to be had. At anything over $30 to $40 a barrel, they're profitable, right? They're making decent money. Not decent, but good money. I mean, it all depends on what good money is to you. Some people, good money may mean something different, you know? So, this could be a double bottom here, right? This could be a double bottom on the weekly. I'm really wondering if and you guys are hearing this first. Let's see if in the next 6 to 8 months, if this plays out, that they decide to take this name private, and we, you know, I think it might be worth at these prices, because we're going to know quick, you know, if like a 70 leap, I know it's way out of the money, you know, something cheap that gives you time, that still says, hey, if they do, damn it, if they do take this private, you know, at what price? They'll probably pay up for it. So this is a trade that's in the back of my mind, and I wanted to kind of, I guess, tell you guys, say you guys, you know, maybe you could tell somebody else, and then it happens, and you guys take credit for it and look cool. Maybe you need a girl. Be like, yeah, I knew Burke was going to sell that shit. I knew Warren was taking that shit private the whole time. Alright? So, that is an idea that I'm watching for Oxy Petroleum. All right, we got another one on today, guys. Look.
Price slow fourth quarter. Now, as we're reaching peak levels, we'll see that peak not just because of changes in the underlying deposit rates, but ultimately because of our mix and paying off higher cost wholesale funding. If rates were to stay higher for longer, it's actually a good thing for Synovus. We're fairly neutral to the front end of the curve, so short run, it would be good for our NII for 2024. But even if the Fed were to start to ease, it would have a short-term impact in the compression of our margin. But let's say over a 12-month period through the cycle, being neutral to the front of the curve, our margin, although it would contract a bit, would just return to the pre-easing NIM level. So, we really try to build a business model that is not predicated on winning or losing when rates move, but rather winning from taking market share and growing our client relationships.
What about the asset side of the balance sheet in terms of credit quality? We spoke yesterday with Terry Turner of Pinnacle Financial, which also operates in the South, and he said that consumer and business environment down in the South is stronger than the rest of the country, and that's why their guidance wasn't pricing in much in the way of credit deterioration. Are you seeing the same phenomenon in the markets that you serve?
Absolutely. The Southeast is insulated from some of the challenges that the rest of the United States has seen. And there's some factors, population inflow, household income growth, and just the overall demographics. From a credit standpoint, I think it's important. When we look at our last year, we had total charge-offs right around 28 basis points.
Yo,
And if you
that's
look
so
at that
true.
relative to the last 5 years,
They
that
said
was about
half the
20
people
basis
in
points. So
here
yes, we've
are
seen a
not
slight
buying
increase over
stock
what we've seen, but it's important to note
because
those are
they
coming
don't
off
know how to hit the
historically
like
very
button.
low
That's
levels.
what it was.
So we do expect credit costs to
That's
increase. The
hilarious
Southeast is
because
gonna
y'all
be
ain't gonna
one of
know
the
what we're
reasons that we
long or
continue to
short
perform very well.
unless we hit the like
Secondarily,
button.
we really
I'm
diversified
just
our
playing.
balance
That is
sheet
funny
over the
though.
last
That's
10
hilarious.
years to into multiple industries across multiple asset classes. So that will
I don't
help
know,
with
man. I got to
any
get
sort
something
of,
accomplished
credit
here.
tension
I
that
got to
we're
find
seeing.
either something to trade real quick, or I got to like take a pause on the markets, let it float around, and come back to it this afternoon and get something else done. I'm going to make that decision right now. Okay, it's 12 o'clock, so there. Look, Tesla. What happened? It rejected. It did the old ejectocito, because it's still reclaiming yesterday's low.
Them to go higher. Can you give us any color about kind of where you're seeing
It is still reclaiming
stronger borrower capacity versus those that look to be showing potentially some cracks after we've been in this higher interest rate environment for quite some time now?
We do a survey.
We were on Google. I had a weird feeling that Google was a play today, but I said, nah, let me go to Tesla.
So they have the ability to borrow money.
Man, it's
with
really
rates being
easy
higher,
right
they
now.
draw down their lines, they're using their cash, and so I think
It's really easy right now. He's just talking about the company he works at, or he doesn't. Either he's a CEO or something there. It's really easy right now to like kick myself in the ass and start thinking like, why didn't I give Tesla a little bit more room to be wrong? Right, I'm starting because I don't want the day to end and me not make some type of progress and make money at the end of the day. So it's really easy psychologically, which I am not how do I say this? Like, I'm not overly worried about it. I'll be okay. I know tomorrow and later we can make something happen, but I had a great day yesterday. But it's like, seeing that Tesla did what it did, and then seeing what Google did what it did. I don't know. That's all. See, I just psychologically, I can see myself trying to drift there. Like, man, I missed these moves again today. I missed these moves today, and I didn't really miss them. I didn't hang on enough, I guess you could say. The volume wasn't there. I don't know. I don't know. That's all. I can just see myself going towards that destination of, So I just got to turn it around, right? Maybe I go to the indexes. Make it easy. Just go scalp the shit out of the SPY and the Qs. Right? But that right there as well is, in a way, kind of just trading just to trade. Right? So I am going to go through a few names and figure out what it is I'm going to do. I may go ahead and I got to post a few things. I got to make a few phone calls so you guys can hang out with me while I work if you want. I got a couple things that I want to do and get done. Yeah, I may just do that for the time being.
S&P 4760 appears to be the number we're going to hug today. With most of the data out of the way, we're going to get Bostic twice today as the Fed speak continues before we move on to things like UMISH tomorrow.
Yeah, and then winners today, information technology, communication services, and industrial. So definitely seeing kind of a reversal of what we experienced yesterday.
Yeah, keep an eye on that as we close out the week tomorrow.
Anybody
Let's get to Courtney Reagan in the half.
wanting to buy a house, like Miami, does anybody want to get together and make some damn money? If we do end up getting these rate cuts and get our little 10-15%, inbox me, let me know. All right, I would like to make some moves. Let's go make some damn money. All right, let's get something going. If you don't have anything going for you and you want to get something going, holla at your boy. Let's go. All right. You got people that are also willing and able around you if you just reach out. There's things you want to do in life. Got to do it. Life's too short. All right. If you don't attempt or even try and you're just satisfied with everything that you have, that's fine. That's good. Good for you. All right, we're not satisfied over here because you know what, I was taught that greed is actually good. And it's okay to like nice things. It's okay to have nice things. It's okay to like nice things. Work for it. Go get it, you know? The venture to getting it also is the journey there too is part of the experience. So if anyone is looking to just, you know, see if we can't pick up a place or two and end of the year, right? I'm telling you guys right now, in my opinion, again, I'm going to say it again, in my opinion, I think that with this bank term funding program coming to an end, we're going to see banks again. Let's just say they don't cut. The end of February, beginning of March 8th, March 11th, is when that thing ends. January, February, March, April, May, June, July, August. I'm telling you, well, we start getting into the fall, I guarantee you, with like 6 to 8 months, and rates are still at 5, 5.25. If they're at 5.5 because the labor market hasn't cooled off, I don't think they'll be at 5.5. You're going to see them start to pull it down a bit, but they're not going to go below 5 if they don't have to. You're going to see banks again, and that's going to be, in my opinion, why they cut. I think the Fed cuts because there's still a banking depositing issue. There's still a money issue with the banks, and they need to continue with the program that gives them a reason to cut rates. All right, maybe unemployment starts to tick up a little bit, but if the unemployment does not tick up, rates are not going to go down. All right, you need the labor market to soften. We need the labor market to soften. This idea that you can wipe $7 trillion off the map, not all of it, but that you can get rid of, you know, out of the $7 trillion, we'll say even like a quarter of it, a half of it. In 2 years, it's just crazy to think that, because what happens is those rates start to eat, right? The market starts to eat. Asset prices start to devalue, so therefore market caps of companies and homes, they're not worth as much. So that is eating at value of assets, right? And that's how some of the money / liquidity gets burned out of the system, other than physically losing the cash because of the volatility that's in the markets. But they did $7 trillion, guys. It's going to take a while for that money to get burnt up, per se, right? To dry up.
I want to pull back on the beginning of your comments with Taiwan Semi being so important globally. Why then is that a name you don't own? Because it's overbought? Because it's so stretched?
Well, something could be important, but not necessarily be where I want my investment dollars.
Okay, sure,
it's
fair.
important strategically,
Their comments matter. Their guidance sets the tone. And the way that they think about the roadmap is how all of the other companies in the ecosystem, software included,
Have you guys
to think
ever?
about the roadmap. So that's
Did
why
you
they're
guys
important.
know, real quick? Did you guys know that you can go see, if you're ever curious how institutional money, or like like hedge funds and stuff, how they manage their portfolios? Have you guys ever thought about? Here goes the spy, guys. Hold on. It's definitely Bostic. Hold on.
Maybe they're seeing something from China. I mean, maybe they're seeing some strength that the people talk about recession would be good to take a strong look at and say, gosh, you know, maybe with strong employment, semiconductors, et cetera, we've got a market situation and fundamentals that can sustain higher levels.
Very good points. I remember, of course, when we learned how important chips were to us when there was that chip shortage, and then we realized how many things.
I just
really
used
they
this.
were a
I'm
part
actually going
of.
to
I mean, was it
look
so
at
funny
something
because
different.
this tech trade obviously leading the way again today. We're talking about semis as a part of it, but
hold on.
I thought we were supposed to be moving on from tech. I thought, you know, we were supposed to be looking at other things and expanding. It's like that quote from Brokeback Mountain. I can't quit you. I wish I knew how to quit you.
Yeah. Well, I mean, look, this
Really?
is a familiar pattern that we've seen in markets over the last year where
That was my, like, what?
She's going nuts over here.
everybody calm down. Very serious.
I'm
stuff to
glad I
talk
wasn't
about.
the only one who was like,
This
what?
is a familiar pattern that we've seen
mean,
in
it's all
markets
good,
over
you
the
know.
last year where tech continues to be the thing that comes off the mat when we're worried about other stuff. If you look at some of the broad indices, though, today, obviously the NASDAQ is up pretty strongly, and you've got some of these large cap tech names, again, leading the pack. But look at small
I
caps
love
down
Liz.
today. You've got the Dow
Liz is the
flattish to
best.
down.
She's my favorite.
These are
She's
not
she's probably my favorite.
These are not cyclical signals, right, on a broad-based
She
level.
is
So
my
I think
favorite.
right now
Liz
we're
is
just
my
dealing with a
favorite.
situation where you've got some good news, and that's okay. The market literally has been searching for good news, a reason to go higher or a reason to move in one direction or another. We've gotten some good news on a couple different names. That's okay, and it's okay for that to drive momentum for a day. I still don't think that big tech is going to be the leader like it was last year. Extremes don't tend to repeat themselves, and that bifurcation that we had and the spread between the best performing sectors and the worst performing sectors was huge. I don't think that's going to repeat, but that doesn't mean that big tech is going to be a loser this year.
Yeah, it's hard to see a scenario in which it would be a loser. I agree with that. That
So
brings
what's
us
gonna
really
lead
all
then?
together to our call
If
of the
it
day,
ain't
the
tech?
biggest tech of all, the tech, Apple having its
What's that? Like steel? What you think? United Steel or something's going to construction, right? Pave.
This is an upgrade.
Like I could say Amazon, right? You think banks are going to lead healthcare? If it's not tech, what would it be? Like seriously, you think Walmart, Target, Dollar Store, Home Depot are going to give you the type of gains that the Qs are going to give you? I think a lot of people are saying that tech is not going to lead. A lot of people have been saying that. And that there is the reason why tech will lead. Not lead, but give you more gains. Right? I mean, obviously, I'm sure it's going to be the Dow that leads the market higher or lower, but like it also doesn't sell off, right? So it doesn't have very far to go to recover. But look at that move.
Josh's
Wow.
70 RSI. Things can stay overbought for a little while, but Nvidia's
So,
breaking out. Apple will now break out. When these things break out,
I
when these things are trending, they're going
I
to
disagree, and I wish I could get Snowflake down at a reasonable price to buy it. It may be at a reasonable price right now, but I still think I could get this thing a bit lower. I would like to get it. I would like to get it sub 100, like if not $100, but I doubt that's going to happen. I doubt they're going to give us that. So,
For those that haven't seen the note,
I mean, I guess I did have a chance at 110.
growth in services as install base gets better monetized. And then also, I thought that this was really interesting
CCGT.
about the belief that there's a stronger multi-year iPhone upgrade cycle driven by
CC
the need for the latest hardware to enable
SE.
generative AI features to be introduced in 24
All right, so
and Carrie,
Snowflake is
sort of
pulling
nodding your
back
head as Bill
today.
was talking, so jump on in.
Oh, look at that, guys. That's a nice break retest of 192. This could be a really nice trade here. This could be a really nice trade.
Anything that points to the iPhone growing, because face it.
What are some ideas that you guys have? If you guys could comment, let us know like some of the names you're looking at. This looks pretty good.
Apple, they tend to be good for
Man,
many,
there's
in
support
the
here though,
ecosphere.
kinda.
Now, we own it. We don't own it anything close to the weight. If you want to be overweight Apple, you're owning an 8% position in your portfolio.
185.
Very few people do. We're about half weighted. That's
184.50.
still a large percent of a portfolio that has 30-ish names. But it's good for the other names like Google. It's good for Meta. It's good for Amazon. Just the fact that things seem to be more positive than what the market had expected. It does not, however, make Apple a blowout name where it's gonna, it's breaking out. I mean, it hasn't really broken over its 200-day moving average. It might be breaking out. We'll see what happens. But it's definitely better than the way people were feeling 2 weeks ago.
Josh, do you think that it can hit 225 from about 208 where it was before this upgrade came out?
I think it can. I just don't think it has to happen this year in order for long-term investors to be satisfied. We've probably just gotten 2 years worth of stock performance out of this thing in like the last 9 months. So from my
This is a trend here. Like you guys can see this cup and handle we've been talking about. But this cup, right? This cup here with a rising handle is usually a bearish thing. And look, it sold off. If you don't see it, right here, right? This is the cup. That's your cup, and then you have a rising handle there, and then it fell out of bed. It's like a pan, and you're grabbing it, and you're flipping it.
They're alone amongst the Mag 7 probably. They're the only name that hasn't gotten any benefit whatsoever in the valuation because of anything AI related. That could change on a dime. My friend Dan Ives is talking about the possibility of a separate AI app store being announced at some point this summer. I have no idea if that's going to happen. I'm just saying if it does, that's probably not in the stock. The second thing, and I think this is worth exploring a little bit further later on, is
Dan Ives is a tech guy. He's, I follow him on Twitter and stuff. I like Dan Ives.
Developers are going to buy these things because developers understand that at a certain
I think
point,
if it's
they
not
will
technology,
nail
then what is
They
it?
will make this a must-have
Then what is it?
product,
It's just easy
and
to say
every
that you don't think
developer,
technology
every app,
leads.
They're going to need to have some version.
But I can
that's
relate.
included
Pretty
in the
much
device.
80% of the
So
companies
I
you
think
could
that's
kind of
part of the
consider them
story where
tech.
people are going to laugh at it when it comes out. They're going to mock the $3,500. They're going to laugh at the form factor, at how annoying it is to get fitted for it. That cycle will play out, and then you'll see the articles start to turn. Somebody will say, oh, wait, actually, it turns out this is kind of cool. You're going to want to be in the stock for this. That's all I'm going to tell you.
We all laughed at the AirPods initially, I think, and now we all wear them, right? Now it does feel kind of cool. Liz, I mean, obviously Apple is so important to the broader tech ecosystem, and so when you get an upgrade after 3 downgrades, what's the read-through for the rest of tech?
Well, I mean, Apple is one of those companies that's a bellwether just for sentiment in general, and obviously very tied to the consumer and consumer spending and what the consumer is willing to do.
Look at
as far as
Snowflake,
their
man. It's
hardware
really
goes.
selling off.
I think what's going to happen this year is you're going to see a lot of separation among those big cap names. They're not all going to act the same, particularly in an environment where yields are volatile, and they really have to come through with the fundamentals. So I think to Josh's point, look, these are long-term holdings. You can't believe in the American economy without believing in technology, particularly the companies that have already proved to be winners in the space. So I think you can hold them, but I would lower your expectations, especially based on valuations for a lot of these right now. Valuations would suggest that forward returns are going to be muted in the trades that are crowded. So lower your expectations in the near term and start to think about where you might be able to capitalize on tech in smaller cap names in other places around those industries.
Wouldn't it be nice if we saw a little bit of broadening out, have a little bit more players on the field?
If it could stick around.
Exactly, exactly. Let's
I mean,
finish
I
with the
guess you
broader
could
market
point
here.
to a
Treasury yields
downgrade,
are higher. The
but for
10-year
every
is at its highest
downgrade, there's
level of the year.
upgrades. It's
Yeah,
just
I know. We're
who
only
does it
in
come
mid-January.
from?
And March rate probabilities do continue to come down. The next Fed meeting is 2 weeks away. Bill, what are your expectations for what the Fed will do? It looks like potentially moving at least away a little bit from the more surety or more certainty of those rate cuts.
Yeah, it's. I mean, I think fourth quarter, if we go up there in the 10-year, is going to be a ceiling. Unless something drastically changes, I think as we move into March, it's going to be somewhat of a coin flip. However, the Fed is talking off of it. I'm seeing comments right now, I think, from Fed President Bostic saying there's no rate cuts until the third quarter. So I mean, the markets are reacting. I mean, we're going to continue to play this game where the Fed's going to continue to push it back. And there's probabilities, yeah, they probably got ahead of themselves with 7 rate cuts as coming through December into January. But as we evolve, I do think the March is going to stay on the table. The question is going to be jobs. And the jobless claims print today, 187,000. I think that's going to be a low print for weeks or months to come. I think that right there, some of the revisions and whatnot takes place around the turn of the year. Not surprised that December's non-farm payroll report was strong. Not surprised that we're seeing some jobless claims stay pretty low right now. I expect a lot of that to change in the coming weeks. We're seeing deterioration in New York manufacturing, Philly Fed manufacturing. So I think the economy, I don't expect a recession. I think we'll just see some slower growth, but steady slower growth.
Okay, fair enough. I want to actually switch gears if we can to Phil LeBeau. He's got a news alert for us on Spirit Airlines. Phil, what's going on?
The Wall Street Journal is reporting that Spirit Airlines is considering its financial options. They are not saying restructuring. They are not mentioning bankruptcy, but that has been the concern that has been floating around among investors about whether or not Spirit Airlines, now that the JetBlue merger has been blocked, has the financial wherewithal in order to continue, or does it have to restructure in bankruptcy? Through Chapter 11. Helene Becker at Cowen mentioned that possibility immediately after the proposed merger was blocked. She also said, look, they could ultimately go from Chapter 11 down to Chapter 7 liquidation. They don't have a whole lot of assets that they can turn around and sell or leverage in certain fashions because their unencumbered aircraft were then put part of a lease buyback, raised about $400 million recently in the last couple of months. So what you're looking at right now is more pressure on Spirit Airlines, down another 23%. And again, the Wall Street Journal reporting that the company is looking at its financial options. Guys, I'll send it back to you.
Well, Phil, thank you very much. It's a big move, important move, and a name that continues to make headlines. Carrie, what do you make of something like this? Not entirely surprising, I guess, that they're looking at options, right? What are they going to do?
Well, they don't have many options.
Yeah.
And I don't know what this is worth. The airline business is really tricky. I followed airlines years ago, and they're usually terrible stocks
Does
over
Spirit
the long
Airlines fly people, or is it mostly livestock?
A little of both. You could be sitting next to a cow.
Why would JetBlue want anything to do with this business? Low
cost.
A worse business than JetBlue? You wouldn't even think that's possible, and then they found one and they want to buy it.
It's a sad day, man.
Yeah, it didn't make any sense. They realized it
I gotta start.
a little late for the whole deal crashing.
I got to start
it
managing some of these trades properly because there's no reason why we shouldn't have had 100%.
I want to go back to sort of the conversation we were having there before.
on this
Josh,
trade.
obviously 2 weeks away from this FOMC meeting. Bill was talking about the jobless claims. What about those retail sales numbers coming in pretty strong? If you're the Fed, how do you read that? I don't see any economic slowdown when you're talking about the consumer.
Look, there is this really perverse thing going on.
All right,
where
so Disney's
actually higher
reversing. So
rates
what I'm doing right
drive
now, guys,
more
is I'm gonna
consumer
go look at
spending.
just looking at a couple names. I got a couple things that I want to do here, and then I'm gonna go wait for the afternoon session, and I'm gonna make some phone calls and do a few things. So if you guys could do us a big solid frickin' favor and hit the like button for us, right? It'll help someone else find the stream. I know you guys are tired of hearing me say it. If you haven't subscribed, subscribe. You know, whenever we do get to 1,000, I will not say it anymore. I want to get to that number because I feel like 1,000, you know, that 1,000 subscriber mark is, you know, it's pretty nice. It's pretty big, but it'll kind of help me be able to bring some institutional investors on the stream. I do have some edited videos that are going to be coming out. There should be fun to watch and see how that progresses. If you guys have any questions, if you guys want to work with me and you guys want to reach out, my information should be in the description. All right, let's make some fucking money. Let's go. This is what we do. All right, this is what we're here for. But I appreciate each and every one of you guys. I do want you guys to know that. I really do.
Unintended consequence of all of a sudden giving people that level of income interest.
I just want to say that the Fed, through the whole inflation scenario with raising rates, made a point of saying, you know, inflation, you know, it's very, very sticky. We got to be careful. We're data driven. Right now, the messaging again is the same. Don't get so excited about rates coming down. Even if they're going to lower the rates in May, they're going to keep messaging that way because they don't want people to think the rates are coming down fast and
Lowering
spend
rates
more.
might be the only thing that you could
stops,
do to stop the consumer
I don't know. Well, that would be backwards.
I would like to stop the knife fights over the beach here.
please.
Too.
We'll
That-
never,
whatever we
not
get.
in Aruba.
Not
in that one happy
I want to
island.
be front and center, Liz.
So, okay, the FOMC meeting that we get in January, I think people are going to be listening, obviously, for more confirmation that he actually pivoted in December. I'm not convinced that they did pivot in December. I think that there continues to be a narrative around we will hike again if we have to. We still don't want to make the same mistakes that we did in the 70s. And
I'm looking
I
at
think that they are much
Microsoft.
more comfortable staying higher for too long than they would be with cutting too soon. So I don't think a March cut is necessary. Some comments from Waller this week were that, what's the difference another 6 weeks? I agree with him. I don't think it really matters to wait another 6 weeks and start cutting in May instead. So I think they still are going to try to avoid those mistakes. The risk that we would run, and this goes to Josh's point, a little bit more nuanced, but if it's the upper echelon of incomes that's spending right now while rates are rising, if we start cutting rates too soon, guess who's going to start spending? The lower echelon of income. And then you've got everybody spending. You run the risk of overheating or re-peaking in inflation, and we have a problem. So I think that that's what they're trying to avoid. You don't want to drive more enthusiasm than already started to come into the market starting in October and go the other direction.
Got it. Well, let's get to some committee moves here. Bill, you bought Leidos this morning. I'm not super familiar with this name. Talk to me about it.
Yeah, so this is it's an information technology company that's in the defense space. So they're defense software, but also in sort of civil software. If you go through the airport, you see TSA security, and Leidos is the one that has that you walk through. Exactly.
Before you go on.
So I was looking at like 392
they're really
for
all
a
over the place. I
short.
think this is a great place to be. And
But it looks like it's 393.
It elevated.
All right,
just
393
moved
is
higher
really
through the end of
the
last year. They had some
the
solid earnings
rejection
reports, some
level.
solid guidance coming
So
into
if
this
I
year.
see
So I'm
here,
upbeat to see what comes next. What I would like to do is build into this position. See
392.
more of a technical breakout. We had nothing in the defense space.
392.
Which Leidos
Look
is,
what happened last time.
Even though they're information technology, we cut Raytheon last
We're at
year after a little bit of a bounce.
392.
Deck had bounce, and wanted to kind of get
20
into that
area
space
on
and
that
find where
pullback.
things can evolve, and we're going to see
And look
ongoing
what we
demand
could get.
on
We
the
could at
software
least
side.
go
It's not a
for
total cybersecurity, but
a
we're gonna get
$1.50
some of that within that.
trade
And then
down
what
to
about Schlumberger? Why are you
390,
out of that?
or
Well,
we
Schlumberger, we've seen
try to
U.S.
capture the
production hit record
extension
highs, and Schlumberger has
and
done
pull it
nothing.
back
They really
down
lean on
into
sort of international production and offshore production, and the
384. I'm
spending
sorry,
that's going to go into
385
that and to create more production.
and 388.
Now, again, U.S. production all-time highs. OPEC holding back international production a bit. Schlumberger, as U.S. production has made new highs, has done absolutely nothing. They have an earnings report coming up Friday. I don't
Yes,
want to
they
be in that
do.
stock for the earnings report. I'm a little nervous for that. And so I'm just kind of waiting and see there.
And United Rentals?
United Rentals. I mean, I think that's a stock that's just done absolutely well over years to come. Will do well for years to come and has done well in the past. Now, there is the IRA, the Inflation Reduction Act, where there's infrastructure spending that has not made it out yet. I think 2024 is going to be a great time to see some of that make its way through. We own Caterpillar.
So it's like, do I just try to long here off of this level because that previous pivot high is becoming support? Or do I stick to my guns and say, if I'm getting long, the long's got to be 385, maybe crazy enough to say 388, but I don't know. You know, I don't want to fight the trend and try to get cute, so I just, you know, until 393 breaks on volume, all right, I'm going to, like, I am still long-minded. I don't want to just, like, you know, I'm thinking about the short, but again, Microsoft is just on a rally. It's on a move, and I don't want to step in front of it and get ran over. All right. I was getting a bit tired there. I had a Red Bull. I've been sitting here. I got to get up. I got to do some push-ups. I got to do something to get me going. If you guys could say hi, say bye, say something, interact. If you guys have questions, if you guys have stocks, like any names you want to look at, anything, please throw them in the chat. I'm going to give it just a few more minutes, and then I'm going to go make I got to make a few phone calls. It's just some stuff I want to do. Because I'm gonna have to physically do it, you know, until we, you know, I'd like to get to that 1,000 subscriber mark. I'm gonna be excited for the day that we get there. I'm gonna throw a party, and I'd like to do a cash giveaway. So anybody that did subscribe, obviously, will have you guys, you know, will, as in me, you guys just, you know, go on Twitter and just, you know, post that a video, you know, a picture or something that you liked it, you know, you're subscribed, you shared it, and all that fun stuff. So, but yeah, we're gonna do something really cool.
The proxy fight between activist investor Nelson Peltz and Disney is heating up. Here's what he had to say on Squawk on the Street this morning.
This company is just not being run properly. The board oversight is awful. It really is. The park, as I said, certain rides were great, but you can see it's getting a bit long in the tooth. They need more capital invested. They need more capital invested now because the competition is getting keener.
Bill, you sold Disney last year. Is there a point at which you would get back in when you think that they're turning something around enough to juice up the stock price?
Yeah. Last year, first quarter had that Nelson Peltz kind of okay, he's doing something activist here. Bob Iger is stepped in, and you're going to start to see this everything, the vision come to fruition. I got a little excited about it. We were in it for that move out of the first quarter, but when that thing just sort of petered out and it started making new lows, okay, I won't get myself.
I know we were there too, thinking about taking a long on Disney. We know exactly what he's talking about.
Where it is right now, but,
right here, I'll show you guys.
I don't see a reason to get in there until something really changes. I mean, I'm just really disappointed. I mean, they lost all the Indian subscribers, and then they continue to get worse there. There's no real direction. I mean, I haven't really even heard much from Bob Iger recently. It's not even on my radar right now. So
look what it did yet Tuesday. Holy shit!
Do cost cuts, but streaming was supposed to be
Look
this
at
growth
that.
engine for them.
Holy shit.
How can they do both at the same time? Do they
And
have to
then it
pick?
took
Are they
it back
out of
the next
streaming
day.
wars as a true competitor?
That's a
No,
sign.
They're in the streaming wars.
There's your
and
sign.
They're in a lot of wars. And unfortunately, since Iger came in, and Iger was a master during the years that he built the company into this behemoth, and it was all of the best of media and entertainment. Unfortunately, the media and entertainment world has changed so much that common group of companies no longer work together. And he is having difficulties selling any of these pieces at the prices he thinks they're worth. I mean, they still have ESPN. They still have ABC. They have so many parts of the business that don't work together the way they were supposed to, that, you know, yes, you can cut some people and you can cut parts of the streaming universe from Disney Plus, but they still own Disney, and Disney Plus was great for kids and they should keep that. But do they want to compete with Netflix? And no. What are they going to do about the broadcasting business? What are they going to do with ESPN? Everyone has these questions and they're not answering.
Yeah, and speaking of the streaming wars, Netflix getting a target raise at UBS and Piper Sandler. Josh, you've been watching Netflix. Is this just still
Come
winner takes
on.
all when you're talking about streaming when it comes to Netflix?
I don't think it's winner takes all, but there are too many players. Netflix won already. If you ask like who won the streaming wars, they are over. Netflix won. It's the only profitable streaming service, period. Not only profitable, but still growing. Largest and still growing. Disney is more than just streaming. So it's a really tough comparison. Is the suggestion we want Netflix?
Just look at that, guys. Look at that run, and then yesterday it takes it right back, right
so
back.
Really saying that. So
that's not good.
It's a little bit apples and oranges. If you just on a standalone basis want to say Disney's media business, it's Disney Plus, maybe the box office stuff, maybe ABC, ESPN. Let's comp that to Netflix. Netflix looks smaller, but maybe more attractive right now. Disney still has levers to
There's
pull.
something halted
The
here.
bigger
Hold
issues
on.
Here, I think, are strategic and not all execution. We don't know what they're going to do with ABC. We don't know what they're going to do with ESPN. Those aren't small questions. That's a really, really big deal. And every day they don't do anything, those properties are worth less. Every day. And if it goes on another year, ESPN will find itself competing with Amazon, Apple, and companies that literally have a money printer in their basement for the rights to the most important things, NBA, NFL. So that's the problem there. Until they resolve that, I really don't think it matters, how many billions of dollars they spend on TV shows. They really have to get the strategy part right. Personally, I trust Iger. And it would be nice if we heard more from Nelson Peltz on what the actual strategy is, other than just give me a board seat. So I think Disney kind of has a point there. It's like, look, we took 30 meetings with you. What do you want us to do? What's the right answer? Until shareholders know what that right answer is from the activists, I still feel like Iger deserves the trust of shareholders. So that's where I am. Not even a shareholder, at least not right now, but that's what I think it boils down to.
Yeah, maybe it's a help us help you situation. Netflix does report earnings next Tuesday on the 23rd. Let's move over and get some headlines from Silvana Hanau. Hi, Silvana.
Hey, Courtney. The House Homeland Security Committee will vote on an impeachment resolution for Homeland Security Secretary Alejandro Mayorkas on January 31st over his handling of border crossings. The White House has called the effort unconstitutional and labeled it as extreme politics. In Northern Ireland today, tens of thousands of public workers walked off the job to protest the lack of pay increases stemming from political deadlock. The Democratic Unionist Party has refused to share power with Irish nationalists Sinn Féin, which has prevented the government from functioning for nearly 2 years. And a billionaire couple is donating $100 million to Atlanta's Spelman College. In a statement, the college said that it is the largest ever single donation to a historically black college or university. The donation comes from Rhonda Stryker and her husband, William Johnston. Spelman says it will use most of the donation for scholarships. Courtney, back to you.
Thank you very much, Silvana. Well, coming up, the PayPal trade shares dropping 20% in a year as competition in the space ramps up. We're following the money and how to play it. That's coming up next on the Halftime Report. We'll be right back.
All right, keep an eye on the S&Ps, okay, and the indexes, AMZN. Amazon is breaking down, so we're going to get rid of that order. I never took the long there on Amazon. Let's see here. I got to use the restroom real quick.
NBC. Welcome back to Halftime. Investors are falling out of love with PayPal as the company fights off competition. Kate Rooney is following the money. Hi, Kate.
Hi, Court. Yeah, PayPal has really dominated online checkout since the early internet days, but they're not as dominant with people now shopping more on their phones. The
Hi,
experience
chat.
is a bit clunkier, and that may
Let's do
be
it, chat.
eroding market share. Mizuho cites Apple Pay as the main culprit in PayPal's declining share.
I need to focus here. So I got a snack.
Credit card information gets saved
I'm
on
going
websites
to
and buy now, pay later. Then you've got demographics. Mizuho surveys show that younger shoppers tend to prefer Apple. Data from Caden backs that up as well and shows Square's
So ever since like last week, right? When I mentioned to you guys that I started to like hear, I felt like I was like hearing my cat and stuff like that. Look at that move yesterday from the PayPal guy being on CNBC yesterday. Look at that move. That's crazy. So I feel like I've been hearing my cat more, or like sounds of a cat, and really I don't hear it. Sorry, I didn't mean to open the wrapper in front of the mic. So ever since it started, it feels like it's been like since I have acknowledged it, like a week, like 2 weeks ago, 3 weeks ago, whenever it was. I feel like now it's more prevalent, and I'm hearing like her meow or something like lightly, and I'm like, oh, she's not there. So I'm gonna scan. Let's see what we have here. See what we have going on. All right, we already know the strong ones. Apple to the upside. Okay, it's pulling back into a level of possible support. Tesla, we shorted it this morning. I wasn't strong enough, right? I didn't take the Viagra before that one, and you know I had to. It was a break-even trade, and it's unfortunate because it's up still 150% over. You know, so. You know, I wouldn't change anything about that trade because it felt like the markets were not moving. So I was like, let me just get rid of it, break even, and then we'll do that. So Disney also is another one. There's a lot of talk about this stuff that's going on with Disney. You can see the past 2 days, it's been really volatile. This is opportunity. Look at that. Bang. That's a huge move. And then it takes it right back. And then we just make it right back up again. And is that 50-day going to hold? Okay, so there's an idea right there. Watch the VIX. Keep your eye on the VIX. Watch the indexes. All right. Yeah. So let me eat this. Let me eat this shiz. And I will Be right back. I'm not going anywhere, but I'm going to eat this and I'm going to start going over some of these trades. So look, it looks like we just tapped. We broke below the 9 EMA. Looks like we tapped right into it. Now do we start to pull back and try to fill this gap down here? There's a small gap fill at 468. Let's see. Let's see.
But I mean, at the end of the day, I mean, I love the big tech because the big tech are going to keep eating people's lunch, and the Apple Wallet is going to keep eating PayPal's lunch.
Liz.
If I enter something, I will let you guys know. I'll call it out in chat.
Stock gets a pretty. The few analysts who were still positive on it, and then within 2 days it's higher. Is there any message in the activity of buyers and sellers versus the narrative that everybody already understands? I mean, the stock's in an 80% drawdown.
It would tell me that it hit somebody's trigger on the downside to buy it. There was probably either, I'm not going to call it a rebalance, some kind of reallocation that said, you know what, that's now a good opportunity. I'm guessing that whoever, if there is a big buyer, maybe they don't expect it to reach previous highs, but they expect it to have some upside from here. It was just a little oversold, maybe now underloved for what they think it's
And
worth.
maybe if it's up 10%, would you sell it? I'm just curious. I mean, what's
Maybe
your time frame or price target?
So I just
'Cause that wouldn't matter to me.
So I just bought it. I haven't been sitting in it all this time. So it's a different mentality. From my perspective, I think 56 is a pretty good risk management area. 56 was support after this recent downgrade. There were no sellers left. When it got to that level, it lifted like trying to hold a beach ball
Well,
under
we didn't
the
sell
ocean.
it at 56, but yeah,
I'm
I
not saying
understand what you're
did,
saying.
but no more sellers showed up. So that doesn't mean it's over. Now, what I would tell you is it's been a downtrend for 3 years. Very rare. You almost never can find a NASDAQ 100 stock that remains in a downtrend for 3 years. Second thing I would tell you, yes, competitive pressure, but still wildly profitable, which means a lot of optionality if they want to go in a different direction. New CEO. Not burdened with the decisions that have been made in the past. Brand new guy coming in, no sacred cows. He could fire anyone. He can get rid of anything that's been done previously. Carte blanche. That's all I'm saying. I think the setup here is probably better than what the consensus is on how much pressure the company's under. They've already lost $300 billion in market cap. Everybody knows that Apple is kicking their ass in the shopping cart. No, there's not one person on earth that's going to wake up and be like, "Wait, what? Apple Pay?" That's all I want to say.
I wonder if this was if we could have gotten this short. Well, the volume's really low. I don't like that. But look at that rejection of the 100-day moving average, right? This previous support and resistance level at $17. All right. And could we potentially get back to this gap fill? That's what I would look for. And taking it back down to this support level. All right. I would have to be in on bounces. All right. 1450 to like 1350. So we'll see how the end of the day goes, but if we can get some volume on this name, you could really see this thing start to sell off if it gets the volume. 1630. Long. Well, it's like 10 cents. The Taliban calling for peace. I'll let the Taliban speak for themselves.
Welcome back to halftime. We are continuing our series on identifying the committee's top control.
The Houthis and the Talis are going to get together and start teaming up.
I have a ETF DBB. This is a base metals ETF. The contrarian idea being everybody thinks inflation is coming down in a linear fashion. What if it goes back up? What if we see a resurgence because the Fed cuts too soon? And add on to that, what if housing doesn't collapse like people are expecting it to and come out of inflation? As mortgage rates fall, I think you see more demand for housing, which drives things like copper prices. So this ETF and just metals in general, aside from gold, has done pretty poorly this year, was pretty poor at the end of last year. So watch it for maybe a little pop higher. But to be clear, this is a satellite allocation in a portfolio. This should not be your entire alternatives allocation. Keep it tiny.
Good qualifier for DBB. What do you got, Bill?
I got SPPP, and I promise this was not planned at all.
We didn't talk before.
Platinum and palladium, and to your point, they were bludgeoned last year. This thing was down 25% last year. I'm looking at a resurgence in China. I think that as well. If you look at the China exports of autos, they're going to dethrone Japan. That's what the call is here. If China picks up, we're going to see platinum and palladium. I mean, they're using Cadillac converters. I think it's just really crushed. Now, I do run a metals fund, and I trade the commodity in there, platinum and palladium. They've just started the year off very, very poorly. So you're looking at it here as really, I think, a good entry. Now, if you're going to get into commodities, you have to understand the volatility of commodities, even if it's an ETF of commodities. So make sure you know what you're doing if you're buying this, and there's going to be a lot of volatility behind it. But it is something that's bludgeoned, and I think there's a good reason for turnaround. I mean, even just like infrastructure in the U.S., just started the spending that's just going to keep going around, and I think China's going to be the cornerstone here.
Okay, so DBB and SPPP from Bill and Liz for contrarian ideas for 2024. Well, coming up, the committee's got more portfolio ideas for the year. But first, Mike Santoli will join us with his midday word halftime report back right after this. We are back on halftime. Senior markets commentator Mike Santoli joins us with his midday word. You still got the NASDAQ leading and the S&P positive, but it does seem like we've lost a little bit of wind from the sails of the market here today. Is it Treasury yields, Mike?
Yeah, Courtney. Some days, pretty much moment to moment, the market tells you what it's paying attention to. So the highs for the morning in the S&P 500 were made just as the 10-year Treasury yield started that run up to 415. It's just like a 4 or 5 week high. It's not at particularly stressful levels, but it does, I guess, encapsulate one of the anxieties of the market right now, which is you've had a good run of economic data, retail sales, really low jobless claims today. And the question is, can we take heart that that's the trend of the economy, in which case we can be fine with somewhat higher yields or the Fed starting rate cuts a little bit later? Or is that sort of just a little bit of an elusive head fake and we actually have a slowing economy and the Fed's going to be late? So it's all happening in the context of a very, very normal routine pullback after a sprint to 2-year highs at the end of last year. But getting a little bit of anxiety in there as below the surface you're seeing some deeper pullbacks.
All right. Thank you very much, Mike, for joining us and keeping us on track. Coming up next, Trade School. It's in session. The committee debates some of the most unloved stocks and which ones could be good bets for the year ahead. Halftime is right back.
If you guys could get me to 1,000 subscribers, you know what I'm going to do? And it's funny that people just left. What happens at 2 o'clock? What happens at 1 o'clock? All right. Right now, we're at 1 o'clock. Look at AMD. AMD is cracking, folks. AMD is cracking. Fuck. I don't know what to do there. AMD's falling out of bed. Trying to. CNBC doesn't really have a trading focused like you guys know, like on Fridays, right? They have options action. They have would you trade this? They have different things on like Friday nights and different times of the hour. Having a segment on CNBC from like 1 o'clock to 2 o'clock, or from 2 to 3, a segment on a recap of the news, right? Not just Nikki Haley, right? Not just Rob Iger, okay? Not just Disney, but like trades of the day, like orders, like we're noticing big options and big transactions here on like Palantir, or not Palantir, but I was thinking Peloton, right? Is there a buyout, possible buyout coming? Like Oxy, Energy, futures, charts, right? The people want charts. So I'm really curious if I could reach out and fucking work for CNBC. I'm crazy. I know I sound crazy. But it gets really boring. And Kelly, if you're watching, which you're probably not. Kelly, as in the person who's on at from 2 to 3. We need something better. Like let me come on there with you. And we go through some charts and we talk markets and we talk real stuff that real traders and real institutional people want to talk about. Not just, Nikki Haley, when she didn't even win Iowa. Like, fudge Nikki, okay? Just because
a lot of people are saying to themselves,
a few people want her that have some money that can go on TV and talk about her, doesn't mean that that's what the people want, all right? So I think that's needed, right? I think CNBC, I know Bloomberg, and CNBC used to have Tech Check. But I mean, listen, guys, life is short. So maybe I pick up the damn phone and call CNBC and be like, "Yo, what are we doing?" All right, the watchers are dying off at 1 o'clock to 2 o'clock. Let's run through these charts. Let's talk about unusual options. Let's talk about spreads. Let's talk about like TLT and like some big buyers that came in on what's a hell of a random stock that I could come up with? On Crocs, right? On Monster Beverage, right? Insider buys 180,000 trillion, if that's even a number, shares. So, because it gets boring, right? From 1 o'clock to 3 o'clock. Again, Kelly, love you, but it's boring. We need charts, right? We need to throw up U.S. Steel. We need to throw up commodities and hey, it's putting in a huge pennant here. I'm looking for this to break out. And we throw a little arrow, right? I know it's crazy because I'm crazy, but you know what? I'm okay with it. All right? Because the person that's crazy and picks up the phone on a funky ass idea is the one that, might catch the ball and win the game. All right? Like, I'm just telling you, I think you guys need a change, and I think I might be able to help you with that. All right? It gets a little boring from 1 o'clock to 3 o'clock, and people ain't watching it. You know it. I know it. Just because the TV's on don't mean that they're watching. So, so let's go through some of the indexes. I have some stuff I wanted to do, but I feel like this Fed... I feel like the markets are getting ready to make a move. Like, here's financials, XLF. It's coming right to that support level we were telling you guys about with JP Morgan. Curious to see if it bounces or not. AMD started to fall out of bed. Looks like it's retesting it right now to make it resistance. JP Morgan. Looks like it's turning this into resistance, guys. Looks like she's going lower. I do want to check in on those options. Tesla's at 260 now, guys. It's still 160%, 170%, but come on, man. This thing needs to pay. So, if JP Morgan, if you guys are still in that trade, I'm not sure if you are, but if you get about 50 cents, you're going to go... Let me see. Let me widen this up. You should be at 158. This should be around $1.58 if you start getting down to the bottom end of this box at like 165. Alright? You still have plenty of time. The thing with 2 weeks is that now you're at the end of this week, and you got to think about the 2 days that the market isn't open. But other than that, I think that you have a shot. If you get to 165, you should be able to see these contracts. Shit. Hold on. Yeah, I'm sorry. I was looking at the wrong numbers. Well, I wasn't, but I was looking at the last field. So, yeah, 150. 150, 160, in between there. Call it 152. 152 because the last fill was 118, and then from 20 on the ask, that's 2 cents. So that's why I said 152. And then 40 delta, okay? So if you get to 165, you can add 40 cents to $1.20. All right, that's going to give you $1.60 minus 2 because the last fill will be an 18. That's 158. So that's over 100% if you can get down here. I know I went a little fast there, but that's how we do it. All right, that's how you should be trading options. You should be able to say, when we get down to this number, this is about where I'm going to be at. All right, this is where I'm a be at like $1.50, $1.48 to $1. Just say $1.50 to $1.53 roughly. And you should know if you're trading options. If you don't do that, you gotta learn it. Reach out to me. I will teach you. I will help you become professionally. I will help you do this professionally. All right. You should. If you're in options and you have no clue what you're going to make and you have no clue what you're going to lose, you gotta put in the work. You gotta give me a shout. You gotta send me an email. You gotta reach out to me on Twitter. Send me a message on Twitter or something. Let's fix it. Let's change it. It's not that difficult. All right? It's not that difficult to, once you get educated, once you learn how to do it, it's not that hard. What was I going to say? That's about it, I think. So this is what I mean. Like, I love that this guy's cool and Kelly's cool, but this is what they do at 1 o'clock to 2 o'clock, and then from 2 to 3.
Deepfakes are also a part of the picture, and they are getting more and more sophisticated.
Think about the people that are on lunch,
We begin
on
with
a lunch
today's
break
markets,
and stuff
Dom
like that.
Chu has the numbers. Hey, Dom.
Generally positive, Tyler, but losing some steam right now. It's a bit mixed in terms of the overall picture with the major indices. The Dow Industrial is currently down about 100 points, 1/4% declines there, 37,168. The S&P 500, that broader measure, is up about 1/10%, so modest gains here. But this does represent right now session lows for that S&P 500. At the highs of the session, by the way, we were closer to 47.66. Currently trading at 44 right now. So keep an eye on that kind of losing momentum type trade happening in the S&P 500. The Nasdaq Composite still up about 2/3%, 93 points to the upside, 14,948 the last trade there. One of the big reasons for that outperformance, relatively speaking, in the Nasdaq Composite and in the S&P to a certain degree, is mega cap technology stocks continuing this kind of run where we're seeing some moves higher, maybe a flight to safety trade, maybe some growth concerns that are still kind of playing some push and pull here. But Apple shares up 2.75%. It gets a big upgrade over at Bank of America today. NVIDIA shares get a star. They make a record high in trading today. Alphabet's up about 2/3%. Amazon, Microsoft, all up as well. So keep an eye on big technology, certainly driving the action so far in certain parts of the market. And then the stock of the day right now has a little to do with the consumer health picture right now. The second worst performer in the S&P 500 today, as of right now, is Discover Financial Services. That company, perhaps best known for its namesake credit card, is down about 11% right now. Its earnings report was mixed. Revenues actually came in better than expected, but its profits fell markedly over the same period last year because it boosted significantly to about $1.91 billion worth of reserves it sets aside for possible bad loans down the line. That has helped dragging that earnings picture down. So Discover Financial shares down about 11%. One more data point, Tyler, in that very mixed picture for the U.S. economy vis-a-vis the U.S. consumer. We'll see how this plays out. Ty, I'll send things back over to you.
All right, Dom, thank you very much. Dominic Chu reporting. Meantime, shares of MSCI are up 1% in today's session after Wells Fargo called it a, quote, best in class, shrugging off yesterday's short report by Spruce Point Capital, which sees a 55 to 65% downside risk in that company. In the report, Spruce Point calls MSCI a, quote, classic case of a struggling company failing to transform itself while engaging in value-destructive and even worse, nepotism-like acquisitions and share repurchases.
Okay, anybody that's looking at GLD options, because there's an individual on YouTube who says GLD options are shit. Well, that's false. This person does not know what the hell he's talking about. He is obviously not looking at the correct ones. So if you're watching the same person I'm watching, and I don't know why I'm watching it, I'm not watching it, I'm not even listening to it, I just have it on because I used to have it on before I started doing this. They are not shit, actually. Actually, I made a decent amount of money and had a really nice trade long GLD. So you just need to know what it is you're doing. And I don't think, you know, giving advice from something you don't know how to do is probably you shouldn't be doing. You probably shouldn't be doing that. So My fault. Gotta mark it, guys. Gotta mark it. Gotta get to 1,000 likes, or not 1,000 likes, 1,000 subs, so I can not say it anymore. Here, you guys want to listen into this? If it's loud, let me
Rosenberg has
know.
given a great example of how demand and supply can dictate inflation and its dynamics. And the truth is, they're also really great to explain BTC price performances too, from a fundamentals perspective. When you think about supply, well, one of the ways you can think about a lower bound for Bitcoin prices is the marginal cost of producing new Bitcoins, right? And since we're approaching the imminent halving, an event that ultimately reduces Bitcoin emissions by half, therefore also reducing the selling pressure that comes from miners, that is something that folks should understand as a driver for Bitcoin prices to do well. Also, from the demand side, and that's what we've been covering a lot more since the launch of the BTC spot ETFs in the US. There's this new high-grade product that allows for proper institutional investment. So in theory, despite whatever happens with price action in the short term, that also should be a driver for Bitcoin prices to do well. And maybe this has been a long digression, but the idea is, since we have great experts such as David and Lawrence and so many others, I was just wondering about their takes on the relationship between the launch of the spot ETFs in the US and the supply constraint that we're about to see with the next halving event and what it can do for BTC in 2024. What's your take, guys?
Well, and let me actually, that's a good transition actually to James Lavish, who's been also waiting patiently, because I know, James, you probably got some interesting thoughts on that. And I also want to transition that a little bit to some of these concerns around treasury auctions. I know that seems like they're not connected, but if you have some of these failures around the treasury auctions, like we saw, perking up a little bit late last year, and we can use the term failures loosely, that makes the need for a counterparty hedge even more powerful, you can argue. So, James, if you're there, feel free to unmute and do a quick intro on yourself and your thoughts on that.
Thanks for having me, Michael. And it's nice to be up here on stage with these brilliant minds. I would classify myself as less of an economist and more of an investor. I've been in institutional investing for about 30 years in mostly the hedge fund and private equity space. But and I'm co-managing partner of the Bitcoin Opportunity Fund now. But I do tend to look at the big picture, and I agree with what these guys are saying. What Danny and David and Larry kind of laid out. We have a massive spending problem. Just looking at it from a very high level. If you guys want my overall take on the macro world, we're running massive federal deficits. Last year, we added $2.6 trillion to the federal debt. We're now running north of $2 trillion of annual deficits. Just in the first quarter here of this year, remember we operate on an October fiscal. So, that means we're spending $6.4 trillion annually on revenues of $4.4 trillion. So everything we're talking about of GDP and nominal growth that feeds into this problem. The GDP is not growing as fast as our fiscal spending, and so and like these guys are saying, look, we've raised rates at a rocket pace and we've held them there now, but policies lag. I agree. I could not agree more. And one of the things that we got again this morning, we got more positive numbers out of unemployment, but I cannot emphasize this enough. Just looking back at the record of all of the recessions we've had in the modern era, unemployment doesn't start spiking until after the recession officially hits. And so unemployment is a terrible indicator of a coming recession. It's just, it's actually just shows you that we're actually in one. It's a confirmation indicator in my mind. So I believe that the Fed's going to hold too long. I think that they're not going to lower rates in March. I know that the market's pricing in about a 50% probability of a rate cut in March now, but I think that's a little bit too optimistic by the market, and I think that they're going to hold into May, and which will likely be too long. And the issue here is if and when we do hit a recession, because I also don't really buy into the soft landing narrative. We've it's extraordinarily rare to have a soft landing, and so when that happens, spending, but the government spending typically rises somewhere around 8 to 12%. And David, you please chime in on this, but on the other side, revenue decreases by about 8 to 12%. And so if you just use a 10% average on both of those, that means that your spending is going to increase to over 7 trillion and your revenues will drop to under 4 trillion. That'll give us a deficit of over 3 trillion, which only increases debt issuance needs. And the problem is, as we have this kind of recession, and we're draining the reverse repo with T-bill issuance, and once that's gone, I think that we're going to have some sort of illiquidity shock. We could see another repo incident a la 2019 September, and that will mean that the Fed and Treasury will have to team up, step back in, and add liquidity into the market. And so that is quite concerning to me.
That's why we go higher.
Shock.
Can I just chime in here? Totally agree with everything you just said. I would tell you that I think that the bid ask in terms of Fed telling us there's 3 rate cuts in the market, pricing in 6, leads me to believe, and I do believe this, that once they start cutting, if there's a reason to start cutting, they're going to keep cutting. So the 3, like from whatever that date is, whether it's March or whether it's May, whatever it's going to be, I also believe that they're going to have to talk about the end of QT in order for Yellen to be able to continue to go out there and fund the government, because you're going to have to create a situation where at least there's, a thought that, okay, well, now they're going to reinvest runoff, so I got them at my back again, and the same for mortgage-backed security. So,
and David, wouldn't you agree that once that reverse repo is drained, that's kind of the end of QT? They're going to have to really scale back. Is that fair?
Well, I think they already hinted at it in the last FOMC minutes, and it's probably going to be a springtime event. So yeah, I would tend to agree with you. The only thing I would just say is that there's this fixation on government deficits. The U.S. government ran a surplus in 1999, and interest rates shot up pretty dramatically. The Fed was tightening, and it was a horrible year for the Treasury market. And we ran a surplus because I continue to say that you can't look at interest rates and you can't look at the economy with one variable. You can't run a one variable model on GDP or a one variable model on inflation or interest rates. It's very complex. And so the reason why, for example, in recessions, the government deficit ratchets up, the automatic stabilizers kick in, and tax revenues go down. But yet in every single recession, even in the 3 god-awful recessions from 1970 to 1980, interest rates go down. And by the way, inflation also goes down cyclically. And the reason for that is because as government borrowings ramp up, corporate debt issuance ramps down because you get a negative.
They are officially
companies build
200%. So anybody
and they cut back on
that
their
took
CapEx.
that Tesla trade and is still in it,
So you have to take a look at
rock
the
out with
economy
your bop
holistically,
out because you're
in
at
its entirety.
200%. Nice job.
So what's most important with these deficits is whether or not they are creating the conditions for growth in demand above supply and thereby generating inflationary pressure, which, by the way, we had in spades in 2022.
And that's totally fair, and I understand that completely. And Danny, I think I cut you off. I thought that David was answering me, so I apologize.
No, I cut in.
Yeah. So right, and so my worry though, and look, as the Treasury has to increase this debt issuance, we're going to get to a spot where there's going to be demand for rate premiums on the long end of the curve, and they're not going to have, the Treasury's not going to have a choice. I mean, the Treasury's just doing the bidding of like you said, the CBO and or the government, and the CBO is estimating it, but they're just managing that budget with the debt, and so they're going to be cornered as well. And that's kind of that's the concern for me on the back end of this.
Let's go to George Gammon, who's been waiting patiently. Who, if you don't know George, you should check out his YouTube channel. By the way, it's got killer views. But George, you've been listening in on this conversation. Any thoughts on this? I know you had a couple of videos basically arguing that the Fed can't stop whatever comes next. I always go back to the point that the Fed doesn't own the bond market; the bond market owns the Fed. But go ahead, George.
Well, I think the argument regarding the deficits needs to have some sort of catalyst, because these arguments, although they're very good, and I agree with them, from a standpoint of government spending distorting the economy, I don't necessarily know that additional supply means that rates at the long end of the curve go up. And as an example, the same argument, you could have given it in the 1980s. You could have given it in the 1990s. You could have given it in the 2000s. It's just the exact same argument over and over and over again. Now, I'm not saying that deficits don't matter, but you need to tell me why they matter this time and why they have not mattered in the past. Another example I'll give you is going into COVID, the government debt was about 22 trillion. Now it's, you guys probably know better than I do, what, 33?
34.
Okay, so the last 3 or 4 years, the national debt has gone up by, call it, $12 trillion. 12 trillion. It's gone up by over 50%. And yet the 10-year Treasury yield is trading 100 basis points under Fed funds. So the argument that there's not going to be any demand for U.S. debt, I think that's misplaced. And again, I get it that deficits are bad. And I'm, all in favor of lowering deficits, as everyone knows. But I don't know that the deficits are a problem with the debt, more so the government spending. That's the real problem. And that's what retards the economy to begin with, is the government spending. Another thing that I'd say is I get how input costs are inflationary. I totally get that. Oil is an example. You could imagine a thought experiment where oil goes to $200 a barrel. But if money supply growth is not going up, I don't know how that's inflationary. Maybe short term, but I would argue if loans and leases, using that as a proxy for bank lending, if that's flat and your input costs like oil goes up to $200 a barrel, I think that would actually be deflationary. It wouldn't be inflationary, because although the price of oil would go up to $200 a barrel, the consumer would have to rob Peter to pay Paul, because the money supply is not going up at the same rate. And if you look at the 1970s, the one thing that Lynn, my good friend and business partner, points out very, very well is that bank lending skyrocketed. It went through the roof. So when you go back to the yield curve and look at the inversion that is historic by most standards, I don't know how you could argue that going into 2024 that bank lending will likely increase, regardless of what the price of copper or oil or nickel or any of those things. So then the argument, of course, is that, well, they're going to print a lot more money. But then that goes back to my initial point that maybe, and maybe not, we have to look at the increase of 25% in M2 money supply going back to 2020 and 2021. That was basically a result, not necessarily of who was buying, but who was selling. Remember, if the Fed is buying, Fed's using open market operations. They're not saying, hey, we want to buy from non-bank entities. And if the Fed is buying from banks, that is literally zero impact on M2. Now, if they're buying from non-banks, yes, that's an increase of M2. But what they're doing, if you think about that, is they're basically trading savings, M2, for treasuries. Right? So if you look at savings M2, how much velocity does that have? Well, probably about the same amount of velocity as a treasury. Right? So if it's just an asset swap, I think that the real problem, as far as why we got that 9% inflation, was obviously supply side. I think we all agree on that. But I think it's also maybe not just so much an increase in M2, but more so an increase in velocity. Because what Janet Yellen is doing is she's taking
I'm getting
effectively,
tired
she's
and
taking
bored.
savings and she's
I'm
turning
sitting here
it
talking
into
to
checking.
myself.
And there's going to be a lot more velocity with the checking than it is the savings. So I think that could be inflationary. But I think in the short term, I would definitely have to agree with David. And then in the longer term, I agree that we'll have inflationary pressures that will exceed the disinflationary pressures. But I think that's going to have to come with a huge catalyst of government spending, not just the type of government spending that increases the deficit, but more so the government spending that will increase velocity significantly. And then as far as the Federal Reserve having to step in to buy the treasuries because the long end of the curve is just going up, at an exponential rate. Maybe I totally get that argument, but I don't see any evidence for that right now. In fact, I think it's just the opposite, especially when you go back prior to the debt ceiling.
Look at this
being
hourly
solved,
chart
6
real
months
quick,
ago or
guys.
so, where the short end of the curve was trading under Fed funds. Like the 1 month T-bill was trading like 50 or 60 basis points under Fed funds, not to mention the inversion of the curve. So right now, I think you could argue that we have just epic, mega demand for treasuries. And I don't know why that would evaporate, assuming that we go into a recession or hard landing, which is what the yield curve is predicting.
Hold on.
Go ahead.
There's a lot to unpack. Danny Moses has been waiting patiently, and then I want to go to Chris, and then I see some others. But go ahead, Danny, and then I'll go to Chris.
No, I was going to say, I think debt to GDP is what people should be focused on of all the things, and we're 130% or something. I think is what it's going to be. So to me, that's the problem.
All right, so now we're starting to make the low of day. We just made the low of day resistance.
Different from 110.
Let me see here. This is weird.
What do you mean it's higher and it's trending in the wrong direction?
But why? But 110 going.
What's
to
up,
Basic?
So
why is
thank you because I was falling asleep.
Going to matter. I'm not saying it's not. But
it was close. We're pulling back.
I'm going to give. If you let me finish, I was going to go through this. So Janet Yellen showed her cards, obviously, when she changed the tenor of the bond auction.
It is a new high.
I agree with you. I mean, the last thing you want to think about in managing money
and immediately
is
just
the creditworthiness of the U.S. is in question. If that's what's causing the rates to move higher, indeed, what was causing it, that's a scary thought.
I got indigestion from that Red Bull, and I'm getting burnt out.
More T-bills instead of bonds. They want to create this demand supply issue. Why? Look at these auctions. They're not great. Yeah, they move from depending on how people are positioned, whether they're short or not, and what the international guys are doing is in terms of unloading Treasury. But think about this: if the Fed starts cutting because the economy is slowing,
I gotta start buying the sugar-free Red Bulls because it always makes me crash like hard.
That means
I crash so hard when I come off a Red Bull.
Slowing. It's going to have this.
Well, if I'm sitting, like right now,
you can't show me
if I drink a Red Bull and I'm sitting in my seat, it doesn't. It's not really the Red Bull. If I'm sitting in my seat watching charts and stuff, I fall asleep so easy. But if I'm up moving around and shit, and my heart rate's going and I'm good, like I'm okay. I'm good. It's only when I fucking.
We haven't fixed the debt ceiling problem. We actually lifted it to infinity until January 2025.
Yeah, it's not even really a nap. It's just
any type of those type of constraints.
You know what I mean?
It's going to be
it's just because I'm just sitting here.
By the time that we get there, so then what does it look like? So I think people know that as well.
But I'm good. You showed up. I got to talking. I'm good.
A ceiling at all.
There was a few things that I wanted to do.
This kicked the can down the road. And let me just say this:
which
I have
was
no doubt that we will have TALF 2.0 at some point. We'll have something for
this low of day.
And I think that people that are
the initial morning low acting as resistance now.
People that are buying the markets,
that 473.50.
That that the Fed's going to bail them out.
Look,
that's
here comes
that's really what I'm focused on is
another bull flag on a 5-minute.
Whether
bear
it's gold
flag.
or stocks.
Look at that.
Point out all that other noise that's out there, and can we have a normal cycle or not? Because we haven't had a normal cycle in 15 years. The Fed has interrupted the cycle nonstop.
I mean, that's ugly, but
so.
Hold on,
sorry, I want to go to Chris because he's been waiting patiently and he's among the sponsors with hashtag. So let me go to Chris and then I'll go back to you, James. Speakers here.
Yeah, no, I appreciate this kind of conversation. I think the macro factors at play here are fantastic, and the guests have done a great job of sort of laying the things out. My question is a little bit more around second and third order effects, right? So, Danny just mentioned commercial real estate. I think, in terms of the regional banking crisis in spring of 2023, there's a lot of these other factors at play that are affected by the macro choices that the Fed makes and these types of things. I'd be interested to hear from somebody on the group here. What are the things that we see from the second and third order effects that investors should be looking towards, right? Because as someone that works for Hashdex, which is a crypto thematic asset manager, I think when you talk about the Fed and printing money supply and stuff, a lot of the people we interact with, Bitcoin maxis and the like, will say this is the reason why this digital asset was invented in the first place. They genuinely have no idea what's going on. They have conflicting ideas about what's going on. And this is why, the flight to quality, the idea that Bitcoin's an emerging store of value, although, it's not there yet, and there's still some work to do on the investment case for that process. I guess the question is, what are the things that are going to hit retail investors hardest that then lead to them looking at
Hit the like
alternatives
button if
and
you guys could. I
different
appreciate
different
y'all.
different investments that perform
Just helps.
in a way different
I
way
think.
than what maybe traditional equities and fixed income might.
Okay, so let me that's a good question. I think it's that we can do like a little round robin. So let's go to Lawrence first, then back to James Lavish, then Bookfar, Danny, Rosenberg, and George. Just kind of, I think to get different perspectives on this would be interesting.
Yeah, sure. So first of all, I would say one of the things that's really interesting that's happened in the last 3 to 4 months
So
is that
we
gold has
covered
become
the
less
gap on
volatile
the
than
S&Ps.
bonds. That's not supposed to happen. The government bond is supposed to be the most solid thing in the world, and bonds have started to get really volatile. And I think the bottom line here is that what's going to throw the table over and is going to change everybody's assumptions, supply, demand, all of it, is that the government can't continue doing what it's doing and expect the bond market to behave. And we've already started to see signs that it's not behaving. I mean, the SOFR blowout is an example. In my view, they panicked from, when the 10-year went from 433 to 5 in the space of 5 weeks, which is a 20% move, very significant. And we write about this in our quarterly letter, which is coming out soon. They panicked, and they had 8 speakers on the tape, within 5 or 6 days, all talking about how they were done and they were bringing things down. They knew they were in trouble. The bond market was telling them what to do.
All right.
I mean,
Larry, how do you
Notice where the
explain
IWM is.
the
It's at
10-year treasury
yesterday's
right now being
lows.
100 basis points under Fed funds if the bond market has a problem?
It's simple. I mean, people
So the
are
Dow is starting to
stupidly
reverse.
thinking that money is about to get a
Kinda.
lot easier, and locking in a
Does that mean
10-year
for
at a
the-
rate that's as high as
the
it is right
Qs,
now is
the
a
leader
good
to
thing
the
if we're really
upside?
going into a recession and we're
The
going back to
IWM's
an
down
inflationary
here.
world. I mean, in my view, it's a trap. It's what the market is saying, but as we all know, we make our money from the divergent view of what the market says
Probably get a
versus what's really going
407
to happen.
put.
Right. So
And-
your
But,
argument
you
is
know,
this time it's different.
get
This
there.
time the yield curve is incorrect, and although when we've had an inversion in the past, it's always been as a bull steepener. This time it's going to be a bear steepener, while we also have a recession.
Yeah,
Is that
I'm
the
not.
argument?
I'm not sure you're correct about the past, George. I mean, I think it depends on what time frame you're talking about. But
God
But
damn it,
what
the
inversion
hell
did we
just
have when there was a
happened?
bull steepener?
I don't have my chart right in front of me, so I can't cite one. But the bottom line is it is uninverting as we speak. You know that, right? And
But
to
the
me,
you're getting close to the 10-year.
pardon me.
Hold on, I don't want to get. Let's not go into interrupting each other. Just go ahead, Lawrence. And actually, Rosenberg, I think you probably got some good insights on that. But go ahead.
Well, my view is that we are about to have a very serious downturn in the stock market, and that's what's driving the 10-year to where it is right now. And the other interesting data point. I mean, the question was, what does this imply for all investments? I think the dog that didn't bark. The thing that people haven't really recognized is that since the Fed started talking nice in late September, early October, gold is up 14% and Bitcoin is up 60%, and they've both diverged from gold used to be very tightly correlated with real rates, and it's not anymore. It's diverged, and what that tells me is that gold smells it. It's looking around the corner, and gold knows that the federal government is trapped and cannot do what everyone thinks they're going to do, which is just manage a soft landing. I mean, something is going to break, and we're going to see a period, in my opinion, very similar to what we saw in 2020, and that's going to be massively inflationary. So whether that happens in a month or whether it happens within 2 years, it's coming, and it's just math. It's just Lynn's math. It's very straightforward in my view.
Dave, I don't know if you want to have some thoughts you want to add to that, but go to you and then James Lavish after that.
It just fucked my charts
well,
up, man.
I don't know where the big inflation is going to be coming from, unless, as I said before, something happens on the supply side that we're not seeing, or we get a
Watch the Dow. If the Dow
renewed
continues
boom in-
higher,
in
see if the
demand.
Qs try to do the same.
Where's the inflation going to be coming from?
I gotta fix these charts. I gotta fix this.
I think that we had the big inflation in 2022. We know the reasons why. We had tremendous growth in aggregate demand, bumping against a deficiency in aggregate supply. The demand was being fueled by monetary and fiscal policy. That is all looking at life through the rearview mirror. Where is that going to be sustained? Now, the Fed is not going to be quick to cut rates. I don't think they'll be cutting in March, but the odds are not zero. There probably should be close to 40% for March. We know for certainty that rates have peaked. So then the next question is, when do they start going down, and by how much?
Don't ask me how I did
But
all
the
that.
interest rate cycle is inextricably linked to the economic cycle and the market cycle. I don't think any of these time-worn relationships or rules have changed. We have disruptions along the
So
way.
if
There's
you guys
always
were with us
disruptions.
earlier,
This time we get a new
you guys,
disruption.
if you would have taken it,
global transportation
shit.
costs, but
yeah, it's
I think
still
for
over
anybody
that.
with a longer time horizon,
You
know
could have
that
been
that's
short
not gonna be
Tesla,
a sustained source of
possibly,
inflation. It's more
if
like
you chose to do it,
a temporary level shift.
and you'd be up 150%.
I don't think that the
You'd be up
world is going to, the
150%
civilized
over
world,
here.
will allow the Houthis to pirate the Red Sea indefinitely.
I didn't. I had to get out of it. Just for clarity.
And I would say that that as far as all the conversations about gold and Bitcoin, frankly, I watch Bitcoin. I'm not a participant.
I was in it, but I had to get out.
I just don't really talk about it a lot because I'm not really
felt like the
comfortable
markets weren't
in
moving.
knowing how to value it. So I stick to my knitting because I know how I can value the stock market. I know about price to sales, price to book, price to EBITDA.
None of that shit
And I know
matters.
how to benchmark the valuations against the risk-free rate. And
none
bonds,
of that shit
there's
matters.
inflation, there's growth, there's in the corporate space default risk and recovery rates. I'm not always going to get it right, but at least I know how to draw a conclusion.
And that, what are you
just
saying?
based
That they're
on-
oversold? Because
on
no,
models.
assets
I
aren't
don't know
too
how to model
overvalued.
Bitcoin. I know other
They're a
people
little
do that.
on
I
the
don't know,
high
and it's
end,
so
but they're not
volatile,
over.
That your
valued.
point estimate could be wrong in November the 1st and
Depending
then
on what
dramatically right
time
in
frame.
November the 2nd. I don't have the answer to that, but I do agree with the comment on the looming renewed correction in the stock market. I think that gold really, you model off of real rates in the US dollar. And the reason why gold was doing well is because as the market priced in these aggressive rate cuts, the dollar went down, gold went up. It's priced in US dollars. And now gold has been sputtering because the markets are now, they're not pricing in 6 rate cuts anymore. They're pricing in 5. So that's just how the gold price moves. I would just say that the view on fiscal deficits, I continue to say you can't have a one variable model. I don't know of anybody out there who would sink their teeth into that. Fiscal policy has a 20% correlation with treasury yields. Inflation has more like a 80% correlation with Treasury
Gold
yields.
hasn't moved.
So
It's still at
I'm not saying
2,000 an
fiscal policy
ounce.
doesn't matter, but only insofar
Now,
as
maybe
it
we're bumping
generates
up
the
into
inflation.
resistance now, but
Which then
gold
you have
has
to
not
take a look at
moved.
the entire gamut of what's happening in the economy.
Be careful
If the
listening
government
to these
sector
people,
is
guys.
raising funds and boosting demand at the same time that the corporate sector is, then we got an inflation problem and we have an interest rate problem. And that, of course, was one of the problems we had in 2022. But I wouldn't make that forecast going forward. I think that we're going to have a capital spending recession and that companies will be cutting back on capex and will be cutting back on their borrowing requirements, and so that fills a vacuum for the government to step in insofar as it does step in. And the most important actually determinant of yields out the curve is expectations on Fed policy. Because what else is a longer term interest rate is some scrolled expectation of what short term rates are going to be doing over that maturity. And actually, Fed policy
This is
has a
JP Morgan's
90% correlation
positions.
with yields out the
For
Treasury
anybody
yield.
that's wondering.
There's nothing more powerful. But then it comes down to, okay, what are all the factors then that drive Fed policy? And then it comes down to, once again, supply and demand. The Fed has given this on a silver platter to us. They told us that their estimate, now who knows if they're going to get the forecast right or wrong, they hardly ever get it right, but let's just say that right now, their forecast for real GDP, which is aggregate demand for this year, is 1.4%. Good grief. That's a full year forecast. Over half the time historically, you've had 1.4% real growth in a year, but it masks the quarterly pattern of
116,000,
decay that actually
almost
included an
117,000
NBER-defined
shares.
recession. But they're at 1.4% demand growth. And I'm looking at our estimates of what supply is going to be doing, and it's going to be roughly 4%. We are seeing a resurgence in labor force participation because people are no longer getting paid to stay out of work. They have to work. So you're seeing actually whatever happened to this great retirement theme. Remember that? A year ago, 2 years ago, the great retirement theme. Well, that's been retired. People are being forced to come into the labor market and they are competing for jobs, which, by the way, will put downward pressure on wage rates going forward. That'll be disinflationary. But I'm saying that labor force participation and productivity growth is generating 4% growth in aggregate supply. That is disinflationary.
Guys, we're starting to see
and
a
that is
shift
not
right
something you
now.
saw in the
You guys may
1970s.
not see it. Right now, you're
I want to go to
getting a
Danny Moses
shift
just
in the
'cause we gotta
markets. You're
wrap
getting
up shortly.
rotation
And
right
again,
now.
just everybody here, please make sure you follow
Rotation
every single
is
one
happening.
of these speakers. Agree, disagree. We're getting a good back and forth conversation here. I hope everybody's enjoying the discussion. Danny, one thing we haven't touched on, and feel free to riff beyond this, but commercial real estate, because that does relate to disinflation, deflation, volatility, the need for diversifiers, including gold, potentially including Bitcoin, if Bitcoin does diverge as a counterparty hedge under that kind of scenario. Are you?
I'm thinking
are
about
you
a long
closely
on the
watching the
Dow.
commercial real
I
estate
haven't
side?
been
It's
long
been
the
talked
Dow,
about
but I
ad
might try
nauseum.
it.
I mean, you can argue it's maybe
Let me do a
largely
little more
priced
work
in,
on it.
maybe not.
Yeah, I mean, I think we've kicked the can down the road here with extensions on loans for the last couple of years, and obviously there's articles about it. It's always in your face, so you want to believe that it's already priced into the market because we see so much about it. But I really don't think it is, and there's a lot of manipulation in the markets in terms of how these CMBS trade, right? So just keep that in mind. So you don't see a lot of it. You really got to pull back the sheets to look at it. So it does have an impact. It will have an impact, and a lot of regional banks are carrying it. And so I think it'll be something that it will be 2024 that we're going to have to deal with because there's just trillions and trillions of dollars of debt that needs to be refinanced and or paid off. And keep in mind that most of these commercial loans are interest only, and so the bullet comes due right each time. So you're seeing bits and pieces of it. We'll see if it cascades on itself, but I do think the regional banks are holding some of this. But like I said before, cynically, the government will come up with some. Yes, just the Bitcoin question that came up in general, and kind of where do people go in times of crisis in terms of if the markets kind of show themselves that way. And I've never been a Bitcoin crypto person. I have nothing against it at all. The smartest people I've ever met are involved in it, so therefore I will turn to them in terms of that they know what they're doing. I will say though, if you think about where Bitcoin began, it burst onto the scene obviously in the middle of the GFC, right? 2008, 2009. And all we've had obviously is a money printing
Look at
situation
that, Head
for
and
the last
Shoulders,
couple years where
everybody.
we tightened, and people thesis on Bitcoin crypto is that it should exist in an unregulated world. Yet all these ETFs and stuff, which is great, I think people should have access to it, leads us into more regulation. And so as we test, I think it's a $1.7 trillion market. I think Bitcoin's 850 billion or whatever it is. I look at that versus gold, which is 13 or 14 trillion. I would prefer gold. That being said, I'm interested to see how it performs. But rest assured on this: if the government starts to not fail, but if things get worse in the U.S. markets and federal spending and so forth, and crypto, Bitcoin makes its way and 100,000, 200,000, whatever it's going to be, and becomes a really powerful factor, the government's not going to sit idly by. They're going to be very concerned at that moment, in my opinion. Now, there's a lot way to get from here to there. And again, I think blockchain's great. I think the technology's great. So I do think Bitcoin could have legs. And let me just say this: I am very impressed of how it got through FTX. It got through this Binance. It got through all these other failures that have gone on. It has maintained. It was and is in very strong hands. Can it trade back down to 25 or 30,000? Sure. It's possible. And the other thing I'm noticing, and this is a statement of the obvious, is on these ETFs, people feel comfortable facing a BlackRock or a Fidelity, right? You just have comfort that, okay, if something goes wrong, like it went wrong at Coinbase, maybe I don't have any recourse, even though they're regulated and they're supposed to take care of the consumer. But at least I feel like I'm backed by these trillion-dollar companies. So that's kind of where I am on that. And I prefer gold. It's the less sexy trade, but everything that should make Bitcoin work, in my opinion, should make gold work as well. So those are my thoughts on the two subject matters.
Everybody, please make sure you follow Danny Moses, one of the greats. Unfortunately, I couldn't meet up
Everybody,
with Danny.
please make sure you hit the like button,
I'm glad
subscribe
you were
if you haven't
here.
already done so. We are on our
James,
way to 1,000
I cut you off
subscribers. We're
before.
going to
I
be doing a
apologize.
giveaway.
Continue with what you were saying. I think, prior to
Anybody
my
from
cutting off.
0
And then I want
to
to get Gary
200,
Broden
if
here,
not
and we've
100,
got
the
a number
first
of other
100
speakers
people
lined up.
will
So go
probably
ahead, James.
have 2.
No, this is good. It's a
No, I'm
good
just kidding.
segue.
I
I'm gonna
can't. I
have
don't
to
even think I
leave
can legally do
soon
that.
too. So,
But
but on
yeah,
Bitcoin, look, this
appreciate
is
you
a
guys.
nascent asset, right? It's been around for 14 years, like
And
Danny
again,
said. It grew out of the Great Financial
as soon
Crisis.
as we get to 1,000 subscribers,
And
I know it seems like it's a
it's
far
less
away,
than
but
a
we're
trillion
close. We're
dollar
almost
asset.
there.
So
You ain't never
we're
going to hear me
talking
say
about
like,
something
subscribe
that
ever again.
is that people have
That
been talking about in tight circles here, especially on Twitter, Bitcoin Twitter. And we're in a little bit of a bubble here, but the masses don't really understand it yet. And like Danny said, the greatest proponents of Bitcoin want it to be a way to it should operate freely, right? We are looking at it from a very particular lens here in the United States, and that is from an investment lens primarily. If you look around the world, there are people who are unbanked who use it for a very different reason. They use it to retain the amount of wealth that they've created, how little that may be in a place like Venezuela or Lebanon or Argentina, because they cannot they can't keep their money in their own currency without it being devalued significantly in a period of just months. So if they want to go someplace with their money, then they have it tucked away, and even with the volatility, has been in the long run a much better way to store their value. So it's a different viewpoint than we have here. Now, from our viewpoint and from the viewpoint of investors, look, we had 9 really ETFs come to the market, and we've had about $1 billion that's flowed into those, net of the outflows from GBTC, which was the trust that has been sitting out there for a while that people were locked up in, and they're dumping out of that. But even with that, with the exits from GBTC, we've still seen over $1 billion come into these ETFs, and that's a massive amount of money. And like Danny pointed out, the reason is that people who are in the United States and have not had access to it, the people who don't want to hold their own keys, they don't want to deal with the custody issues. If you're an investment advisor, you really can't do that, or you won't do it because of personal and professional risk. You don't want to have that risk. And so now you've got Fidelity and BlackRock that are out there, and you've got participants, the authorized participants that are out there dealing with the inflows and outflows. This is the highly now regulated market for these, and people will feel much more comfortable buying them. And we haven't even seen all the on-ramps come on yet. We have places like Vanguard and Merrill Lynch and UBS have been shutting out their customers. I think UBS is allowing their high net worth customers access them now. But if you've had an IRA or a 401k, this is the first time you're having access to this.
See
and
how it
so
works?
the difference, and
If you
to
ain't
answer
got money,
George,
you gotta
I
wait.
think
They
it was
don't want
it
you.
was him
Just
who,
like
who
this
was
industry,
who was
guys.
commenting
Just like
on
this
he doesn't
industry.
see
Anybody that
the
wants to learn
value
how
or
to
how
do
you
this
value.
shit,
Oh, no, actually, I
anybody wants to learn how to
apologize.
do
It
this
was David
professionally
saying
and
you don't
get
understand
orders
value.
and limit order and know all these
Look,
options
people look
shit,
at it as
they're only
an
going to
asset
attend to
that
the people
has
that want to
a
pay them the
finite
most.
supply.
And
And
anybody
just
else,
like
they're just
gold,
like,
they look at it as
fuck
a
out of
digital
here.
way to store your capital, your money, and have an investment that should, in the long run, protect you against high periods of inflation. And so that is what people are talking about. It's not there yet. It's still extremely volatile, as we all have noted. But as more capital comes into the space, as more capital comes into Bitcoin, that volatility will decrease over the next period of years, and it will become more and more like a digital form of gold. And that's really the first step for Bitcoin. And now that it's trading on the New York Stock Exchange and on the CBOE and
That was
NASDAQ,
scary.
it has the
I don't know
ability
what happened.
to collect that capital that's looking for that kind of, both for people who are speculating because they don't understand it quite yet, but they've heard about it and they want to have a little bit, and for people who do understand it, the Michael Saylors out there who want to keep their capital preserved for long periods of time. And so I think it's an incredible development, positive for Bitcoin in particular, and for digital assets. So,
thank you, James. I want to chime in. This is Mike Venuto. I'm the founder or co-founder of Tidal, the company that helps people launch and grow ETFs. You were mentioning the 9 that came to market. Our sponsor today, and our partner, the one that we helped with, is Hashdex with the ticker DeFi. They are a Bitcoin futures ETF that got approved to hold spot or exchange for physical. We're actually doing it very different. They got the listing rule approved, and we expect that in the near future they'll be doing the exchange for physical as well. It's a more complicated process, so it's taking some time, and we'll be able to share more of why we think that works better. It is ironic, right? I used to be the guy who said there should never be a Bitcoin ETF because, right, like ETFs need Bitcoin. Bitcoin doesn't really need ETFs. I think the reason that this is making so much news and getting people excited is because it brings a bridge, right? Like the end game, and why the regulators have been very slow here is that eventually most of the pipes that are behind something like an ETF go into a blockchain and tokenization, which settles T0 and it hasn't been hacked and all those fun things that make it better. But in order to get there, there has to be a bridge, and I think that's a big part of what these ETFs represent. Right? It's engaging with people who haven't looked at this before. It probably won't be necessary in 20 years, maybe 10. Depends really mostly on the regulators. So I do want to thank. Oh, you want to chime in, James?
no, I all I would like to say is that for people who don't understand why it's so significant, is that you have had registered investment advisors in particular over $100 trillion of assets out there that are that have not had access to this, and they've had their clients asking for it, and they just haven't really been able to give them access to it in a way that they're comfortable with. Now they can buy it just like a stock, just like the spiders. It's super easy to buy. They know who they're settling it with, who's custodying it for them. It makes it a very easy transaction, and it virtually eliminates their personal and professional risk from allowing their clients to have access to it, and that's a super important development.
Yeah, I think that's what makes it the bridge, right? For years, I've been saying, this isn't about number goes up. I actually think it's hilarious that Franklin Templeton, one of the oldest companies in the world in finance, is saying speculation is a feature, not a bug. I think that's terrible, to be honest, right? My opinion on these assets is it's buy and learn, right? And the ETF gives that opportunity. If people are buying this to speculate, I think that's a terrible thing. But I do want to thank all the speakers. I want to thank Hashdex. Please follow everyone. We brought up some new folks, and I want to bring them into the conversation. We brought up Frank Holmes from Hive and US Global, and we brought up Gary Broad. So we're going to go to Gary first, let him introduce himself, and just give comments on what he's heard so far, and then we'll go to Frank.
Hi, thanks. I appreciate it. All you guys, thank you so much for hosting this, for including me. When I hopped on, there were comments on Bitcoin and on the macro situation. On Bitcoin, the comment that was made that I really agree with is that the bull case for Bitcoin is pretty much the same as the bull case for gold. And that's why I own both, right? The dollar is being debased, and it's just, there are various ways to protect yourself from that. I think both are great options. Where I'd like to see people do a better job, and not necessarily the people on this call, but just in general, do a better job delineating, is in the sense of what's actually being regulated. And so, you had Gary Gensler come out and say, we're not endorsing Bitcoin. We're not approving Bitcoin. I don't know what to tell him, but Bitcoin does not require approval. It is permissionless. There's a difference between approving Bitcoin, which doesn't require anything to be done by any government person anywhere in the world, and approving a variety of financial products that allow people to own Bitcoin in a traditional asset management wrapper and in that kind of vehicle. And, people were just talking about the importance of it. And there were a ton of people who were locked out because of compliance reasons or regulatory reasons. They needed to own Bitcoin within a brokerage account. And that's fine. I think Bitcoin is for everybody, including people who keep their money in a traditional asset management vehicle. Not everybody wants to self-custody. That's totally fine. But it's those products that are being regulated. It's not Bitcoin itself. And so I would just urge people, be aware of the difference and be aware of the conversations we're having. Beyond that, on the macro side, people were just talking about rate cuts. And I think the market's really excited for rate cuts. And in my opinion, there are going to be fewer than 6 rate cuts this year. But I think the thing that some market participants might be missing is, say we do get 4, 5, 6 rate cuts this year, the base case assumption seems to be this ideal soft landing where inflation goes away and the economy's in good shape. And, maybe that happens because we do have a reduction in inflation right now. And in addition to that, we have the government spending like crazy in an election year. So, maybe we end up with that. But my view is the thing that's going to cause the Fed to reduce rates by 100 or 150, 200 basis points may not be good for the market, right? I mean, that could come with a really weak economy. Finally, I think it's really interesting to point out the struggle going on between different government agencies. And so right now, Congress is overspending like crazy, $2 trillion a year. The Treasury Department is monetizing that through debt, but it's basically creating more dollars, debasing the dollars that we own, which is why so many of us own gold and Bitcoin. And the Federal Reserve has raised rates in an attempt to reduce inflation. These agencies are at cross purposes, and everything the Fed is trying to do is being fought by Congress and the Treasury. And, look, I understand why we look at history for these things, but the Fed hasn't tried to do this with, 1, debt levels this high, and 2, with the active opposition of the Treasury Department and Congress. And so I think right now the Fed is trapped. We're basically Japan light at the moment. And whether they raise rates or lower rates, it leads to more inflation, right? Lower rates, of course, we end up with another asset bubble and inflation. But, higher rates, we're going to end up with higher interest expense. And we're going to see interest expense from a couple of years ago of, I think, 600 million, should be about $1.5, $1.6 trillion in the next year or two. That's going to blow a hole through the budget, and the only thing we're going to do is monetize it.
Gary, you're always so articulate with this. I want to just go to David Rosenberg for a second because I know he's got to jump. You've been a great addition to this. Do you have any parting thoughts before you go to the next thing?
Yeah, sure. Because I have to leave here in about I have a 2 o'clock. I would say that what's important from a fiscal stability standpoint is the debt service ratio, like it is for any entity. And right now, 15% of the revenue base for Uncle Sam is being siphoned from interest expense. And you get into real serious trouble when that number crosses over 30%. So it's not about the debt, it's about the capacity to service the debt. And there has been no failed auction. We had a couple of sloppy ones in the past couple of years, but that was when inflation was a lot higher and people weren't sure if it was going to come down. So I think that we could be building towards a really big problem, no doubt about it. And the question will be whether the United States can stave off a fiscal crisis like Canada did back in the mid-1990s, but it'll take some very tough fiscal choices. I'll just finish off by saying that there is, I'm not going to give a 5-year view or a 10-year view. I'll just say for the coming year, fiscal restraint is baked in the cake. It doesn't matter that it's an election year. Fiscal drag this year will be 1 to 1.5 percentage points off GDP. So the government sector will not be adding to aggregate demand this year. And that's something I want to say emphatically. We'll see what the consumer does. It's surprised the whole way through. I do think that we are going to be seeing the corporate sector naturally, unless we're going to say that the business sector is irrational. The business sector knows that they're going to be facing a wall of refinancing in the next 3 years. So what are they going to do if they're rational economic agents? They will be building liquidity, which means that they will be spending
I'm going to
less
be
and
looking for
saving
another
more
entry if we get
to
it.
prepare for the debt service
I will
costs
take this
that they're
trade
going to
again.
be facing in the next couple of years. So all roads lead to a recession, in my view. The business cycle is not dead. Lags are long, longer this time than normal, admittedly. And in recessions, inflation goes down because demand contracts and interest rates go down. And then maybe this time next year, we'll talk about 2025. Anyway, Happy New Year, everybody. Thanks for inviting me on the call. It was a pleasure. I learned a lot, and take care.
Awesome. Thank you, David. All right, folks. So as we go into this next half hour, let me just say, Frank, if you can hear us, you got a request. We've been trying to get you up here. But we do have Yusko on now and Caitlin Long. But first, I want to go to Jerry or Chris and just hear your thoughts on the last hour or so. Any comments you guys want to make? And then we'll start with Mark and then go to Caitlin.
No, I mean, just connecting macro back into Bitcoin. I think the mix of speakers has been fantastic. What I would say is, the use cases that we've seen at Hashdex, and we're a global asset manager. We have products in Latin America and in Europe. The use case for Bitcoin is super unique based on geography, right? So the company was founded in Brazil, and the way that Brazilians in Latin America look at Bitcoin, due to the way that governments try to manipulate their currencies, the insane, the insane ways that the currencies operate, the amount of inflation that they see, which is, many X times higher than the US is sort of a good use case for, the last hour or so, as we've seen from the conversations around, in many cases, a very bleak outlook by a number of the other speakers. I think one of the things that we've seen, and we saw it in the regional banking crisis, beginning of last year, those things aren't necessarily over. Those things will continue, and it's been sort of an interesting situation to see the macro picture play out while these, Bitcoin ETFs are approved.
All right,
As
so
you
right
mentioned,
now,
Mike, we have ticker DeFi, which we
real
had our
quick, right
listing
now
rules
there's somebody
approved
trying to
on
give an
Wednesday, and we're
explanation on
working on getting
how
our S1 approved
people
and,
can
and
come up with the
effectiveness. So
value of how
keep an
much
eye
their
out for that.
option's
But
going to be, or how
I
much they're
think
going to make, or how much
the
they're going to
interesting
lose.
thing in
And
the
he's getting a
search
little
for an alternative
tongue-tied.
investment,
He's using the price of the
you
option.
couldn't really
$2
dovetail
after
the
money. Yeah,
two
you can do all that.
more
There's an
perfectly when you
easier
look at
way. You don't
history
need to
and you
do
look
that
at some of the
shit.
ways that
There's a hell of a lot
internationally
easier way.
people turn to Bitcoin and
It's
turn
in the
to other
Greeks.
cryptocurrency
It's in the
digital
Greeks.
assets to
Nah, I
alleviate
love you guys.
macro
I'll turn this
concerns,
back
right?
on.
So
I just
been
we'll
a
go
great
over that
part of the
another day.
conversation.
Like it's not that hard.
Awesome, Chris. So, my friend Mark
I also
Yusko,
feel like he's
introduce
telling them the
yourself to
wrong
those who don't know
information.
you, and
So it's
let
like
us
it's
know what you're
frustrating.
thinking today.
Hey, y'all.
You can
thanks for having
add
me,
in the
and,
price, and
thanks
then
for
when it gets to
organizing.
your
Great-
thing,
great
that's
lineup.
not telling you how much you're going to make and
Yeah,
how
look,
much you're going
I
to
would
lose.
join in the sentiment that I think has been pervasive. That
You just know you spent
macro
$250 and you got to
globally
get to like
is
$1 or $2 away
challenging,
to break
in
even.
terms
That
of-
doesn't
of
tell you how
headwinds.
much you're going to make.
Global growth is declining. Demographics are quite challenging. Money
So
supply
when people
growth
tell you they
turned
want to give you
negative for the first time
information,
in
sometimes they
100
may not
years.
have the
It's a pretty
information.
amazing
Maybe
stat,
they
if you
want to
ask
give
me.
you the information, but they don't have it. But they
and I
just
think
want
there's
to
a
be
meeting
cool.
going
Or
on.
they want, I don't
across the
know. I
pond
don't know.
That's trying to fix that.
But
you got.
I don't like it.
Every year about this time, the big central bankers get together and decide who gets to be in the hot seat for the strong currency. I think this year it'll be Japan. The yen will strengthen. That will be a surprise to everybody. That'll be tough for Japanese equities. The yen and the euro and the dollar will get to weaken a little bit, and the renminbi will continue to strengthen. So that's one thing that gets decided. But the second is how much is the PBOC going to print? And I think that number is going to be very large. Could it be $1 trillion? Probably. That will reverse much of this wave of contraction, and that'll be a tailwind for all assets that are priced in fiat currencies. I think one of the most interesting things for me is when people don't appreciate what was just being discussed about the difference between different regions and different places. There's never been really a bear market for Bitcoin in places like Venezuela or Turkey. Brazil has a little bit of volatility, but not much. It's mostly number go up, but it's really not number go up, Bitcoin go up. One Bitcoin's one Bitcoin. It's bolivars go down, and reals go down, and lira go down, and dollar go down. The stat that I still don't understand how people don't talk about is, oh, equity market's making all-time highs. Well, only if you price in dollars. If you price in gold, it's dead flat since 1997. It's a long ass time. So as Bitcoin continues to do what it does, TikTok next block, and become the way of exchanging value in the future, and as it disrupts all of the banksters who've had a good 838-year run, and that run comes to an end this year, and hopefully Caitlin gets to be at the center stage of that in the front row. To quote Bob Uecker, most people have no idea what I'm talking about, but I'll leave it there and happy to answer questions or cede the mic to Caitlin, who's way more interesting than I am.
I don't know about that, but I do want to hear from Caitlin. Caitlin, if you don't mind, unmute and introduce yourself. Let's get your thoughts. And then we were able to get Frank up too, so we'll go to him after that. And then it's really going to be the four of you for the next half hour. You, Gary, Frank, Yusko, and Caitlin. So we can go wherever we want to go. So Caitlin, fire away.
Hey there. Thanks for having me on. Hey, Mark. Hey, folks. Thanks for joining. TikTok next block. I don't care that much about what happens with Bitcoin in the short term. ETFs, I think, clearly bring in a new source
Yeah,
of
you do,
buyers,
because if
new
they were going to get
liquidity,
rid of
but
it and the
definitely
United
have a
States was
double-edged
going to
sword.
ban
A
it,
lot of
you'd
folks
be
have been
shitting
talking
your
about
pants
that
right now. So don't tell me
recently.
you're not worried about what it does in the
And
short term. Yeah, you
mostly
are,
these
because the United
days,
States
heads
came out and said
down
that they're banning it
in
and
our
no one's
Bitcoin
allowed
custody
to do
business,
it,
which
this
we
and
just
that.
launched.
You'd be shitting
We
your pants,
launched
because that's how you make a
segregated
living.
Bitcoin custody,
So
which
you are
really
worried
doesn't
about
exist
it
in the
in the
market.
short
We
term.
actually custody the actual customer UTXOs at Custodia. Got to give the disclaimers. We're not licensed to do business in every state yet, so check our website. And our U.S. dollar deposits are not FDIC insured. We're a non-lending bank, but we're building that out. And I'm discovering that because we built our custody as much as possible in line with the ethos of Bitcoin itself, which respected property rights and accuracy of ledger, we have some interesting opportunities. There are parts of the Bitcoin market that I didn't even know existed with certain types of Satoshis. And certain types of Satoshis are viewed as collectibles, but you really can't custody those in an omnibus structure. And so some folks have come to us and said, hey, you built a segregated structure. We can custody these certain types of Satoshis, like rare Satoshis, with you. I'm learning every day, and I've been in Bitcoin now 11 years, and I'm still learning something new every day. And I think the halvening is going to be bigger than the ETFs, but hats off to the folks who actually did get through the SEC. Better late than never. I'll stop there.
That's wonderful. And having just gone through all this with the regulators, custody is an issue that I do think they need to look at more. I think it's crazy that they're suing a custodian that most of the funds went with. I think there's a lot more to do. I know Hashdex uses a multi-custodian model everywhere in the world, and that's the plan here as well. But Frank, I want to get you up here. If you don't mind introducing yourself. I know your story with this and what you do now. So unmute and go ahead and introduce yourself. Bottom left little microphone button. Come on, Frank, you can mine millions of Bitcoin, but you gotta unmute.
Bottom left, Frank.
It's getting ready to pass, guys, this bill,
Okay,
so
so
watch
while
if
he
the
does
market,
that,
it's already starting to take off. But
I
wait
know.
for the
Caitlin,
pullback. I'm waiting for
wanna
this
come back to
pullback
you if
here
I
around
could,
473.50-ish.
you know,
All right, I would
having
like to get
pushed through
472 or 473,
crossed
but
some
I
of the
wouldn't mind a
regulations
54.
And with the ETF, I wanted to get a sense of, if my statement's right when I say that, while we may not think regulation is perfect right now, we are making progress. I mean, is there progress in the sense that regulators aren't supposed to be friendly, right? But they're more open-minded and more engaged.
And I'm thinking about taking a
than they
476 long, like I'm going to take a long
a
two
year
476
ago.
if
And
I
how
get
do
a
you measure that?
pullback.
Well, I would certainly say the state regulators, that's been our experience. We have one regulator, the Wyoming Division of Banking. They have invested a lot in getting up to speed on supervising the digital asset banks that have these special purpose depository institution charters. And for those watching our lawsuit, there was a filing that I'll just point you to yesterday. The Wyoming Attorney General came in yesterday with quite a filing. I'll leave it at that. The state is roaring mad at what the Fed did, and is stepping up, which is I'll leave it at that. So at a state level, this gets back to Balaji, Make America States Again. The federal regulators have been captured by this ideology, and it took a while to figure out that. I'll say something that's going to sound extreme, but I've had multiple insiders tell me, and this is no longer even a secret. It was just an open secret for a while. It's no longer a secret. Biden's not in charge of his own financial services policy. It got outsourced. And that wing of folks in charge of financial services regulation in DC is very anti-crypto and very pro-CBDC, and understood that the regulatory agencies taking the legal risks that they've taken that have been slapped down in the courts was potentially going to result in blowback. And one of the insiders who came forward to me said they'll just use that as an excuse to pack the courts. They're that ideological, and they really want a CBDC. So I put out a tweet this morning. One of the regulators, the head of the OCC, who has been thoughtful on banking issues, he was warning about bank run risk at the banks serving the crypto industry a year before the bank runs happened. And I saluted him because he was right. He was spotting an issue and getting ahead of it. They didn't change anything that prevented the bank runs from happening, but And then, of course, what we learned is it wasn't the bank runs at the crypto banks. It was online banking across the board that exacerbated the speed of the bank runs. But the reason I bring it up is a tweet I put out this morning is there are 3 different factions in the bank regulatory fight. One wants a CBDC, wants all the private banks gone. Okay, and that's the wing that's in charge of financial services policy in DC right now. The other just wants bigger and bigger, more powerful banks. And then the other wants to keep the status quo and just have the Fed continue to bail out when there are liquidity problems. Where's the taxpayer in all that, by the way? Because those 3 factions seem to be warring, and there isn't anybody saying, "Hey, wait a minute, maybe we shouldn't have bailouts at all." But I digress. It's been an interesting journey, and I'll close by saying the ones who have litigated have actually been the ones that forced the regulatory change. This was not by choice. And we've just seen the SEC be forced to come to the table, and we'll see about the bank regulators next.
It's amazing. I want to go to Jerry, but
I think I'm here.
I was recently at a reimagining investing conference in Toronto, and the regulators in Canada, it's like a dialogue. What we hear, the process is, I guess, because we're stuck in these laws from 1933. It's like you have to write everything down, pay some lawyer an insane amount of money, pay some company to file it, which our legal bills there are like $1 million a year too, and then wait 3 days for a response. Like, it should be more at the table. Jerry, why don't you chime in?
Yeah, well, I was just going to ask a question to follow up on Caitlin's points, because I think it's something that probably most of us don't think a lot about, but I think she, for better or for worse, has had to really think about the role of kind of states here versus the federal government. And I'm curious, like, how do you see that playing out? Like, so assuming that we don't have legislation that creates a market structure, other framework for digital assets anytime soon, how do you see it? And I live in Massachusetts, so I'm not expecting anything great from my home state here, but states like Wyoming that have really been at the forefront in thinking about this, like, can that really kind of force the hand of the federal government to eventually do something? Or how do you see this kind of playing out over, say, the next 12 to 18 months or so?
Well, the state of Wyoming, it is now public information, worked hand in glove with the Fed to create this special purpose charter beginning in 2018. It has come out that the state was meeting weekly with the Fed on this charter. So the state didn't do this in a vacuum. The state was trying very hard to fit the charter within the existing regulatory regime. And I can say, as one of the folks who was there, the state actively didn't want to become different than other states. They wanted to lead, but they wanted to do it within the regulatory regime. It's Washington, D.C. that rejected that. And now here we are. And so again, when it becomes public, it's up on Pacer. For those who have Pacer accounts, maybe somebody can post it on Twitter. You take a look at what the state attorney general filed just last night in our case. And I think it speaks volumes. Now, will the states be able to fight back against this federal overreach? Keep an eye out on the litigation. It's so interesting because in Wyoming, it has been a bipartisan effort. And there are powerful Democrats in Wyoming who have called the White House and said, back off. We're trying to do this right. And for whatever reason, it's falling on deaf ears. And one of the insiders told me, and I can't prove this, okay, but what's so fascinating is the insiders who came forward to us over the last several months, beginning right after the Fed denied us almost exactly a year ago, all these insiders are Democrats. These are not Republicans. They are pro-crypto Democrats, and they're appalled at what's going on. And that wing of the party, including Mike Novogratz, he's openly talking about the fact that Elizabeth Warren has given him the cold shoulder. But they're all acknowledging that she's in charge, and she put her people in the key roles, and they're all answering to her. And one of the insiders came forward and said that the White House chief of staff originally directed all the White House staff to keep Liz happy. Okay, well, then that explains everything, doesn't it? Because it explains why he didn't campaign on this, but that's how he's actually governed, because he outsourced it to someone. And, I wish the press would report on things like this. I wish people, when they were voting, would know. It's fascinating. 61% of crypto owners in the United States voted for Biden. I don't think it's going to be that high this time around, not anywhere close.
Oh my God, Caitlin, where do I begin here on this? I would say on Novogratz, they're trying to become a U.S.-based company. They meet every qualification, spend a fortune.
I'm trying to hang on here, guys.
Change their domicile.
I have some
And
stuff
we need
that, like,
U.S.-based companies who are
I can do it this
Bitcoin
weekend
or
and
crypto
into
related.
tomorrow and to this
They're not making it
afternoon.
easy at the SEC.
They don't want them. It's an outright.
See what happens
hard
here
no,
if we can get
which means
if
the
we
only
can get a
source
pullback.
right now,
We might
the only
end up
pathway
just
is through the
getting
courts.
a
So I do want to bring Frank in.
lift
and
just
Frank,
right
you've
up
been
into that
very
area
patient,
without a
and I'm glad
pullback
you're
with
up.
this.
Try and control yourself on the discussion.
I
on
guess Bill
regulation. I
getting
know you've had
passed.
a lot of experience
So
on that.
just
Definitely want your insights on both gold
sometimes
versus,
you got to
we'll
pay
say,
up for
Bitcoin.
it. But
Keep
we're
the-
right at
keep the
resistance of the
discussion
day. So if we
simple.
get a pullback, I'm going to look for a pullback right
give
into
your background
470,
first. Thank you,
Dan.
348.
Can you hear me?
And go for that low.
Good.
I'll
Well,
see
thank
what we
you.
do at VWAP.
I'm known
All
for
right,
the
see what
world
we
of
do at
gold. I wrote a
VWAP,
book
but
on gold.
that was a
and,
nice break
went
and
down the journey
retest.
to the Bitcoin
All right, that was a
and
nice
exploring
break and
that.
retest of
And
yesterday's
after I launched
close
my
and
Jets
yesterday's high.
ETF, I went out to try
So
to launch
if
in
you don't see here on
2017
the
a
15
Bitcoin
minute,
ETF,
that
and
was a really
realized
nice
after
move.
meetings and $1,000 an hour legal bills here, and went to Canada, visited with the Ontario
Yesterday's
Securities
high,
Commission, who are
yesterday's
extremely
pivot high
open. They
closed.
have
That's a
the
double top
process,
for the most
but
part.
it was a
Support,
no-go,
resistance.
and the opportunity
Pulled
came
back in it.
to put up the
Brought
seed
in some
capital to
buyers.
start
Volume
the
is
first crypto
not that
mining
high.
company, and that was Hive Blockchain,
That's
which is now Hive
so
technology. And
I do
and
see
I think
that.
in that
Volume's
journey,
pretty low. I'm going to get
there's
something
been
to drink. I'll be
a
back
lot
in a
of
minute. We'll see what
regulatory things you have to
happens here
realize,
going
you have to
into the
navigate
close,
through.
and then
There's so much FUD you have to navigate through.
yeah,
But
hopefully we
Hive
can
was
find
the
something.
darling.
All right, yesterday was a
it
good
had a lot
day,
of gold
so
investors that were
I'm
reluctant
not
to
in
buy
a hurry.
Bitcoin.
I'm not in
They
a
read
rush, but I
negative news
will
even
take
back
it
in
if I see it.
2017. So Hive became as
And
a
don't be
proxy
shy.
for
If you guys
Bitcoin
see
investors,
anything,
and we
throw it
were
in the
mining
chat.
both Ethereum
Throw it in the
and
chat. If you just want to talk,
Bitcoin.
say
We were
hi,
mining in
anything,
Iceland,
participate.
Sweden, and then
You
came
guys
into
want to,
Canada.
if there's anything you
That's
guys
sort of
want to
been
look
sort of
at,
that
ask my
that
opinion,
journey.
anything,
Other companies have come
fire
along.
away.
The Bitcoin mining industry is now robust. At the beginning, there were very few professional CEOs. There's now, it's just dominated by an organization called YPO, Young Presidents Organization. When I first launched this, out of the 30,000 YPOers, there was only 4 that were interested in Bitcoin. There's now over 1,000. 40% of all Bitcoin mining now is supposedly CEOs are of this organization. So it's really elevated itself when we take a look at the caliber and the quality of executives that are running this business. So I'm happy to see how it's evolved. I would share with you that one of the things we have to be careful in the Bitcoin mining industry is that what happened to the gold mining industry when the GLD came out around 2004, because we had this run by gold mining companies with Pac-Man raising capital quickly, easily, just growing for the sake of growing. And along came the institutionalization of gold, showing up in 401ks.
Watch the cues and I'm thinking about a TSM short
to
here
buy,
and see if we can bring this thing down below this level.
2008, a big bifurcation in the gold mining stocks. Their valuations changed. They were a proxy for a lot of gold investors that didn't want to go and physically buy gold, but now they could use the GLD. And I think that that's what could happen with Bitcoin. So the Bitcoin miners are going to have to be very conscientious about the dilution they have, how they protect their cash flow per share, their revenue per share, their Bitcoin per share. I believe, this is my opinion, that it will evolve this way, that there'll be a separation those
It's
Bitcoin
2:30. I
miners
don't know
that
if you guys
have
heard
the
me or not.
discipline of running a business
I'm gonna
like
go
a
make some
business.
coffee real quick.
And so
And
that's where I see
I
from
am
that
looking to
industry.
see if we do
But on
not
a
get above
macro
VWAP.
basis, I think that
I believe we
we're living with a
will.
contraction right now
It's
with
hard to
PMIs, the global PMI, which is the Purchasing Manufacturers Index, or they call in America the ISM. It's probably, for me, the most important leading indicator because of the correlation of commodity demand. And I have
But I'm thinking
commodity-based
about
funds, and so it's
a
interesting to see
possible
how when
short.
it's
It
above
feels
50,
like
below
TSM just
50,
cannot.
and what countries are. So I track the
It's holding
G20
this level.
countries in particular. We were below 50,
So,
and that means rates are going to fall.
I don't know.
Well, this is a year rates are going to fall, but 70 countries are going to go through election process. So I think we're going to continue on the fear of going into an election year, that the money printing will continue. And I think the exercise, which really started to grow in 2000, 2001, was MMT, modern monetary theory. And
I thought he
every
was going to
time
say
there is a panic by
MMTLP.
policymakers, it goes to print the money.
Yeah, you
And
guys
what
know that.
I've seen is that a
MMTLP.
lot of the gold investors are there's a when you look at the demand for gold versus say Bitcoin, when you look at gold, it is 60% of demand is love, and it's outside of America. 40% is fear, and that's dominated in America. And so when you take a look at why gold didn't collapse when rates went up last year, technically it should have been 1,300. It held and it showed this resiliency.
Because
And Bitcoin, with
energy
all
and
the
oil was
negativity
higher, my guy.
from FTX, etc.,
What kind of
and
excuse you gonna come
Celsius,
up with?
it plowed through. So there's some really significant
Again,
dynamics
just
there.
because
And so
you
in that
think they're
analysis we
professionals,
recently saw in the
be
world of
careful who
gold,
you listen to.
starting in October, Costco, and how they were able to get physical gold that amount, but they sold out 100 million ounces of $100 million worth of gold, and limited to 2 ounces per person.
I'm
And
curious
in
if
that
he's going to
study,
bring it
it was
up.
predominantly culturally, it was
Basel III.
Asian women,
Gold
professional
was
women,
then in
the average consumer
2003, in the beginning of 2003 as
Costco's
well,
makes over
was a
$130,000
tier
versus Target's
turned
like
into a tier one
80,000 and
assets where
Walmart's like
banks could purchase
60,000.
that and
And so
claim
you
those
see that there's this
golds on their
cultural
reserves
affinity
on their
that I
balance
come
sheet.
back to, that the love
That's
trade and
another
how it
reason.
relates to that, where this big buyer comes in. Now we come to Bitcoin. Bitcoin has a complete different demographic. It is not the baby boomer, which I am of a vintage, but it is a millennial and generations X, Y, and Z dominate that space. They never played Monopoly. They never had a paper route. They're all gamers. They earn digital money. It's a complete different psychology. And so I think that this transfer of wealth on a macro basis from baby boomers like myself going to millennials and younger that have this greater confidence in a Bitcoin and a Bitcoin network, it's only going to grow, and it's very significant. And so from a macro point of view, I think it trades higher. I think a gold will continue to be for the baby boomer mindset and central bankers, that the idea of the tangibility of gold. But I think that Bitcoin, which the supply is capped, will grow. And I also think it's really significant that there's about 195 countries in the world, 150 central banks, and really about 100 are functional, which you would call central banks. And there is 17,000 active Bitcoin nodes in the world. It's a magnitude so much greater. It's like another metaverse. So I think that the growth in ordinals and art is going to become significant when you take one Bitcoin and turn it into 100 million Satoshis. And my daughter, who's 8 years old, I can turn around and get a Satoshi for her birthday the day was done and attach a photograph to it. I think things like that will grow. And we've seen for some of our Bitcoins we've been offered that are not worth $25. We've been offered $250,000 for it because they are at a certain numbers at a certain date and time. And that decentralized network of 17,000 active nodes is so powerful. That is so.
It's getting a little
it's been
crazy
so
in here, don't you
resilient
think?
with
I think
all
they
the
need to
attacks
turn that
from
man's
climate
mic
change
off.
fanatics, from the Bank of International Settlements, that really, because we have operations in Sweden, Iceland, and we follow the news.
He needs to take
out
some
of
sales
Europe in a
classes
very
also.
active way.
He
You
needs to
can
get
really
learn
see
how to.
how
If
the
he's trying
Bank
to
of
sell
International
something,
Settlements
he
is
ain't
pounding
doing it
the
here.
table anti
But again,
the Bitcoin
just because you think they're a
ecosystem.
professional,
But I think it
and because they
continues to
are in
grow,
the capital markets,
and I
does
think
not
there's
mean
lots
that
of
they're
education. We have
correct.
to continue to deal with it.
Don't believe everything you hear.
And I think
And just because they're a
Bitcoin
professional
miners,
doesn't mean that they're right.
is
They
if
can be
these
wrong
other
too.
innovations like Ordinals are able to really get big traction, there'll be another source of revenue, and it'll be a powerful, like you have airports all over the world for moving people and moving cargo. This network is going to be so critical for moving digital assets.
Wow, Frank.
Hey,
That was
Michael, do you mind
awesome.
if I add something on the regulatory side, because we're talking about that a lot right now?
Yeah, why don't you
So-
jump in, Gary, and then we want to get Scott up here. He joined too. So why don't you jump in, Gary?
Sounds good, thanks. So, Caitlin was talking about the regulatory environment and Liz Warren's objections, and I agree with Caitlin on all of that. The thing that I would add is there's a reason that the government is opposing these kinds of things. And it's one, because the financial benefit of seniorage, being able to clip the value of a dollar through inflation, is hugely valuable to the government right now. We are basically funding our government through inflation rather than through taxes or reducing the cost of government. And their ability to do that and continue to spend without having to go to the American people and say, we're going to cut spending or tax you more, that gets you voted out of office, is hugely valuable. And, Liz Warren's arguments about, illicit activity in Bitcoin, given the amount of illicit activity in the dollar, is disingenuous. And you either have to assume that she's being dishonest or is incredibly stupid. I happen to think she's just being dishonest about all of that. And one reason is because of the benefit of seniorage. The other reason is these CBDCs, which basically combines everything wrong and immoral with fiat, and then combines that with a social credit score. And this is a nightmare for the case of freedom. Try to imagine the government having a record of everything you've bought, everything you've spent, to be able to control that. You say something they don't like, you have a post on X or Twitter that they don't approve of, and all of a sudden you are unbanked, or you can't buy certain things, or you can't travel. This is a nightmare for the case of freedom. And the thing that I would add is to everyone, remember, one, please, if you ever get a chance to resist CBDCs, please do so. It's very important. Even if they say, oh, we'll give you money, we'll give you a discount, they will try to incentivize you to adopt it. Don't do it. You're putting yourself in a cage. But the second thing is, remember, the US government, no government can regulate Bitcoin. They can regulate the ETFs. They could turn around tomorrow and make the ETFs illegal and fight it through the courts, but they can't regulate Bitcoin. And that is a good way out of the system. Gold, again, is a good way out of the system, assuming you're in a position to carry it. The only other thing I'd add is there was a question earlier on using Bitcoin as a currency. And one of the things that I think was pointed out by a previous speaker, which was terrific, is the whole discussion is reminiscent to me of discussions a year or two ago on whether the dollar was strong or not. And if you were a foreign currency trader, the dollar was very strong, right? It was strong versus other currencies. But if you were a U.S. consumer,
These guys
and you
go
cared
off
about
on
the
some
purchasing power of
crazy
the dollar,
tangents, don't they?
all of a sudden,
So,
the dollar
like,
wasn't
some of
so
the stuff
strong.
he's saying
It
is
was
true,
weak
right?
when you were trying to
Obviously,
buy
it's true.
things
They
like
can
food,
they can get rid of
fuel,
ETFs,
shelter.
they can do this and that, but
with Bitcoin, we
God
see the same
forbid
kind of
that
thing.
they think that you
And
can't
there's
have
a
a bank
lot of
account
talk
because
in the
you
United
post something
States
on
saying,
X.
oh, Bitcoin couldn't be a currency
This
because
is
it's
why some
volatile.
people
Yeah,
don't
okay, fair enough,
mess
in
with Bitcoin
dollars.
and
But
all that shit.
because
this is
can't
the shit
remember
that
who
they
was
hear.
speaking
And it's just
before.
like, all right, like you're just.
But he was talking about the use
This
case
doesn't
in
even
places
sound
like
good.
Argentina,
Like,
Venezuela, Lebanon.
are you listening to
There are
yourself?
places where if you dump your local currency and buy
I don't
Bitcoin,
know, but
you're
I
basically
don't know if these
protecting your
people like
purchasing
hear what
power
they're
for the
saying. Like,
following month or the
why would
following
you
year.
say
And
that?
I've spent time in
What are you
Argentina,
trying to
and
do?
the amount of time,
I don't even know.
effort,
I'm just
energy,
playing
and
it because I'm making a cup
intellectual
of coffee
horsepower
and get a couple
those
things
people
so
spend
we
on a
can
weekly basis
go
trying
into
to
this
get their
last
money
hour.
out
It's
of
kind of
pesos
funny to me to
and
hear
protect
some of the
themselves
shit that
from
they say.
the
It's
debasement
hilarious.
of their own currency is incredible. Bitcoin is a great way out of that for a lot of people.
There's
And
been
so
some good
I think
points,
that's
but
something
some
that
of
was
the shit
pointed
gets
out by a
way
previous
off the
speaker, but
wall
is largely missing
and
from a lot of the
needs to
conversations
go
about
on the
whether
fourth
Bitcoin
floor
can
of
be
the
a currency or
hospital.
not.
Anyone heard of the country Uruguay?
Yes. Yes.
All right. I again very articulate, and I'm scared to death of the Black Mirror episode that CBDCs create as well. Listen, we just got Fred Deal just joined us as well, but I've been trying to get Scott in. Your second wolf of the day. So Scott, you want to introduce yourself and chime in?
I'm much more comfortable asking questions than answering them, guys. And Mark, I think I've spent more time with you than I've talked to my mom in the last 6 months, buddy. So good to see you there. My name is Scott Melker, often known as the Wolf of Wall Street. I'm a podcaster, YouTube host. Like I said, generally I'm on the other side of the microphone, asking smart people questions and shutting up and hopefully learning something. But hopefully I can bring something to the table. I'd actually rather hear Fred speak, to be quite honest, who's one of my favorite podcast guests.
All right, so why don't we go to Fred, and then we'll get back to Yusko and
Please do it.
Yeah, Fred, why don't you unmute, introduce yourself, and let us know what you want to talk about today.
Great. So hi, I'm Fred Thiel, Chairman and CEO of Marathon Digital Holdings. Appreciate being on with such an esteemed group of members of the community. Goodness, it's I feel unworthy almost, but it's great to be here. I think what's important, I think, in these days to be thinking about, while the ETFs have been approved, we still, I don't think, are seeing the institutional movement into the ETF, but don't be afraid. This is going to take time. This has just been announced. People are now kind of evaluating. People are going to start looking. What you're seeing, in my opinion, I think, is a lot of rotation. People who have been in GBTC, taking advantage of the discounts that they had and moving into some of the other ETFs. The fees charged do have a serious impact on people's choices. I think what's really optimistic to me is the number of products that you're seeing being applied for that will now essentially further monetize these ETFs, long, shorts, options, all sorts of other products people are trying to build around this, which will build the trade around Bitcoin, continue to promote Bitcoin ownership. And then it really comes down to how people are going to want to hold and invest in Bitcoin. Do they want to hold spot? Do they want to have self-sovereignty? Do they want to leverage companies and managers who are leveraging their balance sheets to hold Bitcoin? MicroStrategy being an example. Do you want to own miners and take advantage of the additional beta from miners? There are lots of ways you'll be able to play Bitcoin in the markets, and it's going to continue to firmly establish Bitcoin as the king of cryptos, which is going to be very important. I don't think the ETH ETFs are going to have as easy of a time, most likely because they haven't been legally contested yet. And so the SEC is under a lot less pressure to get those approved. So I think Gensler still has his thoughts on regarding the commodity security issues of that too, as well. As we look into this coming kind of year, I think it's going to be a very mixed bag. I don't think it's a given that we're going to see 6 cuts by the Fed. I don't think it's a given necessarily that we'll see the dollar drop immensely. I think the only thing is a given is that fiscal spending will remain out of control. The government's going to continue to have to spend. We may even see a bond auction that fails at some point later this year. But more realistically, we're going to see global liquidity increase more because of international
More
events,
realistically,
China, European
holy
countries,
shit!
etc.
Did you just hear
than the
the
US.
first 4
but the back
sentences,
half of
5
this year
sentences
will
that
likely
came
see
out of his
some
mouth?
rate
Holy
cuts,
shit.
which will obviously all go to benefit Bitcoin.
What
The
a nut.
geopolitical situation is going to remain very uncertain and very troubled.
Pax I don't
We're
know
going to
what that is,
continue to see
bud. I have
problems
no idea what that is.
in
But
the
what I
Middle
do
East.
know is
It's getting
we for
worse
sure, I mean, again, it's
as
his
we
opinion.
speak.
For
As we
sure,
now
6
see
cuts. For
um,
sure. Okay, well, why are they
Pakistan
cutting?
getting involved more recently.
Oh, it's a stock? Yeah, I will,
So this
buddy.
is definitely
How you doing, COD
spreading,
Life?
and while
COD
everybody's
Life. I
trying to
like that. Call
contain
of
the
Duty knife.
contagion, I
You
think
just
the
got
level of
COD knife,
uncertainty
bro.
is going to continue to mean
So I'm
that
just
money
kidding.
is
I
going
just
to
made
have a
some
higher
coffee.
cost.
Yeah, let's look at it.
There's a risk premium associated with all of this unrest that people have not been used to, and even
Can
if
you give me
interest
1
rates
second?
from the
Because I'm
Fed
thinking
level
about getting a
come
short
down,
here
I think
on
money
Taiwan
rates are still going to remain
Semiconductor. See
quite
if we
high.
can't get this level to break.
Inflation is going to continue to be a battle, not just
I
because
want
of the geopolitical
I want you
situation,
guys
but
to
also because
understand
of
though that this is
shipping
holding.
issues.
So let
Shipping
me do
costs
a
are
little
up,
bit of just give me
and
like
the
10
types
minutes. Let me
of
look at
commodities
this
that the Fed can't
and
control
figure out
and the
what I'm
type
going
of
to do
spending the Fed
with
has no impact
TSM.
on will continue to run
And I
quite
will
rampant. On the one hand,
I
we're
will
seeing
most certainly
manufacturing
look at that, but I
PMIs come
think I want to
down.
try to
On
take
the
a
other
short on
hand, we're
this and
still seeing
see if I
consumer
can't take
spending.
this
And
back
until we
down
see an across the board
10
disinflationary kind of
107
move, I think
ish.
inflation is going to remain in that 3 to 5% range, and the Fed is going to be loath to lower rates and let it get out of control again. So those are kind of my thoughts.
Yeah, just give me 1
Obviously,
second, buddy.
love Bitcoin and think that Bitcoin is going to have a couple of great years ahead of it here as more and more people adopt Bitcoin as an investment asset that they use for holding value. And we're going to start seeing more and more developing countries start being very positively inclined to Bitcoin, which is also going to help and drive adoption. And lastly, I think layer 2 applications on Bitcoin are only going to start really coming to market this year in a big way. We'll see a lot of initiatives from companies that will essentially bring all of the key functionality you see in the Ethereum world coming to Bitcoin. And at that point, I think you'll see some pretty dramatic expansion of adoption. So that's kind of my thoughts.
Wow, that's great. It's like around the world in 3 minutes with Fred Thiel. Yeah, that was awesome. Along those same lines, Fred, a question I have is, given all your travels and some of your relationships in the Middle East, give us a sense of what they're thinking, what they're saying to you as far as whether it's our debt or our regulatory environment, or just, is the U.S. A strong place in their view? Has it really changed?
So in the Middle East, it's interesting. The Middle Eastern sovereigns all want to become Bitcoin miners because they view Bitcoin as an interesting reserve asset. And the problem is today, if they mine Bitcoin and they hold Bitcoin, the
Here I am
U.S.
talking
through
without
its
the
OFAC
mic.
process
I don't
can
know what
essentially
they
block
have
them from
going on,
transacting.
but
So
I
that's
do know
why
right now this is
sovereigns want
setting
to
up
not just
for a
mine
nice
their own Bitcoin,
squeeze
but they
that
want to
will
operate
be
their
a
own
10
pools
bagger
and
on the
build all
stock
their own
alone.
infrastructure. And
Look at
UAE
that
is a perfect
200-day moving
example of that.
average
We're partnered with the
coming
sovereign
right
in
into
UAE,
that prior
and
resistance.
today they are
Right,
building out
just
all the
that
infrastructure
first
for
pop through the
distributed
50 and
exchanges,
100-day moving
custody,
average
everything
to
they need,
$3.30.
regulatory
That's about
framework, etc.
600%
So
right
that
there.
no matter what happens in the
500%.
U.S. or any other country in the world,
I
the
mean, I could
UAE
go
will
on.
be a
I'd have to do some
bastion
work
for
on this
not
thing,
just
but
Bitcoin, but also other cryptos. And so
I don't
I think this is
don't
going to
have
be
any information on
a
it. So
very
if you want to give me
interesting
some kind of
period
information,
of time where you're going to see
my
sovereigns not just in the Middle East, but you're also seeing
my
in Bhutan,
information's
for
in the
example.
description.
You're going to start
So
seeing
I
it in
don't
Latin
see
America.
anything.
You're
I
going to
mean, I
start
don't know
seeing
of
it
anything that's
potentially
going on with
in
this.
parts
But
of
if you have any
Central
more
Europe
information on
and the rest of
that,
Africa.
you
So
want to
they look
share,
at
hit me
Bitcoin
up.
as a way to kind of get out of the dollar, if you would, and all of the challenges that the dollar provides, especially if they're commodity producing nations. The U.S., though, is still viewed by many as a safe haven. If you're going to park money, the U.S. is certainly a safe place to do it. The question is that comes with certain costs, and the risk of the dollar dropping in value, high inflation, potential U.S. government debt defaults. Those are all very top of mind for money managers in these countries.
Wow, Fred, I think you just gave another point to Gary there. Gary was saying, don't let them have the CBDC, right? Like, this is another reason why. It's also why the the government's so slow here. They need to be afraid of this because it almost makes them irrelevant. Listen, I do want to thank everybody for joining and Hashdex for sponsoring. My name's Mike Venuto. I'm the co-founder and CIO of Tidal Financial Group. We help people launch and grow ETFs like we're doing for Hashdex here with DeFi, their Bitcoin futures ETF, and hopefully soon to hold spot.
See, if you start to get an
I got a
increase in
question
volume
from the
here.
audience, from Cynthia Murphy,
This is a
who's really
decrease
part
in
of our
volume
team,
on this
of
pullback,
the
but
think
if this
tank
thing
here.
picks up, this could
She
be a
wanted me to go
second
back to Caitlin,
opportunity
because Caitlin had
on
made the statement that
Tesla.
she thinks the halving is going to be bigger than
Let's
the
look at the
ETFs.
15-minute
I think
chart.
it's
Bada bing,
interesting
bada
because
boom. It's going to be tough.
ETFs definitely are the story
Short
we're all
term,
talking
I
about
think
today in the last
you
week,
do get a
last
pullback
month.
to like 210 flat. See, it doesn't. You
I
don't have much
Eric
room to go.
Balchunas, who's coming on later, was telling me
I don't think
his
it's going to
Vanguard
give you
people are getting
much.
sick
I
of him
mean,
talking about it. I
it
love
could.
the
Listen,
ETF
you
kind
could
of
get some
folks that have
people
been
to
listening today
capitulate here.
to hear why you think
It could
the halving
happen.
is going to be so big this year.
You know, it's funny. I'm going to draw an analogy that some of the
I'm going
professional
to-
money managers will understand.
Let's
And
see,
it's,
it's
back from my
242.
equity research days. The ETF craze is
Let's see if we can get a
equivalent to what
205.
merger arb investors are doing right before a merger closes. And then the longer term investors
Yes,
are just
but
not
I
that
think-
excited about it. But all the noise is
think
in
we're
the
gonna go
short-term
long.
speculators.
I think we're gonna get
And
a
the
long
first time
out
I
of this.
experienced this, were one of the
I mean,
used to be in
unless we
equity
can get
research,
it
one
to
of the stocks that I
205.
followed
Sorry.
got taken over. And
Right?
you just suddenly
I
get
think
deluged by
she
everybody
is-
who wants
I think she's
to
listen,
learn about the
if
you
we
know,
get a
everybody
pullback
who's in
here
a
in the
merger
short
arb
term,
position, and
I'm going to
every-
put this
every
trade
little
on. It
thing
sucks that it's
that
Friday
might move
tomorrow.
the price.
I
has a
got to
huge
figure out
impact
what
on their
like. I
trade,
don't want to
and they're
spend a
just
lot.
deluging you,
Number
and then
one.
they disappear after the merger closes. And I
Okay,
feel
there it
like
goes.
that's going to be
All right, that was your
a good
second
analogy
opportunity
here.
to take
There's
a
this
short.
rush
You
of
don't have
ETF
much on
noise.
it, in my opinion.
And then, you know,
All right?
those of
You
us
don't
who are
have much meat
long-term
on the bone there,
Bitcoiners,
so
we
this
just,
is not something
we
I
weren't really
would
impacted by it.
take.
And
To
sure,
the upside,
we
I think
followed it and
I might try
retweeted, but
if we can
you
get
know,
this
we're here for the
5-minute,
longer term, and that crush
3-minute
of short-term
chart-ish.
investors
If we get
that are
down
in
here to
and
the
out
support level,
will move on.
I may take a
And,
long to see if we can get a
this,
gap up
this will
tomorrow.
continue. I mean, this
All right,
is
I
where
want
the
to look to
analogy
see if we
doesn't
can
work.
get a
Is that
gap up
ETFs
tomorrow
obviously
on this.
have legs to them. This is not a short-term trade.
Yeah,
For
the
everybody.
10-year's been sitting
But,
there.
I think,
at
like Fred said, it's going to take a couple of years
4.1.
for it to really
It
play
is
out.
now. It's like so. It's
All right, why don't
not
we get
good,
Yusko's
but it's
take and
also.
Scott's take on this
I'm going to be
too?
honest. It
Yeah,
hasn't
so
had any
the-
bearing
I-
on really
I
anything.
hate to put her on the spot,
Right.
But, you know, she's everybody's new
It's
public
not,
enemy
but
number one.
at
But
the end of the day,
you know, we're just collectively bad at math.
you know,
and
we've been
Samantha
sitting here for a
Dulac
while,
is
and I've
the
been
newest
calling for a
example.
bounce back for almost 3
and
weeks, and I was
this is
early
just
on
math.
it. You know, timing
So,
it. I'm not always going to get
we
my
just
timing
had
right, but
a very meaningful
um,
demand shock.
it took a little
And the way
longer
supply and demand works
to
is there's
bounce
a
than I
demand
thought
shock,
it would.
and
Right,
the
4.1,
aggregate demand curve moves,
like you say.
and so the demand for Bitcoin.
This is
everybody's like, well, it's not real Bitcoin.
this is the
No,
range,
it's
though.
demand for real Bitcoin.
Right?
That's
Think
going
about
to rappers
think about
that people don't like.
go
but
back to like
still demand for Bitcoin.
November.
Went up,
And
and everybody did the straight line.
Go back into like
math
December.
of,
Like
well,
this
there's
is your
$30
range
trillion
now. Like this is your
in
resistance here. We've
advisors'
been
hands,
saying 4.2.
and 0.1%.
Right?
is
See if we
30
can't
billion,
take this
so
up to
30 billion on day
4.2.
one. No.
You know,
because there's 20.
and what's funny is I think yields are getting ready to pull
DBTC
back.
That
I think they're
needs
going to get ready to pull
eventually
back.
get liquidated and move over. So
Right?
net,
I think
you're
once
at
we
5
get to
billion, but that isn't
4.2,
gonna
I
happen
think
on
you start
day
to see a
one.
pullback in
and,
rates.
and not all of GBTC
And maybe
is
that
probably
comes
gonna
as
get liquidated.
earnings,
It'll probably
right?
get
Because
bought by BlackRock
right now this
first and
10-year is
rolled
setting
into
up
IBIT. But
where it's
the bottom line is 30 billion
where it got
is
through the
guaranteed.
resistance
That's
level.
10
Like this
basis
line
points.
here was this
300
whole
billion.
area.
Guaranteed.
Right? This is a nice
That's
look at this
1%.
actually. That's a
You know,
cup and
a year
handle.
from now, Merrill
That's a cup and handle.
UBS
I got
and
chocolate
even
on my phone.
Vanguard, maybe not Vanguard. 'cause
I
they're
don't like this
run
though.
by
This is what ruins it.
people.
That's what
But
ruins it on the daily.
UBS and Merrill will have in their models at least a 1% allocation of
Let me
Bitcoin.
look at this. Is this
Absolutely
20%?
guarantee that. And so that means every financial advisor in the
info
country
line.
has
I
to
want to
put
get back to Tesla because I
1%
want
for their
to
clients
take a
in
long.
one
I
of
think
these
we can
vehicles.
get a gap
So
up
we're
on
talking
Tesla. It's just my
300 billion
opinion.
demand shock.
I think we can get
for
a
an
gap
asset
up on
that trades
Tesla.
$10
Let's see
billion
what this
a
is.
day.
This is about 20%.
So P1 is higher than P0.
72%.
P1
Right
is
here.
higher than P0.
Sorry, right here.
Then we have a
This.
supply shock.
What
And
is
the
this? This is
reason
about
it's
20%.
bigger is because we're going from
21%
900
on the
Bitcoin
money.
a day to 450
Watch
Bitcoin
out.
a day.
That might be a
And
cup
even
and
at
handle.
current rates, which is $1
Dan
billion
Ives is on
over
Bloomberg.
4 days.
All right, so we're
sucking
coming
up
into the 50-day.
twice
We're coming right
current
into
production.
the resistance level here.
And when the
All
halving
right,
occurs,
so
the supply shock
I got to
is
be
going to
honest. I'm
move
seeing
P2
I got two
meaningfully
different
higher than P1.
ways that I could
And
that,
then
that
on
I
top
see
of
here.
it,
All right,
we haven't even entered crypto fall, which starts in June post halving, and you get the parabolic phase where the stupid people come
I'm
back.
bullish
And by
to
stupid, I mean gamblers
4.2,
and speculators who then will use
4.19,
leverage to
4.2.
buy the asset that's moving away
but
from
I
fair
would
value.
not
And
be.
we get the parabolic spike
If the
in
10-year
early
just took off again,
2025,
it wouldn't
right
surprise
before
me.
the next, probably late
Because you got a cup and handle
2024,
like
right
staring you right in the
before
face there.
the next bear market.
But what's going to
So
cause
be
rates
it.
to go higher?
But
I don't think
the
the Fed's
idea
going to do
that
that. They're worried about
this
the
was
lag
all going to
effect.
happen last week
I understand
is
unemployment's
just completely nonsensical. And
still
so
very tight and
the
actually going
halving
backwards.
takes fair value. Fair value.
But
of
they're
the
not
Bitcoin
going to raise rates. They would
network,
just
not
do
Big B
longer,
Bitcoin,
not
the
higher.
token, the little
They
B
would do.
Bitcoin
They've already did the
network
higher, and now they're
is
doing the
roughly
longer part. So it's not like they're
50,000,
going to go
51, 52,
higher
let's
to
round to
longer to
50.
higher.
The halving
So at the end of the day,
doubles
I don't.
that.
I still don't
Because
think
the
we
miners
get past
aren't all going to go out of
4.2
business.
because
Price will go up. Now maybe it
the rates
doesn't
are
go
going to
up
stay where they
double
are.
this time like the previous four
And on a
times.
10-year,
Maybe it only
30-year,
goes up
20-year
50,
basis,
60% because we have
the risk is at
inscription
the
fees
front
now,
end.
transaction fees. So
You
let's
know,
say
the
be
real
conservative, goes
risk
to
would be at the front end
75. That's
because if
fair
something's going to
value.
happen,
We're far from
or
fair
if
value.
something's
We get to
planned
fair
to
value,
happen,
then we go
if
way
you're going to
above
plan
fair
for it, you're going to
value.
plan for it in the
History
next
tells
few
us
years, in the next
2.3
year or two.
times. Maybe we only get 2 times this time.
Like we
Maybe
don't
only
know
get one and a half
what
times
could
this
happen
time.
in 10 years. We're
That's
going to go through
six-figure
two
Bitcoin
one,
this year in 2024.
two,
Then
three
the FOMO
presidents.
starts.
We'll have 3 presidents
So
by then.
anyway,
By that maturity. So
I love it. Phil, you always inspire me.
let's see here.
Can never get long
Tesla.
enough, right?
So guys, Tesla.
So I want to.
I do want to think about a long. So if we get this low volume pullback,
this is a little bit of a random
I'd like to
question,
try and
so
put
forgive
this
me.
on. I know it sounds crazy.
My colleagues make fun because I
but
can't ever follow a script.
I do.
You've done
I want
so
to try
many
to put this
interviews
trade
in your
on.
career. You know,
All
who
right, I wanna try and
surprised you
put
the
it on.
most with some of their
So
answers?
we held 209.
That's an impossible. I was gonna say
it was Gaia.
It was Gaia.
Yeah, it's not good.
I was gonna
for
say
Tesla,
4 of them
I
are on
agree.
stage right now.
And look, man, Tesla could just continue and continue. But I
so
feel like
actually,
we need,
you know what? The one that
remember,
I point to
in
the
my
most
opinion,
often,
right?
I would
In my
say,
opinion, I think
very
we need to go
publicly, is
higher
actually Caitlin.
to go lower.
Because we sat down at
You're not-
Bitcoin
I don't
Miami, I
think you're
believe it
gonna
is in
have many people
2021.
get too
And I was
excited
there
about
ranting
shorting
and
this stock
raving
here.
about the SEC
All
and
right,
the
on
CFTC and all the
any type of
regulatory
time frame.
problems. And she very clearly,
really don't.
in 2021, not
really don't.
2022 or 2023, pointed out that the real concern should be with the banking regulators, the Fed, the FDIC, et cetera, and effectively way in advance of it actually happening, alerted me to the idea of choke point 2.0, which we saw very vividly come clear through all of 2023. So I would say that not that she surprised me in her sentiment or in what she was saying, but that she was so aware that the banking regulators were going to be sort of public enemy number one coming into 2 years, a year and a half after that. And that ended up obviously being the case. I mean, Custodia, her own bank, was sort of the first salvo in that when they had their Fed, master account rejected. But then we saw the absolute nonsense with
Maybe I don't need to fight the trend.
Silicon Valley and Signature, and
waste money trying to
effectively,
fight
I mean,
the
Signature
trend,
was seized
you
on a
know?
Sunday, right? Because of their relationship with the crypto industry, and then the struggle
Sorry,
of
I
the
didn't see
industry
your
to even
comment.
be banked after that, which still continues on. You know, nobody's talking
Yeah.
about it anymore because we have the
I
attention
think-
span of goldfish. But it's still happening in the background
I think
to the entire industry.
you know
And
what's funny
anecdotally,
about
you'll hear
that
stories
is
all
if
the
you go
time
look at them,
about people being debanked
like
by the
Tesla
JP
could hang
Morgans
out
and larger
here
banks of the world,
because
even as individuals
where
were
is
interacting
Tesla
with the
at?
crypto agent
In the
industry.
grand
So
scheme of
I would say that was one of the
Tesla
most
is
sort of
literally
surprising
right
revelations at the time because
you
it wasn't on
opened
my
up for
radar, and how
earnings.
it played out in
Tesla's
hindsight
here.
has been absolutely
This was your
astounding.
gap down
yeah, let me
day
double
right
tap
here.
on that real quick because I got to jump to at
This
3
was
o'clock.
the
But
afternoon.
one,
That's the
thanks for
gap
having
down.
me.
That's the
Two,
day.
you know,
So
Caitlin's
we're
a
pretty much right
incredible
back
source of
at
of wisdom
earnings.
and insight. You know,
Apple
all through
was
the
also
many
right back
years that
at
we've known
earnings.
and been partners as we're
So
investors
I
with
feel
her.
like they are,
But I think what's really important about that
you know,
point
and this is what also, like, these are
someone
the
tweeted the other
signs
day at
that I
me,
get told each
you know,
and every
oh, the
time.
ETFs
Like,
are approved, so
you know,
then they
each
fight you
quarter we
phase
go
is
through
over.
earnings, and earnings are
No,
better
not
than
even
expected.
close.
What does
It's
the
just
market do? It
started,
goes higher. Then
right?
everybody talks about,
2009
oh,
to
this,
15,
that, the
first
third.
they ignore you.
I think the
Bunch of
long should
nerds
be
and geeks
taken
playing with their
here.
magic internet money. 16 to 21, then they laugh
There's
at you.
no volume to the upside.
Bunch of
Nobody
nerds
wants
and geeks,
this thing.
magic
You gotta
internet
have
money,
some
whatever.
nibblers here. Let's go look.
2022
Let's
to
look and see what some of these
2027.
prices are. Even if we can get like a
That's
few
a long
bucks
time
going into
from
tomorrow
now.
and catch like a little gap
Then
up.
they fight you. The fight hasn't even started. Ms. Warren hasn't even
these
gotten
stocks are right back to their last
paper
earnings price, so
bills
it's telling
through
you,
committee
these
where they're going to try to outlaw self-custody, where they're going to try to make
these companies
it
are being
criminal
traded
to be outside
in accordance
the
to
boomer
earnings,
wrapper
right?
of
Like
ETFs.
Apple was right
So,
back.
the
If I
fight is
take us back, I'm
just
sorry,
beginning.
I have ADHD bad.
Now, the
but
good
if
news,
I go back,
if you're here, if you're listening to this call, we already won.
what happened to Apple?
Now, it's gonna
Where
be
was
painful,
Apple's earnings?
but,
Right there.
But we already won.
Right.
So, thanks
They're
for
right
putting
here.
this on. Thanks
This
for
was the
having
day
a-
of
a
earnings.
amazing lineup. Thanks
Right?
for all
Right
you
there
do.
was
Thanks
pretty
for
much your
launching
earnings for
Hashdex.
Apple.
And thanks for inviting me. And I will talk to you all soon.
Well, you came. Thanks very much, and thanks, Mike.
It started to work its way right back into that area, but now look at that
All right,
pop, man. I should have went
Mark's
fucking
down,
long
but,
Apple
we've
today.
got some more coming.
I
wanna
was
go
that
back
close to
Frank,
going long Apple this morning.
and then maybe we'll come
I
back
wasn't sure if
around
the juice
to,
was
to
worth
Fred
the
on the
squeeze.
same question. We just talked about the halving and its
I don't know
impact
how much it would have
on
paid because I never
Bitcoin
paid
and the math
attention
and
to
all
it.
that sort of stuff.
So
I don't think people talk about it enough. What is the
maybe
impact to
they
your
did
mining
pretty
businesses?
well.
So Frank, why don't
Okay,
you
what
hit
is
it
this?
first?
Because we were looking at the
and then Fred, but
185s
I think
this morning. Let's go
it's
look at them.
meaningful,
Let's look at these
right?
185s.
So I'd love to hear from you guys how you think about it. You're always
Let's see here,
arbitraging energy.
because that was
how do you arbitrage
that
this?
was what I was.
Well, I've been through the last
looking at was
halving,
185 long.
and what happened during that last halving is
Was
you were
it?
mining
No.
Ethereum, and the margins stayed very robust and allowed us to sort of go through it until Bitcoin started to rally, and then we start to improve the efficiencies. I think the biggest thing you're seeing is a run to have more efficient machines, so that you're at 5 cents cost
Let's
of
just look at the
electricity or
190s,
lower,
just-
that you're profitable. But if you have some of these older machines, they're just going to be problematic. And what you'll most likely see is a lot of private miners they sell their coins, they do not reinvest to the degree that the other miners like Fred have done and we've done, is to be able to weather through that halving. So Bitcoin's not $60,000.
All right, so these opened up at 9 cents.
A lot of the
Holy
privates will leave. The
So that's a
difficulty will
500%
probably
return.
contract.
Even
and
just
then
from
I think
here
you'll
to the
see
morning.
Bitcoin
I mean,
trade up
from this
higher.
from 8 cents, 9 cents from the bell to
Fred, let's go to
35.
you
That's
with the same question, any
350%.
take you have on it, and then I see Chris from Hashdex wants to chime in.
So they paid like a mother sucker.
So we're very focused.
God damn.
Our model historically was very much asset
I didn't
light,
think
where
that.
it
I
was all
don't think
about
I would have
growing and
bought that
expanding
cheap
as
of
quickly as
contracts
possible,
though. I
because
don't
in an
think I could
environment where
allow
the price
myself
of
to.
Bitcoin is going up, the difference between
I remember
5 cent all in hosting
I think we
plus
looked at
power
next
and
week's
6.5 cent hosting and power
190s for
doesn't
next
really have a
week.
huge impact if the price
That's
of
what it
Bitcoin is
was. We were
appreciating
looking at
rapidly.
next week 190s.
In a market
That's what it
post halving,
was.
it does have an impact, and so today our model.
That's what it was.
With the
I want to see what they
closing
did.
of the acquisition that we just did, we're now 45%
But man,
owned
those
and
weeklies
operated,
kicked
and
ass. That's for
55%
sure.
kind of third-party
Just got to know how to
hosted.
trade them.
And as we've said publicly, we're going to continue to be a consolidator. We
Sorry,
think
guys.
that
I'm
the
trying to get
halving,
back to Tesla. I'm trying to get with the
anybody
regularly
who
scheduled program. I
has
want to
machines
see what
that
happened with
are
these today. Because I was that
less
close to
efficient
getting
than 30 joules a terahash and have
They did
power
okay.
prices
So you guys
north
see the
of
difference here?
3.5,
Yes,
4
it's
cents
more
are going to have to
time.
shut off. We're going to be
All right,
under a lot of
but what
duress.
you're not seeing, like,
One of the
you're,
reasons
it's
we have a
easy
lot
to
of
say,
cash and
like,
Bitcoin on our balance
those went
sheet
from
right now,
9
is we
cents
intend to
to
consolidate
5
the
to
best
9 cents to 50 cents, right?
opportunities
That's
for power.
$100 to 500, 1,000 into
We have
5,000.
historically always been very early on the
just to keep it
technology
simple,
curve.
right?
We were one of the first people to deploy XPs when they first came out.
Plus your
That's a
$100
70,000 unit
too
order
on top of it.
back in
So,
2021 for those machines, which are now fully deployed.
so
Our
these
fleet's
went from
overall efficiency
70
is at about
cents
24 joules a terahash
to
today.
$1.70,
We're in the process of deploying
7.14.
new
That's 100 and
generation
some
machines machines from
But
a
here's the
variety of
thing:
vendors.
there's a difference
We also
between
invested
getting
and helped
hundreds of,
co-found
you know,
Auradine, which is the only
100 to
U.S.
200%
designer of
on something
Bitcoin
that is
mining
more
ASICs.
expensive than getting
and their
a
3
400%
nanometer
on 9
device that
cents.
will be available later
Right?
this year is a 15 joules per terahash machine.
You
Plus,
know,
it has the
that's like
ability
me saying
to
I would
control on
much
an
rather have
individual
10%
ASIC
of
level in the
100,000
miner
than
to
100%
profitability, meaning you set a
of
profitability
or
target. It takes into
1,000% on
account price of
$100.
Bitcoin, your cost of energy at that
Right?
site,
I would
and
much
global
rather.
hash
I mean,
rate,
the
and will
1,000% on
optimize the
100 is still
overclock
the same
underclock of the
amount,
miner
but
specifically to maximize
you know,
profits.
it's got to go a lot
Those are the
further
types
to
of
get a little
technologies that
bit.
miners are going
So
to have to be
it's the math.
successful going forward
It's the only
in
way
this
I can really
business.
explain it for
And
anybody
I
that's new. I know a
personally
lot of you guys that are already
believe
here
that
already
it's
know
going to
about
take
this
a
stuff.
while post-halving for the
So
price of Bitcoin to start moving. By the end of this year,
you
we'll
know, the
definitely see it
percentage gain is
approaching
smaller, but the
prior
money is
all-time
bigger.
high levels.
All right, you spend a little bit more to
But
make a
I
lot,
think that
right? With
it's really
weeklies,
going to be more in
you know,
2025 that we're going
but
to see the
it's more
run.
risk there. It's not
And
risk. Like on
so
a
if you
day
don't have a lot of
when I
cash and
said in
Bitcoin
that
on your
video
balance sheet so you
yesterday,
can weather the storm,
when I
it's going to be a
said
very
there are
tough
days you're going to
2024.
know
I'd just
when
like
you
to
can
add to
just
that
have a
that the
long or
last
short and
halving
get behind
provides opportunities
institutional
that Fred
order
talked
flow.
about
Apple
in
had news
consolidating,
today,
and that's when we made our 2
and
acquisitions,
it came out of the
and we
gates. This
expanded
was
our
this was
footprint
a
into
prime
Canada.
example of what I
So I
talked
think,
about
as
yesterday,
Fred says, you keep a
of a
strong
stock that
balance
you need
sheet.
to be long for a
There'll
few
be
different
some
reasons.
great
It had
acquisitions to make.
news. It has a beautiful setup here. All right, had a really nice setup where it broke
Chris,
through
you
these
wanted to chime
highs
in?
and held them.
Yeah, I mean,
The highs
it's
are right
interesting
here
that
at
we're
185, right
talking
here,
about the Bitcoin
right
ETFs,
here.
the
Bada bing, bada
halving,
boom.
and all these different
Right
pieces.
there, that
And
previous
I think
high,
we
that
kind of
previous resistance that
talk
it sold
about
from,
the way that
now
the
those sellers are no
generational
longer
shift
there
and the
because it's
generational
higher. They're
investment of
not selling
Bitcoin
it, they're becoming
has occurred,
buyers,
right? And we've compared
right?
it in
Especially if
many
they went
ways,
short
I think quite
and they never
successfully,
took
to
profits down
the
here,
evolution of the
and the
internet.
stock is
And
right
what
back
did
to
the
where they got
internet
short.
look like 15
Now they're
years
selling it at a
on?
loss or a break
And
even, but it's above
just
it. So they
hearing
were
some of the
shorting it
Bitcoin
and
miners
having to
on the
cover as a
call talking
loss.
about the evolution and the improvements in their space. We're seeing that
That was
across
it right
every
there. That was
aspect
this
of
was a
Bitcoin,
beautiful
from the
long.
Lightning Network
You
on down.
recovered the
And so
resistance
I think
level
when we
pre-market. You
talk
turned it into
about
support.
the
You
Bitcoin
look for that
ETFs,
long to the
the
50-day
halving,
moving
that'll
average.
come
Like there
here
was just
in April.
everything
I think
about
it's a question
Apple
of time
today
horizons.
screamed
So,
higher.
when I look at the halving,
So
obviously we see price
just look at that, man,
appreciation
from
after the
yesterday.
halving into
182
2025,
yesterday
as
to
previously mentioned. But also,
188.
with the Bitcoin
That's
ETFs,
crazy.
I was
That's a
chatting with a
huge move for
Chicago-based
Apple.
multi-billion-dollar
I know
institutional
it's only
RIA
up
portfolio
4%,
manager
but
the other day,
damn.
and he basically said we're
182.50.
just starting due
You
diligence
rarely see
on
this thing
Bitcoin
do
ETFs,
$3,
and
let alone
we
$6.
we saw that the products got approved. We're just going to start our
If
6-month due
this thing does
diligence now.
$3 in a
What is
day,
Bitcoin,
you
right?
know, you're making some good
That's
ass
the kind
money,
of time
right? Like
horizon
look
that
at
we're
this.
looking at when regarding these ETFs.
Right? This is a
And
good
so
this
when we
could have
talk
got
about
you on
this
those
year, we
weeklies
talk
like
about
we
price
just went through a
appreciation.
decent
A
amount.
lot of people
And
hoped
it's only
and
went
saw a
$3.
lot
But
of
if you were long from yesterday
movement into these ETFs
at
at a very
182
early
and you're
stage.
catching
A
a
lot of it's seed
189, you probably
investment, of
paid
course,
2 cents
to try
for
and
those
get
190
organic
calls.
inflow.
You probably paid
But
2-3
from
cents,
my
and that
perspective, there is
motherfucker is
a
up at
very
75
very
cents,
long
80
room to
cents.
run in
You're
terms of
getting 2, 4, 6, 8,
accessing
10, 2, 4,
financial
6, 8,
advisors,
10,
doing the
2, 4,
research,
6, 8,
talking to their
10, all
clients,
the way up. You're getting
allocating,
8,000% return.
looking at where in a
4,000%
portfolio
return.
they take a
It's fucking
60-40
crazy.
portfolio analysis and
Really,
put
it would be a
that into
5,000%. You're
Bitcoin.
at 2,
What about
2, 4,
alternatives? What about
5.
cryptocurrency? What about Ethereum? All these questions
Yeah, 4,000.
haven't
I'll go
even
with
been
that. I'll go with
asked
the
yet because the due diligence has just
4,500,000.
started on these products, right?
4,500%
There's a lot of early adopters.
return.
There's RIAs that we talk to,
Just
with
under
ETF Think Tank
5,000%.
at
It's
Hashdex
crazy.
that have been in this space and have wanted to be in this space for a long period of time.
Tesla.
But there's there's a lot of money on the sidelines that, hasn't even been
It's
allocated
3
and won't
o'clock. I'm
be
gonna go.
allocated
I'm gonna
until
go fill
Q3,
my cup up
Q4
with some
into
coffee.
2025.
All right.
That the
Let's
ETF
see if we
hasn't
can
even
continue to
captured
hold
yet,
this
which is,
level.
obviously a
And
very
I'd
bullish
like to see
scenario
if we
for
can
us.
get
Yeah,
back
and
to
Chris, I was
two.
just going to add to that too. There was a
So it was
survey
holding
that
212.
came
Now
out a
it's
few
turning
weeks ago, and I
212
think it
into
was conducted at the
resistance.
end of last year,
And we
that
have
said
VWAP
less
coming
than
in there
40% of
as
financial
resistance
advisors
as well.
expected a Bitcoin ETF this
TSM is
year,
going higher. It's
and
holding.
that really surprised me. I mean, I think the fact that 60+% of financial advisors didn't even think a Bitcoin ETF was going to
Get
happen
a
this
view
year, and I
from
see
the
Eric's
top.
on the call now too, and this was literally around the time where they've been putting out their great analysis and saying a 90% chance. And so it just reminded me of how early in this process we really are. And as
TSM is
exciting
going
and
down.
energizing
Dun,
as it
dun,
was
dun,
for
baby.
ETF issuers like us over the past few weeks.
Fucking blabbering my mouth
This is a
off,
long
and
game, and
there
those of
goes
us that
TSM.
like
Shit.
are my colleagues at Hashtags and others that have been investing in the space for a long time, I think really appreciate that. It's just a matter of now doing the education, doing the work to understand what people are actually getting exposure to by investing in.
Let's try to finish the
Bitcoin.
day off strong.
That's why we're doing this all day today. So we just had 2 more guests join. We got Eric Balchunas from Bloomberg, who's been probably sick of talking about this at this point. And we brought up another miner.
Here is
Adam
the
Sullivan
problem.
from
So
Core
Bloomberg right now is
Scientific,
talking about
which
Taiwan
is making some news
Semiconductors.
at the
Here's the
moment.
problem. They're saying Taiwan Semiconductor
I do want to
says
thank everyone
we
for
don't
being
see
here.
a
I'm Mike
problem in the
Menudo,
future.
founder
We
of
think that's the
Tidal.
bottom of
We
things.
help people
We're
launch and
good to
grow
go.
ETFs like we've done with
So what do you
Hashdex
think is
and
going
the
to
DeFi
happen
fund.
in the next 2 to 3 quarters
So why don't we
when
start
they
by
come out and
getting
say
Eric
everything is
introduced?
gravy,
Eric, you want
and
to
then
introduce
they have to
yourself
report,
and just
and
any
they
big
come
thoughts
into
as the
a few
dust starts
quarters
to clear
where
here?
they struggle. What do you think is going to happen to this stock? Write it down, remember it for the next few earnings. If things start to tighten up,
You're the
all right,
last
they're
mile.
pricing in that everything is okay. Taiwan Semiconductor starts reporting that, like everything is okay, and starts raising guidance, and they don't meet those guidances,
3:30.
and issues start to, if they're not making estimates, if they're not making
post-traumatic stress disorder, I gotta be honest.
what they're projecting,
Well, now I'm learning about
it's going
S3s,
down.
which has to do
going
what you and
down.
I were chatting about, but we'll
All right?
deal with that
That's
later.
why it's better as a
Yeah,
CEO of a company to use this time to say, there's uncertainty where our expectations are low.
Covering the flows
Okay,
and the volume
that way
and the race
you get
is
your
just
share
such
price
my wheelhouse.
down.
Like, this is natural
You
fun.
offer,
It's why
you
I
do
like
a
ETFs.
buyback. Okay, you
covering
use the
the
company's money to
approval
buy the
and
company's
the
stock
odds
back.
and
That way,
that
the
always
company is
outside
making money
chance
on
that
the
there could be
equity
some
of the
last-minute,
company and on the
denial.
business side.
All that was
And you report
very, like,
decent
emotional
earnings when you
roller
didn't
coaster.
expect to.
Really hadn't
To the
never
moon
really
it
experienced
goes.
anything quite like that
All
in
right,
my
it's going to
career.
soar.
Now
For Taiwan
is, in my opinion, the fun
Semiconductors to
part.
come
And
out and
also,
say that,
this is
they
good for
they
investors.
obviously
We
have a
put forward
pipeline
this
of
all the time
orders. Okay,
because we think
there
ETFs
is this
do a
thing
great
called
job of
accounting
utilizing all of
that
the
they have.
greatest
All
market
right,
makers
there
and
are these things
competition,
called books that they
and
have.
arbitrage
So
to
there
give
is
investors
order
a really
flow
good deal
that
in a convenient
says
way.
that they're
So
going to be
this
busy,
is
but that
where
doesn't
it gets
mean
fun to me.
that
And
people
so
can't
we've been
cancel. That
looking
doesn't
forward to
mean
the race.
that
There's been a lot
something
of,
doesn't happen with China, or
I think, a
something
lot of
doesn't happen to where
good
that
news from
demand
there. I think that
from the
not only are
issuers
the
that are
overall numbers
issuing
high,
the
but
demand
if you
from
look through
Taiwan
the
saying, hey, we
issuers,
want
there's
this,
a
we want
lot of
this, that
strong
shit can
middle
change
class
on a
forming.
dime.
It isn't just like,
And I
back
think
in the day,
it's pretty
GLD was the
crazy
first one
that
out,
we're
it gets
going
all
to
the
be
volume,
coming
and
into
anybody else who
this
launches after,
environment where
has to do something crazy
you're
to get
just going to
assets,
say, yeah,
or
everything's
wait like
cool.
3 years.
You need.
There's
If I
already,
was
like,
if I was a
4
CEO,
or 5 of them
listen.
that
I
have
would
a
say,
decent amount
guys,
of assets
there's
after
a
a
lot of
couple days,
uncertainty.
so
We're not
it's a good
sure
sign.
how
I
these
think
next
this is a
few
category that
years,
has a lot of
how
potential.
this next
You've
year is
got
going to
volume
go.
and low fees.
We're going to keep our
You've got a lot
guidance
of big
low.
names in it.
That way,
And obviously, there's a lot
even
of
if the
questions.
stock
We just
gets
did a
hit, you're
Trillions
able to
episode
buy
on
it up at a
questions and
lower
answers,
price.
especially from the
And
crypto
then
world. I
if
think
something
they are really
happens,
trying to get
you
their
don't
hands around
get
like how
suffered
ETF
from it
mechanics
because
work.
it's already
So
priced in.
it's been fun.
Okay.
But like I said, this is a much
And you
more
don't have
fun,
to kill yourself and
less emotional
struggle
and stressful
or
part
get
of the
worried that when
process.
you go to report earnings
So
the next couple
you know,
quarters,
that's sort of where
and
we're
you
at right
know
now,
when
and
you go to
I will say
report
I'm
that it
starting to
ain't what you
diversify
said it was
a
going to
little
be
bit. I gotta
last
cover, do my
last
Vanguard
quarter
primer
or
update
2
today.
quarters
I'm
ago.
gonna look at some
You
other
know,
things.
you know, like things
So
are
we're gonna
going to
start
be
doing
pretty
other
shitty.
ETFs, believe it or not.
So it's
over the
either
next couple months, and
say
just
you're
have
going to
this be,
do
you know,
well,
like a percent,
and you
a
don't
more
do well,
manageable percentage
and
of
then
our,
you just
of
get
our
then
sort of mind
just your
share.
shares get plummeted. You can do it
Don't
that way.
worry,
But the
we'll
thing is,
file
doing
for
it that
something
way is
crazy
it
today or
makes it a
tomorrow.
bit harder for them to trust you
I'm
going
sure.
forward. forward
Yeah.
that
Listen,
when we
I
say
wanna
everything
invite
is
Adam
okay
someone
now,
that's
oh,
also
we're good, we're
introduced
good, we're
himself.
good,
We've been
and
trying
things
to
do
pair
pick
all
up,
these
it's going to
panels
take
with people
time.
with
You're going to have to
different
prove
points of
yourself to the
views and different
market
parts of the
to get that
ecosystem.
upside. So that's
So
why I
Core
think,
is also
you know,
a
using
miner
this
and a
time,
hoster.
while there's a
It's
lot
been
of
really
uncertainty
interesting to
out there
hear
with rates being where
like
they
a
are,
whole community that's looking to
presidencies,
get
and just
exposure
the
to it, and then a
unknown,
whole community
it's
that's
good
actually
to
doing the
use
work
that to
behind the
your
scenes of
advantage.
actually
All
mining
right.
Bitcoin
And as a
and
CEO, I think you
confirming
should. I
things.
think you
So,
should.
Adam,
And
you
they
want to
have
introduce
been.
yourself?
Yeah,
A
sure.
lot of them
I
have
appreciate
been.
having me on. You know, a
They've been
lot of great
taking
people
this
in the
time
spaces, so I
to
appreciate
do
the invite.
share
But yeah, I mean, you
buybacks
touched on
and,
that first
you
point,
know,
which
not
is there's a
guide
lot
too
of people
high
working
and,
in
you know,
Bitcoin
kind of
mining.
just
You know,
stay with this.
probably
You know,
hundreds of
the
thousands of people
consumers
across the
still
world, which is you know, the
consuming,
amount of
but
time, the
you know,
amount
we
of money
don't
that's
know what's
spent on
ahead.
securing the
predict
network.
that far.
It's a massive industry. But at Core Scientific, we're one of the largest and most efficient Bitcoin miners at scale in North America. We produced 13,700 Bitcoin in 2023.
All
We're
right,
really
I think
proud of
this is
that
the
stat
time.
more than any
I'm
other
gonna
publicly
try and
traded
take a
Bitcoin mining
short
company.
here on top.
And we have a great
Taiwan
opportunity here
Semi
in the
up
next
here.
week.
I'm gonna
Our
watch it at this
relisting
level
on
at
the Nasdaq comes
111.48.
alongside of
I
all
wanna go get
these
my coffee, but
ETFs,
I don't
which
want to miss this. If it
obviously
does
is a
turn
big
back
tailwind for the
around.
industry overall. So thanks for having me on.
Hey, Adam, before
Yeah.
we go a little bit further, give your
Hold on,
background
it's
because
going to hit that
in
trade
your
line.
case, most people don't know you, and you bring capital markets background as well as operating background as well as advisory background. It's I think it's an interesting perspective.
Where's the spy?
Yeah,
So
sure.
look at that bull flag the
I
spy's
came into
putting
this
in,
industry
guys.
in
Wow.
2016.
Look at the volume that
in
came in
mining,
at the
in
end of
fact.
the day after that deal got
And
done
I
by
joined
the
an investment
government.
bank back in 2017
I
to
told you
launch
guys.
the first crypto-focused investment banking team on Wall
So
Street. We did a lot of work
I don't
with
know what to do now.
Bitcoin miners in particular.
I
So
think we have
we worked on
two ways
almost
we could
every
play
M&A deal
things.
that happened in this
Possibly
industry over a
take
number of years.
a
Worked on a lot of
long
capital
on the
raises in
spy
this
up to
industry. And
477
had the opportunity to join
is an
Core
option.
Scientific back in
Right,
April of
and
last year.
maybe that also helps
So at a kind of an inflection
TSM
point
put in
for
a new
both the
high
company and the
and get up
industry
to that
overall.
112 gap.
Take a
Or
very specific view on treasury management, capital management,
or
and really just focused on
or
the
the
long-term view of
S&Ps are
Bitcoin
going to
mining,
pull
which I think
back
is something that is lacking in this industry
to
today. Which is
470, 450.
how would you approach this?
I should have
this
taken.
business if you were thinking about it on a 10-year basis.
I say it right
not a 1-year
now,
or
but
2-year basis.
I'm thinking to myself, I should have
Very
taken
cool.
that long yesterday at the end of the day, but I didn't want to
You know what?
overdo
I
it.
got
I
one
had
more
we
for
had
you,
three
Adam,
green
before we
trades
go back to Eric.
just left and
Yeah.
right, and I'm like,
You know,
starting to get
I
a
know
little
Frank's
bit
point of view because I've known him for a long
piggish,
time, and I know
right?
he got to crypto from the
Getting a
ETF
little,
space.
getting
You're
a little
getting
greedy.
to.
Greed's good,
I'm just
but to
curious,
what
as a
extent,
miner, what do
right?
you guys
It's
all
like
think about all
you
this
picked up
craze around
you picked
the
your bag up
ETFs?
for the day. Like
Is
You
it
know,
just
do you
hey,
really
anything
need
that makes
to?
the number go up is good, or
Leave the bag for someone else that doesn't
there's
have one.
there's 2 points of view on this. The ETFs have knock-on effects, which we don't recognize the long-term benefits. Everyone wants to talk about price.
All right, I'm gonna go
but
get a
there
coffee.
are
We're
additional
gonna
benefits
see
to having
what
these
this
ETFs.
does. Look at
We're
that
now
5-minute flag, guys.
now large institutions
Look
are
at that.
generating
That's
revenue
beautiful.
off of these ETFs.
Computers are doing
So
a good
people
job
like
on these
BlackRock
patterns today,
are
aren't they?
generating tens of
Look at
millions
that.
of
That's a
dollars in
beaut.
fees once
You
they're
can't
able
tell
to
me
grow
that
their
ain't a beaut.
ETF.
Look at that.
And they'll be able
God
to
damn.
reallocate that capital into the industry.
Look at
They're going to
that.
be lobbying in
That's
the
a beaut.
industry. There's a lot of long-term benefits
Those algorithms
because they're
are
going to
doing a
want to
good job
protect the
today.
network and grow the network
Making some
because
nice
it'll
clean
help grow their
patterns.
revenue base. So those are long-term benefits from the ETFs that I think are getting lost in this price discussion. And the other part is, we're in an election year, right? And we still have inflation running relatively hot, but the
I like that
monetary
better.
policy choices
I
that
like
we'll
that
see before the
Let's see what
election and
happens.
how
See
they
if
may
you bust out of
change,
this.
we could
There
see
she
a really
goes.
interesting opportunity for Bitcoin here if we
There
start
she
seeing
goes.
inflation start knocking back up in a pretty serious way. So I think all of these things are tailwinds for Bitcoin overall, and
still
I
has
think
to go to the
they're
house.
tailwinds as well for the mining space.
All right, so you gave me the perfect way to go back to Eric, which is these.
What's everybody
these
looking
fees.
at? What are you guys watching?
Because that became the next story, right? So it became these are all
Is there
launching.
anything you guys have on your list that you think
Hashtags
is
and title. We had a futures one
setting
already
up for an
launched.
end of the day
We'll be
trade?
settling in spot Bitcoin very
Or
soon.
Not really.
But the story then became fees, right? So is BlackRock really going to make any money? Is anybody really going to make any money except for investors here? Because they just went from paying 300 to 400 basis points to go in
I'm gonna
and
go
then
get
300 to
some
400
coffee.
basis
I'll be
points to
right
go out on Coinbase to 20 to 0 bips to hold it forever, and maybe a zero commission at SoFi or something to get in. What do you think, Eric? Like, we know what our plan is to differentiate ourselves. I'm curious how you think any of these others are differentiating themselves.
Yeah, no doubt. I thought it would take us 2 years to get to the 20, 30 basis point range. I thought we'd be 50, 60 to launch it because I thought there'd be an unspoken.
All right, again, 477 is the
that,
target.
hey,
if
this is a
anybody is
Vanguard
out there that
free
wants to
zone.
take a long
Let's
here,
not go too crazy.
and is
But
okay with the
BlackRock
risk,
kinda
your
pulled
stop
Vanguard.
loss, where would
They
it
came
be?
in at
Probably be
30,
right underneath that pennant.
and that really
You know,
That
that's up
changed
to you to
everything.
decide where it's at.
Because with BlackRock's big name
Where
distribution,
is that
you
stop
kind of
loss?
have to
So
deal with
you
their
know, you're like,
fee
oh
more than
shit, I'm
anybody
wrong.
else's.
We're not going to
Just a fact.
477.
Because an
But I
advisor
think
could
we
always
could.
be like, well, I
And
can
I
get
think
the
we
BlackRock
are.
one for XYZ.
This is
You
a
can't
really
be too
nice
far
test of
away from that, I
yesterday's
think.
high. You
So
break
then
out,
they
pull
went
back
to
to it,
25
bang.
with a
That's a
rebate or a
beautiful
waiver
fucking
for the
trade,
first
man.
5 billion.
I need to
It
start
was amazing.
staying
It was like 2
focused.
years worth of fee war stuffed into
I
about
did
like
get a little
2 days.
tired, but
And we got
you know,
to
with
that
talking
point. I
and doing
think
the stream,
everybody who is not
so
in the ETF
I
world
need
was
to
just
get a
blown
little bit
away
better.
by
So
the
that's $1 long
savagery
there
of,
at
of
your
all of it.
disposal.
But
Go ahead and
I'm
look at the
used to
cues
it.
to
Again,
see
it
if you can
was
front
pretty
run the move.
condensed. But again,
Right?
like
See
this
what's
competition
leading.
is what makes ETFs
See if you can
a
get some
tough
help
industry,
here.
but
What's
so
the Dow
awesome for
doing?
investors and why
Look at
they
the Dow,
are repeat
right?
customers and
The
have
Dow
such
was
trust.
leading the whole time.
So I think the Bitcoin
All
ETF
right, we said
and
that
Bitcoin
earlier
in
that I was
general
going to
probably
take a
benefit them a lot from
along
that
on the Dow.
legitimization
I
because
never did. I fucking
even the most
forgot.
conservative investors and
Excuse
you know
my
wealthy
language.
baby boomers who are older, they may not know a lot about Bitcoin, but they definitely trust the ETF. They trust some of these brands that are involved. And so I
I'll be
think
right back.
Bitcoin's actually going to be able to get a little of that trust. On the same side, the fees will be way easier or way lower. And I think that's where I've been on the last couple days of the race. A lot of people are like, well, there's really no new inflows because GBTC is losing flows. And I'm like, this is normal. Like when ETFs are launched, since they came out, they've been stealing money from high cost everything all the time. They've taken money from the derivatives world. They've taken money from mutual funds, even single stock investors. So of course they're going to take money from GBTC. It's much more high cost. They're probably taking money from some Canadian ETFs as we speak. They could be already taking some money from Coinbase accounts, et cetera, et cetera. So you're right. The low fees, the trust, the intraday liquidity, they're already trading at 1 to 2 bips spread. That is a powerful combination, and so they're going to disrupt all kinds of things. So yes, some new money will eventually come in, and it probably is already coming in, but there definitely will be some stealage from other places because of, like you said, the fee war brutality. It makes them so attractive.
I'd like to get Hashtag's point of view on this. Not that we can't comment on the fee right now because obviously I have S1 paperwork to do, but love you guys to chime in.
Yeah, well, I was just going to say, I think this is Jerry from Hashtags, and I think fees. What we've learned from having, and we've had a spot Bitcoin ETF since 2021. Actually is the biggest one in Latin America, and we have funds in Europe as well. And I think one of the things we've learned is that fees are very important, but they're not the only factor, and that people will go. And certainly people are choosing, Fidelity and BlackRock because of the brand, right? Despite the fact that they also have obviously very competitive fees. And so I think, there'll be different factors that different types of investors consider for these products. And I think, earlier today we had Pomp on, and he was talking about kind of the segmentation of the different issuers that are out there. And you have kind of the big players, and then the more crypto native players, and then potentially like a dark horse or someone that will benefit from the environment. And I think we obviously strongly feel that this is a space that thematic asset manager can do well. And we've been investing in crypto assets exclusively since 2018, and it's obviously very exciting to have Fidelity and Bitcoin. And I was actually, part of the team 9 years ago that was working on the Bitcoin incubator at Fidelity. And I know they have commitment to the space. And if a few days ago, if you went to the website of BlackRock, Fidelity, and Franklin Templeton, they all had, Bitcoin up on their homepage, right? When you went to their homepage, and that's not there anymore. And it just kind of reminded me, as exciting as it was to see that on their homepages, that, this is stuff that we live and breathe. And we're optimistic that there will be a good chunk of investors that want to go with that thematic, crypto focused asset manager that's been through FTX, that's been through all these blowups, the bull markets, the insanity, and the ups and downs. And so that's how we're positioning ourselves at the time. And I see, Mike, you've got your hand raised, so go ahead.
Yeah, I want to jump in, and then I know Weisskopf wants to come too, but
you bet.
I love that we're talking about 20 basis points, 30 basis points on an asset class that's up or down, 100 to 200% a year. So it's just so absurd to me. And I know Frank, you looked at this years ago. I'm sure
I'm
you
looking
weren't
at
thinking 20
IWM
bips or
for a
zero
long.
fees.
Because if the rest of the
But
market's going to go, the
here's something that I
IWM
do
should
think
trail
is going to
behind
be a
it.
differentiator over time. And I'm going to go to the three miners and then back up to Eric. Just roundtable. It seems crazy to me that there's basically a single custodian on most of these assets. And it's one that is very astutely arguing in court right now. Multi-custodian makes a lot of sense here, but I'm curious, like us ETF people get custodians from one point of view. You guys are building this
It's getting
asset.
ready to
How do
pull
you
back.
guys
Watch.
custody it? Would you ever put it all at one place? So Frank, I don't disclose where you do it, but like, how do you think about custody as you're creating these Bitcoins?
No, we put into a cold wallet, take them out. And so, but I coming back on the fee structure, it's much easier to audit a digital asset and do all the issues you have to deal with. Like GLD has storage fees, it has so many other costs associated with it. So Bitcoin, seeing where the fees have dropped to, I can understand that just from getting the critical mass number. So I think their break even's got to be lower, unless it's just the auditors are trying to make a game out of it because it's Bitcoin, which they've done to the miners. They say it's so complex, but I think it's robust for the industry. I think the idea of decentralized is the whole idea of Bitcoin is to be decentralized, and what regulatory world and is like it being centralized. They love Canada because 5 banks control 80% of all the wealth. We have 4,000 banks in America, so we have much more decentralized. But it's been shrinking. From 1990, it was 14,000 banks. So I think there's a push to have things centralized. The whole concept of the ecosystem of Bitcoin is decentralized, so I would prefer decentralized.
Okay, Fred, same kind of thing. Is it you guys do cold storage, or do you ever use a traditional custodian?
We do use multiple traditional custodians, one of whom is on the phone actually today with us. So we spread the love. Being one of the largest publicly traded holders of Bitcoin after MicroStrategy, we went through a period where we were self-custodying, and we had, there were some security threats. And we made the decision that, we're going to use third-party custodians so that no matter who puts a gun at what employee in our company, they won't be able to get Bitcoin. And so the risk of somebody doing that will be a lot less. And today we hold over $600 million in Bitcoin in our balance sheet. So it's really important for us that it's held safely and in a trusted third party. Also, as a public company, not just the auditors, but the regulators want to make sure that we're holding Bitcoin in a place that is safe. And we're not, trading to Bitcoin, buying and selling on a daily basis, so we don't need to be able to move it very quickly. God forbid, we don't want to run the risk that somehow our cold storage wallet loses the 37 strips of paper that make up the key. So we've gone to kind of the traditional route, and we think that over time, there definitely will be an institutionalization of the core large players. They'll use institutional counterparties for custody, sales, etc. But for the smaller guys, and self-custody works fine. But at institutional scale, industrial scale, you got to do it. Unfortunately, you got to use people who really know what they're doing and to be able to sleep at night.
Adam, what do you guys do at Core?
Yeah, I mean, without
Mark from Fundstrat's on for anybody that knows who Mark is with Tom Lee. I thought this was over.
It has been a very choppy market, and this directly aligns with a lot of the election year seasonality that we see for the month of January. And honestly, it says the first quarter could end up being very choppy before we start to turn back to new highs. I would mention that the majority of sectors thus far are down over the last 3 weeks. Technology,
What the was he thinking? No, I'm just kidding. That was a message to Becky. Always under both sides of the trades. Always understood both sides of the trade. Not buying AI demons. Okay, whatever. Let's go hear what the nonsense has to say. Let's see. Let's go see what kind of crazy shit we can come up with. No, I do like Mike, though. Mike is very smart. He knows what he's doing.
I do feel like it's been a strange story that, like, basically BlackRock did one way and everybody followed. We chose not to, and there's a lot of reasons that we'll be able to talk about soon. But go ahead, Chris and Dan.
Yeah, I mean,
Chris, go first.
yeah, I was just going to say, I think we've seen through multiple cycles of cryptocurrency that you have to custody in multiple places, and the reason for that is things like FTX, right? Yeah, I was just going to say, I think we've
Frank, I'm gonna mute him.
multiple.
What was?
Yeah. Anyway, I don't know if there was reverb on my side, but
No,
anyway.
I think Frank was picking up a call.
Oh, okay, great.
Yeah, I just muted him.
Yeah, I think, the thing that we've seen in specifically when we launched crypto, ETFs in Latin America and in Europe is if you do not do your due diligence, if you rely on others to do your due diligence around custody, you will pay the price. We've seen multiple competitors that I won't name who they are across multiple regions who got absolutely obliterated by FTX and other, liquidity issued exchanges over the course of 4 or 5 years. That, when we were advising Title on how we wanted to do this product, it was one of those things where we, as Venuto rightly said, was like, why is everybody doing custody with the same provider? And don't get us wrong. I mean, the exchange that everybody's chosen is highly stable and a real.
I want to be like Mark one day. I want to be a CMT, and so Mark actually, for anybody that's on the East Coast or in the like Northeast region, tri-state area, he worked at the Philadelphia Exchange, and now works for Tom Lee Fundstrat. So it's pretty cool. But look, what were we just saying 5 minutes ago, right? There's your bull flag, right? On the spot. There's the IWM. Here's a SPY. This is something that's called arbitrage, right? Find something that's leading, find the leading indicator, and then if it's to the upside, right? Just like the SPY here, right? Well, we already know that we're breaking out. There's the bear flag or bull flag, whatever the hell you want to call it. Sorry, it's a bull flag. The volume's dried up, so sometimes it's a little bit better. I'm just using this as a scenario, like, hey, there's the flag there. All right, here's the IWM. You guys look for these things. All right, and the IWM is just making its flag right now. All right, so these are ways that you can use in the mornings. Whatever's leading, whatever's lagging, and use it as arbitrage. You're trading the IWM or you're trading the Qs off of what the IWM's doing, right? You guys will see me do it. I haven't done it in a while, but they've been like the market has been really in line with each other. There hasn't been a leader or a laggard, right? It's usually like a few minutes off, but the market's been really tight. And I've said that on here a few times that I don't think anybody has noticed or said, because what's happening is like you get this separation and then you'll get that divergence. And then when you get the divergence from different sectors that are what we say rotation, which I had said and mentioned here at like 2 o'clock, that you're getting the rotation, right? Rotation is from, let's just say we're going to take out of names from technology, from like Adobe, Snowflake, right? Like programming services, or CrowdStrike, right? Names like software names. And we're going to go, and you're seeing a rotation into like, from that to like Walmart, Home Depot, Dollar General, right? Disney. Well, just to name a few. Like you'll sense the rotation, like Caterpillar or John Deere, right? So you're going from one extreme, one part of the market to the other, and you're seeing them diverge from each other. That stuff takes time because you'll hear people talk about divergence, but can you spot it when it's happening real time? In due time you should. If you're a person that likes the markets and is into the markets, and you give it time, you will start to notice those things depending on how you go about looking at the markets, right? How you go about looking for your trades. That's how I found it. That's how I sensed it because I was looking for different setups and trades. I was looking at Disney. I was looking at Google. I was looking at semiconductors like AMD, Nvidia. And through that, I was able to sense, going from semiconductors, being bought to now them being pulling back with like Nike going higher. That's not the case, but that was just something I started to sense. I wonder if these names can get a little bounce. So I'm gonna browse the markets and see if we can find something to the end of the day and take it into Friday. It was a good week. All it took was one day. It's a short week. If you guys have questions, just let me know. Throw them in the chat. If you could, give us a like, subscribe if you haven't done so already. If you want to learn how to trade, reach out to me. This information is in the description. All right? Please be careful on who you get your information from. All right? They may sound smart just because they're in the markets or say they've worked on Wall Street or did this and did that. Please, that does not mean shiz. And what is their interest? What do they what are they trying to gain from you? What is their purpose? What is their motive? All right?
One of the interesting things about this industry, the mining industry and the ETF industry, that drew me to look at both in a different light is I came into the ETF industry because of transparency, right? That was like the key thing for me. The amazing part about the miners, and then I'm going to ask Adam and Fred a question, is how transparent their business is in certain ways. At least they're trying, meaning that every month they disclose what they're producing, right? And in the case of Core, every day, literally, I think it's at noon, it used to be, it's disclosed what was produced in the last 24 hours. So my question is for both Adam and Fred is, Adam, are you going to continue that when you list on Nasdaq? And Fred, would you do that for me every day? List how many Bitcoin?
We're a trendsetter, Fred. So you gotta watch out.
Well, I mean, to I'll apologize in advance, Adam, but because we run our own pool, anybody can look at the mempool and see exactly how many
I know
Bitcoin
that.
we're producing
Yeah.
every single minute. It's about as transparent as you can get. And an
It's
SEC
amazing,
attorney
right?
once said to me, you guys almost don't have to do a filing every quarter because everybody already knows what your revenues are and what your costs are pretty much. So.
Yeah, you're
That's
absolutely
good
right.
stuff. Guys, listen, we have to wrap. It's been since 9:45, and it's time to do day job stuff again. I want to thank everybody. I want to thank Hashdex for sponsoring and being our partner, getting this out there. Eric, the miners, Frank, Adam, all the guests that came on today, Guyad for everything he does, Weisskopf for being such a great partner with me on Block and Title, and it's been an epic day. I can't wait to see the numbers. Eric, I think we should do a bingo card of all the crazy things that are coming. I don't think you're done covering Bitcoin ETFs. I think there's way more crazy stories coming. Sorry, I know that upsets your boggleheads. But thank you, everybody, for joining us on this epic journey.
That's a wrap.
That's a wrap.
Thank
Amazing.
you.
Thanks, guys.
Squizzy.
You did it. Thanks, Hashtag.
Number go up.
everybody. Cheers.
Take care.
Right on time.
They just reported that there were some drones shot down over a over a military base in Iraq. $212 was support. Now it's resistance. Gotta try and break above it. Tesla might be done for a little bit now, though. If there was more time in the day, I wish I could short it, man. The fact that I was already short this name and the markets were not moving when I got in Tesla and I cut it sucks, man. That thing went 250%, 150%. Sometimes it is what it is, right? I had the opportunity to get out break even because I did not have confidence in the trade because there wasn't any volume. See, you know what's funny is I didn't look at the 5-minute chart. I thought that I did, though. So, like, what time? I gotta turn this down because it's gonna pick it up and this and that, blah, blah, blah. You can't listen to music in the background. It's gonna pick it up. So 10 o'clock. And you can see here at 10 o'clock, and that's about when we entered it. Like, look how low the volume is compared to, like, a high volume day, like this day, right? Where in a 5-minute candle, you're trading in 5 minutes, just on this share, you're trading 2 to 3.5 million shares in 5 minutes, or exchanging hands. All right, and today at 10 o'clock, all right, we had, holy shit. In 5 minutes, we had 1.1 million. All right, so the days with volume, we had 3 times the amount of shares being traded, exchanging hands, versus the 1.1 million today. And that's why I kind of took this thing off. So it is what it is. Listen, I pretty much break even. This is how I stay profitable, but I missed a trade like this. I should have got in. I had to go back. You know, I kind of think doing the stream and not focusing on the name, because this was a plan, was if we got the opportunity to take that short again, that's what we were going to do, or at least that's what I was going to do, right? If it gave me this 216, that's where I was going to get short. It's what I wanted to do yesterday. It never gave us 216, but I did short. I did make some money. I made a lot more money than I thought I would. It paid a lot better than I thought, but I did take the short here. I did. That's where we got short, but I just did not think we were going to get follow through. You know, it felt like when we made this move, I paid a little more than I should have for it, and it just felt like it wasn't going to do anything. The market was trading sideways. There's no volume. So it was a tough trade. It is what it is. Like, I had to work. Like, I was... it was working me to just get out about break even, right? Let alone profit, right? I had to work for that break even. And I thought about walking away. I thought about walking away for a minute and doing something. But you know how Tesla is. Then we get a pop and I'm down my position, and I did not want that. But I had a good feeling. I'm like, man, I feel like the long is to play as much, or not a long, but I feel the short is to play. As much as I want to go long, the short is to play, and that's what we did. We got short and ended up breaking, pretty much a very small loss today, just under break even. I think I got in around $1, $1.04, $1.05, and I sold it for $1. Right, that's the type of loss that I had today. So it wasn't too bad. And then to find out 2-3 hours later, it's up, instead of a break even, you had your hands on a 150% trade. Now, you know me, you give me 50%, 60%, I'm taking it off as we get there. But so for Tesla, I'm going to be watching 212. We need to get back above 212, see if we can hold it as support and try to make a run higher. I don't know what the markets are going to do tomorrow. I don't know if we're going to have any volume. We have Michigan consent. We have Michigan numbers out tomorrow. Consumer confidence, I think. Consumer expectations. Consumer sentiment. We have consumer sentiment tomorrow, so you have retail sales for whatever that country is. I can't think of it right now, but we have more Fed members coming out tomorrow. Oh, we have a lot. Yeah, Michigan inflation expectations, consumer expectation, home sales, existing home sales, sentiment. All right, Canada's retail sales. So maybe we get a trade in tomorrow morning. Let's take a look real quick. It's pretty much the end of the day now. I'm not taking a trade, even if one presented itself. But let's look for next week. 3-month bill auctions, 6-month bill auctions. You have Bank of Japan's interest rate decision Monday night. Keep that in mind. Okay, that's going to be important. I doubt they do anything, but they could. All right, they could. What else do we have here? It feels like we haven't had much data yet this month. Like, we haven't had anything. S&P Global Composite, monetary policy, interest rate decision. We know they're going to pause. We know it should remain unchanged. Thursday. Durable goods, GDP growth, ECB interest rate decision. PCE, awesome. So core PCE quarter over quarter for Q4. That's not obviously for now. It's for Q4 that already passed. So it'll be revisions. And core PCE for the month of December, personal income, personal spending. So next Friday we have a little bit of data. I feel like, I don't know. It just sucks. Let's see where the VIX is, because I'm getting that. Just looking at that, I feel like the VIX is going to pull back. But we have earnings. All right, so this is the 14 where I wanted to buy the VIX. I'm going to hold off on that because I think we can get one more day of a pullback for the VIX. I don't think there's a rush. I don't think there's a need to be rushed on, you know, getting into the VIX. All right, there's stuff coming out on Bloomberg right now. Okay, so what they're saying right now is they're getting ready to get rid of the bank term lending program. So what they want them to do, like they did in 08, was to come to the discount window. They're making it so that all banks have to go to the discount window and borrow and tap into it. They want everyone to do it. It kind of makes sense because if they do not require them, then people that need it don't go to it because it gives off the signal like something is wrong. So therefore, they're making them all do it or regulating them to all do it, which I still hate. The government should not tell you, yo, you got to go to this window because others around you might be bad. I don't give a fuck about those other banks. I don't give a shit about the other ones. All right, this is when government's getting into business that has nothing to do with the government. All right, so personally, I don't agree with it, okay? Is it a good idea? Is it not a good idea? No, you're trying to hide the fact from the people if there's an issue. And if there is an issue, there needs the people that have money in that bank need to know about it. All right, you leave the bank to handle themselves how they want to handle. You don't tell them, like, whether you have a problem or don't, you need to come see us. No, like, you leave it up to them. If they don't come see you and there's issues and they can't figure it out, then they go south. All right? This government intervention is getting, it's crazy. It's just getting crazy. This is why we are where we are. Because of things like this that just continue to happen over and over, where the government controls until that's why we're here, right? That's why we're here. That's why the most in the United States lifetime that Gen X's or whatever generation from our parents is the least able to own a home. All right, there's a reason for that. So it's because the government continues to do what they've been doing since the 90s and the 2000s, and we're going to start seeing repercussions of it. Right? Jobs can't pay enough, right? Because asset prices are just inflating to where people can't afford them, the majority of people, right? And if they do afford it, at what extreme do they have to go to? And then when things go a bit south and people start losing their jobs, you know, things happen, right? So they continue to do things like this. Like, in my opinion, if there's issues, right? If they can't hire somebody that knows how to control risk and run the books the way they should be ran, right? If they can't do that, then that's on them. If they want to just hire because of your color, race, and gender, and not about whether or not you can do the job, this is when the government has to come in and say, I need all you guys to come see us at the discount window. They shouldn't have to do that, right? Because the bank should be able to hire people or have, even just having, an outline of how things should be done. The tricky thing with that is that they tried it in the past. This is the whole issue with the banking system, because Powell told them all, about roughly where rates were, and then COVID happened. So the banks had already pre-planned, didn't plan on COVID, didn't plan on rates going to zero, did not plan on all trillions of money that they had to accept, right? And things got a little crazy, but that's why a few of them are down. And because they also, at the end of the day, were ran by people that didn't know what the fuck they were doing. Because they were gay or black or white or a girl or boy. Like, because of not the reason why they should have that job in the first place. Right? So now you got to go to the discount window. It's funny. Just like Joe, and like, I get the credit card things, but at the same token, you say you want competition, but when you tell these creditors, Discover Card, Amex, all that fun stuff, what they can and cannot charge, how long they can do it for, this and that, you're not making way for competition. You're stifling competition at that point, because everybody's following the same rules, and everybody's going to max it out. So there's no margin. There's a very small margin of competition there for the consumer to choose from. If you think that they're overboard, well, then maybe another company can come in and say, all right, this is what we're going to do, and we are half as less as the other ones. You stifled that, right? I know I got on a little tangent there, but it's crazy. Like, who is the government to tell any company that is owned by an individual how they're going to run it? Just because others might not be doing well, and we don't want them to know about it. So we need you all to come here. Johnny might have a drug problem, so we need you all to see the counselor because one person has a drug problem. But because we don't want anybody to know he has a drug problem, or he has issues at home, he was beaten, or he was whatever. We want you all to come in so little Johnny doesn't get made fun of. Like, that's what I'm trying to compare it to. Like, and even telling Johnny that he has to go do something, right? That Johnny has to go see the counselor. Like, just saying that he has to go do that is not the government's job. Right, the government's job is to keep everybody safe and have things run in orderly flow and not go into shit like that. Because that takes money. Right? That's your taxes being spent on stupid shit. Right? Instead of worrying about the border, they're worried about the banks going to the discount window. Because little Johnny might have a drug problem, they don't want him to know about it. They don't want everybody to know about it. They don't want to single him out. So you all got to go. And we had dinner on your dime. We had we got paid, to write these bills. We had to pay however many lawyers to write the shit. Like, come on. Do you know what I mean? Like, it's more than just the sole purpose of stuff like that. It's the fact that, there's just like they do the stupidest shit that doesn't make a difference. Instead of saying let's get together, instead of worrying about having these banks go to a discount window, let's talk about all these homeless people. What are we going to do there? What are we going to do to help stifle some of this, these younger people not owning equity, not owning anything? How are they going to retire? Let's worry about the, the Social Security. Nope. We want to get together and worry about the banks going to the bank window. That was the point that I was trying to get to. Well, it's the most stupidest shit. But you're working hard, and it's funny to me. Isn't it funny? Am I the only one that thinks that this is hilarious when you have all these people come on and they say, "Oh, Joe, Joe's doing this, Joe's doing that." You know damn well he ain't doing shit. You know he don't even know where he is half the time. What you mean he's doing this and he's doing that? No, it's everyone else doing what they want to do. And he's just there to say, "Yeah, just give me the paper and I'll sign it." It's hilarious. It's hilarious. You know damn well he ain't making no decisions. All right, S&P's gap filled. They have officially filled the gap. So there is your 477. What a run. We did this yesterday. We just ran right up into the bell. Keep an eye on that. I mean, we only have one more day left. But damn, look at that. 471 to 476. 478. I should have got that long. I had a feeling we were going there. So when I was looking at it, right, it doesn't seem that much on a 15-minute chart. But we pointed this out earlier that we pulled back into this double top from yesterday's double top high, and we just rallied right into the bell. Should have took that long. I didn't think it would be that much though. I discounted the 3 points, and that's my fault. Here go. Wait, is one of these behind because no, it's not. All right, it's 3:53. I'm going to be getting up out of here. You guys have a great night. Maybe I'll put out a watch list. I'm not sure if I will or not. If I do, I'll just maybe I'll just throw out some trade ideas. So you guys have a great day. I appreciate every single one of you guys that liked, subscribed, that joined us. Tomorrow's another day. If you had a bad day, go back over it, turn that bad into good, and put in the work to fix it, okay? It's important. Or you're just going to fail at it. You're just going to be like everybody else who just consistently loses money. The thing is, and remember this, when you're losing money, think about all the times you lost money. How many times what that means is you just handed money to someone else, whether it was me, another trader, a trader at Goldman Sachs, JP Morgan, right? Bank of America. Who did you give that to? Well, you need to be them. All right, and they work 12-hour days. All right, they are in front of their monitors about 12 to 14 hours a day, finding different pockets of opportunity. So, figure out what you're doing wrong. If you're new and you're just finding this channel, ask questions, right? If you would like to work with us, all the information is in the description. Again, thank you guys for hitting that like button, subscribing. Thank you guys for joining us. See what we can't get into tomorrow. You guys have a great night. See y'all later on.